Well, good morning out there. So I've got, I have to let you guys know that this morning I said something in Discord, but I have some interviews coming up on the show with some people that you guys follow out there on Twitter. I'm not going to say their names, but you know them, and it's going to take me some time this morning to do some pre-interviewing with these people, make sure that they're comfortable. These interviews are coming up this upcoming week and next week. They're big ones. These are like some. One of the guys has refused all interviews the last 10 years. No one's had him on, and everyone's asked him to be on. So I got to take care of that. And then I've got something special coming out for pro traders on Discord that I have to launch this morning. So I'll be here in the office. If anything crazy happens, anything outside of expectations, I'll be here to jump on stream, or if it looks like we're going to roll or we're going to bounce or anything like that, I'll be here with you. As soon as I'm done with this stuff, I'll get back on stream with you and join you for the rest of the stream today. I apologize I have to do this morning, but I'm falling behind and it's not getting done, so I gotta do it. So join me in the stream this morning. Hang out in the chat. I'll have some Squawk on, and I'll also have some CNBC on for you. If anything crazy happens, and I got a bunch of charts going for you down below for the day, and I also added one special one this morning. I added what did I do with it? Did I delete it? I added BTSG, and it's already squeezing right now. I posted it last night on Twitter, and that came from Winky. Right now, it's just ripping faces off right now. So I'll leave that chart up for you as well this morning. GCT's up this morning as well. And I also brought up the yield curve, Dixie, and I don't have USD JPY up for you, but normally that pair trade is positively correlated with the market. Because of where the dollar is and the yen is, it's not. So it's the inverse right now, if you don't know that, for the market. So you want to see it going down, and it is this morning. So I'll keep that stuff up for you as well, and I'll be rejoining you here shortly. All right, here we go. I have two things important for you to see here. In the brief last night, two important things. I wanted to see this tick right here. That's an exact tick. We got it this morning. It was one tick higher than the previous low, which was good to see. And then we have a potential, to come down really quick and then hit higher. This is more a function of dealers, so just be aware of that as well. That could happen as well. Now, the alternate path, as we tell you guys inside of the market briefs, is right here, and then the move higher. You'd rejoin that path to the upside. If anything unexpected happens, though, I will let you know. I did share with you yesterday that there's two big things happening here. You've got the flattening of the hourly trigger, and you likely have a cross coming up, or a good chance of a cross coming up with the half-hour trigger to propel price to the upside. Now, as of right now, this is only a pullback. If this takes place, if this actually happens where we go higher, do not be like, if you're a bull, don't be sucking each other off and being like, woo, correction over, any of that kind of stuff, because it's not over. It's not over at this point, okay? So just be, if you're a bear out there too, your place to be defending on pullbacks, just like bulls on an up move, is right up here, right? This is where you step in to roll the market down. Now, even if the correction is over, now it's a very small chance that it is over. I got to warn you of that. The correction is likely not over, but even if it is over, regardless whether it is or isn't, our first trip up here usually, like 95% of the time, gets sent to the downside. So be conscious of that as well today, that there is a trap here for bulls. Don't say I didn't warn you, okay? Don't be like, hey, Cap's all bulled up and blah, blah, blah. Or if you're not a supporter or higher, you probably don't know my thesis on all of this stuff. So if you have access to the triggers, You can go back in time and just look at examples of it. Every once in a while, we go up and we don't come back down, but it's very rare. It's like 1 out of 20 times. So just be conscious of it. It's not that we can't go up and stay up there and corrections all over. Just be conscious of it, that it may not be over. On the flip side of all of this right here, right? So the flip side of this bullish thesis here for this morning would be if you were a seller or a bear and you're like, you know what? Fuck you, Captain. Or maybe you're a market participant and you don't care what Jerome is trying to do with quelling the market, and you're going to front run this bad boy down to the depths of hell, blah, 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 all that kind of stuff. There is a chance, sellers want to get underneath this 5,000, right, and start making new lows either this morning or on that rejection above, because this would be this would signal the next leg of this correction, right? So be conscious of whatever that action is that happens below 5,000. Remember what I'm drawing this to, right? It's important that you understand why I'm drawing it like this. It's not good enough for price to blast down to like 495 and then come right straight back up. Does that make sense? There's a distinct difference behind breaching 5,000 or tagging 495.0. That's not good enough. You have to get down there, reject, and create a level of resistance for the bear thesis on correction to continue down to the weekly trigger. And I will warn you as a bull of something. If price gets underneath that 495 and that 5,000 on SPX, and we begin to go down towards that weekly trigger is weak as fuck. Specifically right now. It won't be over time if we consolidate sideways and stuff. Weekly trigger velocity will go down and then rise back up again, and it'll become more stable. But the weekly trigger down below is not stable at all. We could easily blast straight down to the monthly trigger. It looks to me at this point like the correction may still be on to some extent. But saying that, there was definitely a front running of a rate cut trade that's taking place behind the scenes with much larger participants setting that eventual rate cut. And yesterday, for sure, in the early morning, ECB came out and they were like, hey, we're ready to cut. Let's fucking party. And you got bulls out there going, woo, which they shouldn't be. In reality, there are much larger market participants that are like, oh, really? You're going to cut? Well, I'm going to set the sell trigger here, and we're going to sell some real size. You could see it in bonds. You could see it in the USD, JPY. You can see it in Dixie. You can see it everywhere. The setup is just primed up, and Jerome's trying to quell that. I know that it was bizarre yesterday because Financial Juice had red banners like doom, 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 and I'm like, no. That discussion yesterday was intended to tell the market we ain't cutting shit. And if that's the case, they cannot roll this market down. They won't roll this market down. Now they'll set it up every time they think we're going to cut. And the other thing here is ECB is not cutting before the the Federal Reserve. Canada said it yesterday inside of the round table that they had. We wait for you. What are you going to do? ECB then corrected their statements yesterday and this morning. The same thing. More corrective tone from the ECB saying, well, maybe we're not ready. And when you're listening to these countries that are aligned with the United States and the U.S. dollar, you can see it. It's clear as day. So what they'll do now is these banks will pull back, likely, from this roll down. You might still get like normal pullbacks, normal corrections, but the setup for a crash, guaranteed, is pulled back. Guaranteed. It's being reined in this morning. So be conscious of that. And also, in Bull's favor, there was massive call buying the last couple days, 2-3 days. big size call buying. That was a hedge likely towards this not happening. So I want you to be aware of that. So those are that's the risk, or I guess for bears, I told you what you need. You're likely going to get at least a pullback. You want to be trying to sell if you're like still bearish and like, Captain, I don't agree with you at all. You're wrong across the board. You should be looking to sell the daily trigger on a pullback. If we can't get to the pullback and we just start selling down below 5,495.0 and we start rejecting, you have a long way down to go. I want you to, perspective-wise, if you're a seller, I want you to have some like scale out from a 1-minute chart. Get on an hour chart, get on a half-hour chart, whatever you need to do, and just realize that if we are going to crash or correct in a major way, don't be making your decisions on that on a 1-minute time frame. Be looking for any test of the hourly trigger, pull back to the daily trigger, or some blood down below 4,950, 5,000, and a rejection there. You have plenty of time if you're a seller. Be tactful. I tell this to bulls all the time, and they don't listen. So please. And right now, bears are still in control. There's no other way to say it. If you're a bull, you have to wait until price gets above the daily trigger and the hourly trigger gets above the daily trigger. And you have a successful back test and a new high for you to be out there shaking your arms like a Wookiee going, woo, and we're back in charge now. You really do. You really, really, really do. It's important when these things are going on that you are very tactful in what you're doing. You will lose your ass. Bulls can lose their dude. I can't tell you. You can go on FinTwit. There's a guy that I like on FinTwit. I think his name is Justin or something. He's like a famous. He does like the FinTwit conference. I forget his name exactly right now. His name's it's not Justin. I forget it's Justin or something like that. But that guy right there, right? Him and I had a conversation. Let me see if I can find his name again because I like this guy a lot. And I was shit posting one night and I dragged him into a shit post and I shouldn't have. And I was wrong. I ended up having a DM conversation with him and I apologized to him and I was like, hey man, I'm so sorry that I was just watching all this shit come across my feed and I was like, pump and dumper, and this guy's not a pump and dumper in any way, shape, or form. So I'm going to find his name right now, but you want to find someone that'll answer this stuff for you. He's a great fucking trader. And him and I were having a conversation about giving away or giving back the money that you make when you're making bank on a run. So if you're making bank on a bull run, if you're making bank on a correction, it's so easy to get you like, I'm a rock star. I'm a rock star right now. And then you end up giving back all this money when you look back and say, if I was just patient, I would get my trade. And not only that, if I was just patient, I would get my trade. But I didn't pull it out of the market. Like all these big mistakes by great traders, right? You make money on the run that you're going in. Hey, I'm a seller or I'm a buyer. Or even the people out there, they're like, I'm stone cold. I can sell and buy. Whatever. I don't care what you are. But what I do know is that on any of these runs that you take, it's so easy not to remove your winnings from the market and invest it in something safer. And it's also highly dangerous that you get conceit and you think, I'm a pro trader. I'm the baddest motherfucker out there. And you start giving it back. And before you know it, you're making 40 grand a year, 100 grand a year, something like that. You know, guys aren't here to make 100 grand a year. You guys are here to make $1 million. I'm not joking around. That's what you are here to make. You got to pay fees. You got to pay for your losses. You got to fucking pay to stay when you do blow some shit up. You got to fucking pay, taxes, right? You got all kinds of stuff just to be back to where you're like, hey, I got money in a bank. I got money to invest. I got money to sell. I got all these other bills and all this other taxes and all this other shit. You got to make a lot of money to stay in this market, and you need to build yourself up there at some point. So just be patient. Learn that disciplined behavior and time, especially this moment right now. So if you're a bear, you want to be seeing stuff like this so that you can get set up for the big move down, right? Or you're waiting for this because you can see it right here with the hourly trigger, right? So if bounces goes back up, you're Johnny on the spot up here, ready to sell this bad boy down here and down lower, okay? So you're tactful. That's the best way I can say it. All right, so that's all I've got for you. I'll be back with you guys later on this morning. I will see you guys in just a bit. Yeah, also, if you are a pro trader, um, a mentor, moderator, administrator, VIP, any of those things, you want to check the @everyone Discord message that I left in the Discord today. If you are not in the Discord, but you are a pro trader, you still somehow want to get inside the Discord so that you can read that message. I'm not going to leave it public, but there was one for you that you do want to read from this morning.
CNBC.
Watch the airlines today. Wow, near 12% pop in UAL as they raise their guidance even as they cut their Q1 aircraft delivery forecast. Also helping some shares of American, both United and American, the number 1 and 2 S&P gainers at the moment as we're back to 50.67. Don't go anywhere.
Okay, we're looking at small to medium-sized banks. We have First Horizon, which is a great bank. Brian Jordan's going to be on, and I think he can. This is 4% yielder. It was once capable of, I thought, going out at $25 because there was a bid from a Canadian bank. It did not go through. It was blocked, and he's just a straight shooter. He'll tell us how the Southeast is doing. We need to know. I think we're all looking for stuff that's going down so that the Fed has an easier job. It's not the president. He's not helping the situation.
Well, we're just back. We're just glad we got you back because earnings season without you is tough.
Oh, thank you. I'm glad to be back. And I know, David, you're glad to see me.
Excuse me? Sorry. So happy. Are you kidding?
Thanks, mate.
I know. I'm so happy you had fun with your mates.
Yeah, well, I was with a lot of mates.
Yeah. Just trying to make Carl and I jealous. Got other mates.
Oh, there you go. See, that's what it's like to be living the dream, David.
It's right here at the desk. That's what that is.
You look exhausted.
Oh! Yeah. It's just I have to do the triathlon, and he says, "Oh, so."
Mad Money, 6 p.m. Eastern Time. Back in a moment. Dow's up 188.
Just to know, I'm going to update your Gamma stuff for you right now. Just to note, the Gamma situation, the upside is improving slightly. Gamma flip is now lower than it was before, so take note of that. Hold on here, I'm getting all my cords are all janked up. Just to note that your Gamma flip came down now. Oh, hold on here. Pause that for a minute. Volatility is now lower. There. Market begins to become a little bit more supportive at 51.75-ish. This is still your support right here. I'll leave that for you so you can see it. I know we got VIXpiration. VIX 9-day had a nice touch above. Here's your VIX 9-day. It's selling right now. The VIX should be supportive of the market. We got our tag above here.
The heart.
Good Wednesday morning. Welcome to another hour of Squawk on the Street. I'm Sarah.
Weekly trigger rolling down a little bit. That's good to see.
Always from post 9 of the New York Stock Exchange. Take a look at stocks. We're in rebound mode today, up 1/3% on the S&P, but it's broad. Every sector higher except for real estate right now, who's leading material.
Here's what you want to defend.
They're both up almost a full percent. Financials are having a good day as well, up a little.
This is USD JPY.
Communication services strong too. NASDAQ composite up 0.2%. Still for the week, we're tracking sharply lower for the NASDAQ. Dow is almost unchanged. As for treasuries, offering some relief potentially to equities today as there's buying and yields go lower for a change. The 10-year note yield 4.637 after hitting the highs of the recent cycle overnight. The 2-year yield below 5%. We're 30 minutes here into the trading session. Here are 3 movers we're watching. Shares of Travelers dropping after missing profit and revenue forecasts. The insurer seeing a sharp rise in catastrophe losses tied to all these weather events. U.S. Bancorp also under pressure. The regional bank beating earnings estimates, but cutting its net interest income guidance for the year. And then shares of J.B. Hunt plunging after its big earnings miss. Demand for its domestic freight transportation service was softer than expected, and trucking volumes fell as well. More on that ahead. Guys, the story that everybody's talking about this morning in macro is the comments that we got from Fed Chair Powell yesterday afternoon and how differently he sounded than he has recently. Have a listen.
The recent data have clearly not given us greater confidence and instead indicate that it's likely to take longer than expected to achieve that confidence.
My take on this one, guys, is that Powell just marked to market where the market was in terms of expectations that the recent data, i.e. inflation, have not given him and the Fed enough evidence and confidence that inflation is moving down to their 2% target. Remember, he kind of brushed off January, February, but after another month of March, and we've heard this from other Fed officials, we've seen this in the rates move, the thinking was fewer rate hikes, fewer rate cuts wouldn't come as quickly this year, and that they would need more time. And he reiterated that. So in a way, it was not surprising, but it did mark a change, which is notable. And I think you're seeing the reaction in treasuries this morning, the fact that they're getting bid and yields are coming down, a lot of it was already, David, in this market.
Yeah, that seems to have been the case. The market was already positioned, in a sense, for comments like that from Powell, even though we hadn't actually heard those comments.
Exactly.
Do you want to stay up to date with
because it was notable that we did not sell off dramatically in the S&P, and we did not see a significant move in the bond market after those comments. You could imagine a different time when comments like that would have rocked the market.
Because the market was way ahead of him. He caught up and he gave the market what they expected to hear and what they knew they were going to hear, and he said it very plainly and very succinctly, and he didn't go farther. He wasn't more hawkish. He wasn't saying, well, maybe we might have to raise rates, for instance. He could have taken it to another level, but he did not do that and said we can stay as long as we needed at these levels. And it's no wonder. The Atlanta Fed GDP tracker, so they update this based on inputs. They did another update yesterday based on housing starts and industrial production. Continues to move up. It's the top line. And what you can see, and the bottom line there, the one that's sort of stable and not moving, that's the Wall Street consensus. So it hasn't moved as much. So Atlanta Fed is definitely stronger. And so this is the tracking for the first quarter GDP. We don't get that number till the end of the month. We'll get one more update in a week. But now the expectation is 2.9% growth versus 2.8 the day earlier, which was already revised up because of retail sales. So the numbers feeding into growth just continue to look better. That coupled with...
I posted for you the JPM expectations for Q2 and Q3 of 2024. GDP is expected to explode to the upside.
Which is good, but it came in higher than expectations. Both the headline at 3.2%, a little bit higher, and the core a little bit higher than expectations. But again, you want to see these numbers coming in at expectations or below expectations because the market's very sensitive to inflation data.
Yeah, 3.2 looking for 3.1. Nice ECB in line at 2.4 and 2.9 on core. That was helpful. A lot of people are starting to compile threads of things that maybe look a little more pernicious, like occupancy rates at budget hotels, or air traffic, or African-American unemployment, or auto sales declining outright, certainly auto pricing, as signs that maybe things are not as hot as we think?
It's lumpy.
Yeah.
It's not necessarily an all-inclusive re-acceleration in the economy. You know, Brian Moynihan was on yesterday with me after earnings, and I always like to get his sense of the consumer. They see a lot of deposits. They see a lot of credit card data. Here's how he characterizes it.
consumer has slowed down their spending. So we went from a 10% year-over-year growth early last year to 5% last fall, and now they're running about 5%, a little less than that in March, April a little stronger. And what that means, that growth and movement of money across $4.5 trillion on an annual basis out of the Bank of America accounts is consistent where we were in 17, 18, 19.
So 17, 18, 19, which are not recession years.
No.
But the consumer has slowed down, but is still spending. And 5% growth is not too shabby.
Yeah, come on. Christine Lagarde said it. The U.S. consumer consumes.
Biggest difference between the U.S. consumer and the European consumer, which saves, and the Chinese consumer, which saves too. And that's what's
well, the Chinese consumer saves a lot.
They save a lot more. They've got like a 30% savings rate. But again, and J.B. Hunt spoke to this as well, the fact, they're the big trucking and logistics company. It's different in different categories. They cited, for instance, furniture as a soft spot, which we know. We've seen that in the inflation data. Here's how they say demand is overall for big and bulky products remains mixed. Soft demand in furniture, stable demand in both appliances and exercise equipment. Overall, we are modestly encouraged by our sales pipeline, and we continue to see new brands engage in discussions with our team. The weak spot for them is really pricing, and that's what's hurt recent earnings, and we've seen that with shipping prices.
Right. Meantime, what this all means for the stock market remains an open question. Former Barclays CEO Bob Diamond's here, founding partner, CEO of Atlas Merchant Capital, joins us for a discussion. Bob, welcome back. Good to have you.
Good to be here, Carl.
So, I mean, Sarah's right. It is lumpy, but if you go 30,000 feet, can you make broad calls about where the economy is and where it's going right now?
The economy feels very good right now in the U.S. I think it's much to the surprise of everyone around the world looking at the U.S. that, it was a year ago that SVB hit. Deposits were guaranteed, special bank lending facilities were put in, people were worried about the economy, a very, very high percentage. And what happened? The Fed raised another 75 basis points, and people were calling for recession and easing. And I was here in January with you, and we said then they're going to be higher longer, not because the Fed should ease, but because it would be almost irresponsible with the economy still strong, inflation not quite where they wanted to be, that our feeling is, and it continues to be, that the only mistake the Fed could make here is to act too quickly on easing. And so let's see how this economy plays out. But we felt in January it was unlikely that we get a rate cut in the first half. It could be one toward the end of this year. I think we'll see how the numbers come. It could be none. But I think that, Carl, if I go back in history, like since 2008, before these rate increases, then Fed funds were averaging below 1%, right? We all got used to that. It was kind of free money. Prior to 2008, for decades and decades and decades, Fed funds averaged what? Above 4%. So where we are today is not abnormal. In many ways, it's probably a more normal interest rate structure and interest rate environment for risk taking than what we saw when rates were below 1%.
What about the fact that the company, first of all, if you listen to earnings, it's not like everything is peachy. Right. It's obviously, it varies by sector, by demographic. If you're in services, you're doing a lot better than if you're in goods. But the commentary so far from earnings, and we saw this last quarter as well, hasn't exactly been a 3% or 2.9% GDP economy. So the inputs are pretty mixed. I just wonder if you said the risk is them cutting too early. You don't think there's a risk of them cutting too late?
I think they'll see the data, Sarah. But I think in addition to it's been sticky getting down to the 2% target, well, what's happened recently? China's growing faster than we thought. Christine Lagarde, you did a great interview with her yesterday, is ready to ease. The Bank of England is ready to ease. Both the UK and Europe look like they're going to get a little bit more growth. So actually, there's some more things out there in the macro environment that, are kind of positive. Positive is the wrong word, but, more in favor of inflation's going to stay a bit sticky. So, the slower economy in China was certainly beneficial to a lower rate of inflation. And I think this surprise is going to go the other way a little bit. So data dependent is important, Sarah. And if we do see a weakening U.S. economy, then I can see the reason for easing. But boy, we haven't seen any sign of weaker U.S. economy.
Bob, given your history, of course, is having run a large financial institution, I'd just love to get your take on earnings season that we've been through, particularly with the bigger banks which you competed against, the Goldmans, the Morgans. It's been a very mixed picture this earnings season. We've talked about it. J.P. Morgan, obviously, stock went down dramatically after earnings. Bank of America yesterday, not great, but then Goldman and Morgan, quite strong quarters. What do you think?
So I would say underlying all of it is counterintuitively, and we've talked about this, higher rates are good for financial institutions. If you look at B of A, it's a deposit machine. B of A and JP Morgan have hoovered deposits for years since 2008, but even more post SVB. And if you're at 5.5% versus 1%, look at the net interest margin of B of A and the amount of deposits out there. And keep in mind that a year ago, right, in the first quarter, there was a $100 billion loss in the Treasury portfolio that doesn't go through the mark-to-market.
Right.
That's much better now. And so the banks have adjusted to that rate increase. They're used to interest rates at these levels, and they're very, very beneficial for the deposit-taking institutions.
That was the thinking going in, Bob. But then there were some mixed reactions when the banks weren't actually raising their forecast for net interest income. And we also found out that it's lower rates can be helpful for investment banking and for capital markets. So that's on the flip side.
Well, we've seen the advisory and the trading bounce very, very well at Morgan Stanley and Goldman Sachs, and it's not lower interest rates. So I think that environment, I think the best trading firms like Goldman Sachs, which if B of A is a deposit-taking machine, Goldman Sachs is a trading machine. And they're going to operate very, very well in this environment. And I think higher interest rates will be very beneficial to Goldman Sachs as well in their commodities trading business, fixed income, in all of those businesses. So I would not worry about the trading operations. I think the trend that's interesting that we haven't factored into all this with the big banks is if we go back to 2008 to today and think about the credit businesses in the banks. They're not in credit trading. They're not in high yield trading. It's at market access electronically. It's at the hedge funds. And now a lot of the lending is in private platforms, right? So if you think of the credit business writ large at the banks, trading in investment grade corporate, trading in high yield, trading in distressed, and the loan portfolios, a lot of that, unsurprisingly, with higher capital levels, has moved off balance sheet. So I think that's part of it. But Sarah, coming back to the projections on net interest margins, I bet you a nickel that over the next quarters, we're going to continue to see really good performance there. I think they're being conservative.
Only a nickel?
Only a nickel.
Right.
We're on TV.
Gentle
almost made the banks utilities. I mean, isn't that what the goal has been, kind of, to a certain extent?
It's what's really been happening since 2008 in the higher interest rate, in the higher levels of capital, is the banks are much closer to government in many ways, and they're much more like utilities, both in a good way and a bad way. They're much safer, but they're far more systemic than they've ever been.
Bob, thanks. Good to see you.
Good to see you, Kyle.
As we head to break, our roadmap for the rest of the hour. Shares of one of the world's biggest chip equipment makers dropping on the back of its latest earnings, and it's impacting the other semis as well. More on the fallout.
Plus, Tesla asked its shareholders to vote yet again on Elon Musk's $56 billion pay package. What is at stake for him and the company he runs?
Boeing's in the crosshairs of Congress today. The whistleblower hearing set to begin sometime in the next hour. We'll get you ready for that as Squawk on the Street comes back.
Just a heads up out there, okay? I just want to cut in really quick. There is some news this morning coming out, or there's on the backdrop of Jerome trying to calm markets, right? Large banks are pushing the narrative. I mean, they're breaking out the thesauruses this morning. They broke out the AI and everything, and they're like pushing the geopolitical narrative to almost like either they know something or it's more about a price that they want. This is true. I got to say this about like GS, okay? I've read books of guys that have worked for GS that literally lived in Moscow during the fall of the USSR. So I have to give some weight to this, but I got to tell you, like, there's some real like storytelling going on this morning about geopolitical risk and the dangers of it. Now, I don't think anything's going to happen. I think this is more of a narrative to get price. Like, I want this fucking price. Fuck you, Jerome. So there's like a war right now between banks, Jerome, and the market. Now, we do know that banks are wrong all the time. All the time. Wrong side of the trade. And they're elephants in the room. But they will try to push price around if they can. Now, I want you to know, if you are a pro trader, I have something special for you inside the Discord that will let you know if anything actually does happen. If anything actually does happen, by noontime, I should have it up and running for you. But this is basically like a Bloomberg terminal. You will actually hear news like that before it goes on the wire, before it goes on Twitter, before it goes anywhere. It'll be about a minute fast. If anything were bad to happen, you're going to hear it before the wire hits the tape. So I'll put that up for you today so that if you want some peace of mind in case anything does happen, that you have a way to exit hedge just before geopolitical risks break out. And I'll put some feet picks up too for you. If you have any questions about what I'm talking about, find Binky, DM Binky, and he'll explain, because we've used this tool in the past, and this tool is hot sauce, period. So if you find Binky in the Discord, just DM him and say, what's Cap talking about? And he can tell you. Any of the longtime traders with us that have been here since the beginning know what I'm talking about and have had the same experience with this. So get in the Discord, DM Binky.
Potentially, I think Texas as well with Samsung. They got a lot of equipment to buy, don't they?
Yeah, especially these machines. So TSMC, for example, they're in Arizona. I went there. They actually had a party when they brought in their ASML machine. And you need several, 18-wheeler trucks because it's such a large machine, which is why they had to bring in workers from Taiwan, because a lot of American workers didn't know how to work with those machines. So it does bode well for the equipment makers, but right now you're seeing a negative reaction in the market. KLA, Applied Materials, Lam, all of those names are down about 2%, but it seems like the street reaction is, hey, long term, there's still a lot of strength because ASML reiterated their 2024 outlook and said they see growth, and they were very positive on China as well, despite these export controls.
They are banned from providing certain machines to
the
China,
high-end EUV machines that we talked about. That's why the impact in Q1 specifically really was weighed on by those EUV machine sales.
Are they subject to all the rules that the U.S. semis are subject to, because they're a Dutch company?
No, but that's why the United States has been trying to push the Netherlands company to really, be even more stringent with the older equipment, because what China's doing is snapping up the older equipment, not only from the Netherlands, but here in the United States, Applied Material, Lam, et cetera, so they can build the mature nodes, so the chips that go into solar equipment, air conditioners, et cetera, and they want to dominate that market. Whereas the United States is trying to focus on the advanced chip market, and like Gino's talked about,
it's all originally U.S. technology.
Yes. So that's the thing. Yeah. We designed it. We created it here. Why aren't we actually manufacturing it on U.S. soil? That's what they want to change.
Right. We'll see how much that job-owning works on the Dutch. Thanks, Christina.
Thank you.
KP. When we come back, what LVMH's latest earnings are saying about the health of the high end, and a quick programming note, just a day away now from CNBC's first ever Changemakers event in New York City. You'll hear from this year's leaders, including principal dancer of the American Ballet Theater, Misty Copeland, Secretary of Commerce Raimondo, Commissioner of the WNBA, Kathy Engelbert. Just scan the QR code or visit cnbcevents.com/changemakers for more.
That's really weird that you're saying it's a bear day, as we made a market brief last night that said expect a nice open, a bounce here, and straight up. That white line is the expectation from the market brief last night.
Frankly, I don't think the situation of aspirational customers in the western part of the world is connected in any way with the offer. The question is inflation, which is taking its toll with a particular intensity on this group of customers, and we see the same thing in the US and in Europe. And it's quite interesting that we don't see it in China. The reason why we don't see it in China is that there is no such thing, at least for the time being, as inflation in China. So I think as long as inflation will be a factor for this group of customers, we will not do miracles.
That was the CFO of LVMH, parent company of Dior and Louis Vuitton, on the company's earnings call, not mincing words when it comes to the impact of inflation on consumers, even at the high end. Higher sales from the company's core fashion and leather goods segments did offset falling sales in other divisions. The particularly weak one, guys, was wine and spirits. Champagne not doing too well. Jewelry also came in weaker. Same-store sales in Asia, excluding Japan, fell 6% in the first quarter, though the company did attribute that to Chinese consumers spending more as tourists outside the country. Meantime, Japan sales up 32%, lifted by the weak Japanese yen. LVMH, not the only retail name to watch today. The New York Times reporting this morning that the FTC is preparing to sue to block Coach parent Tapestry's $8.5 billion deal to buy Michael Kors owner Capri. Tapestry just sending a statement to me saying, in part, we cannot speculate on the FTC. This is a deal that deserves to clear, as it is pro-consumer and pro-competitive. This combination involves 6 unique brands that compete with hundreds of others in a dynamic and constantly expanding $200 billion global luxury market that delivers products in a wide range of categories across a vast price spectrum, which gives you a hint there, guys, if the FTC does move to sue to block how Tapestry would fight this, which is there are no barriers to entry when it comes to fashion brands, and there's competition coming from everywhere. What I can tell you is there is this closed-door meeting on the public calendar of the FTC, of the Commission, on Monday, and inside the building, what I hear is that there is a movement and effort to block the deal. And we know the history and the track record of this FTC, and they often block high-profile deals. The scrutiny, what I hear under this one, is overlap in customers and workers and demographics of these particular brands. Michael Kors and Coach catering to the same middle-class female buyer that wants to spend $200 to $400 on a purse but can't afford thousands of dollars for an Hermes bag, that sort of thing. That's where the discussion is going.
I don't know if that would be fully defined as a market under antitrust law, and again, to the extent that the FTC has made their move on certain transactions, they have run up against the inconvenience of the law itself and the fact that many judges don't seem to agree with them in certain areas. And again, whenever we say this, the FTC will come back and point to all of the victories they've had and or point out, of course, how many deals do get done. But this one has some people scratching their heads, Sarah, so it's interesting to hear at least some idea of what they may be focused on. By the way, I always would warn, we always hear about these closed-door meetings. They aren't necessarily 100%, you're never certain what they're about. So it may be that it's other business, even though many people do believe it's going to be.
People think it's likely Monday. And there's not a lot of precedent for blocking a fashion deal like this because there's just so much competition out there. Probably not as strong of a case as Kroger-Albertsons, but similar kind of argument, which is competitors everywhere.
Right, but that one at least you can have an understanding as to what the basis for some of their complaint might be. Again, I know Kroger is obviously saying, hey, we don't compete without, our competitors, Costco and Walmart, much more so. But this one is, it's a bit of a head scratcher.
Also, there are other brands. Versace, Capri owns Versace as well. Jimmy Choo. Not necessarily direct competitors of Stuart Weitzman and Kate Spade, which are the other brands of Tapestry.
Meantime, shares of Tesla coming under pressure, now within a couple bucks of a 52-week low. That hasn't happened in a while. 4th straight day down, below some key support levels. Now the board wants shareholders to vote again, re-ratify that $56 billion pay package for Elon Musk that was struck down by a Delaware court in 2018. Longtime tech investor Roger McNamee will weigh in on that when we come back.
CNBC.com.
Welcome back. I'm Julia Borston with your CNBC News update. The Senate will begin the impeachment trial for Homeland Security Secretary Alejandro Mayorkas this afternoon. He faces 2 articles of impeachment, refusing to comply with federal immigration laws and allegedly making false statements to Congress about the Homeland Security Department. The Democratic-led chamber is expected to vote to dismiss or table the articles. Britain's foreign minister says Israel has clearly decided to retaliate against Iran for weekend missile and drone attacks. He made the comment during a visit to Israel today. It comes after Prime Minister Benjamin Netanyahu insisted Israel will do what it deems necessary to defend itself. And former U.S. Senator and Florida Governor Bob Graham has died. He gained national prominence as the chairman of the Senate Intelligence Committee in the aftermath of the 9/11 terror attacks and as an early critic of the Iraq War. He used his opposition as a focal point for his unsuccessful presidential campaign in 2004. Bob Graham was 87 years old. Sarah, back over to you.
Thank you, Julia. Shares of Apple and Tesla both struggling this year, trading below key support levels. Dom Chu tracking them as well as the other mega cap tech names. Dom, especially paying attention to some technicals today.
Absolutely, and specifically one, which is the 50-day moving average or 50-day average price on that rolling basis. It's that medium-term trend line some traders use as perhaps a signal about at least momentum in trade. Let's talk about Alphabet, the parent company of Google first, which you can see here over the last year is up 47%, still solidly above its 50-day moving average here, so showing some signs of relative strength on that mega cap side. Moving on to another one that's also seen a pullback from recent highs, but is still trading solidly above that level, which is NVIDIA, which is down 1% today, up 220% for the last year, still holding above that 50-day moving average. The most valuable stock out there in terms of mega cap blend and in the market is Microsoft. That stock is interesting to watch because it's trading right at its 50-day moving average price. So from a momentum standpoint, keep an eye on that. And you mentioned the two, Apple and Tesla, among those mega cap names that are trading the most below there. Apple right now, you can see over the last year up 3%, but it's still trading just around maybe 4 or so % below its 50-day moving average. And then, of course, Tesla, which is the one that has seen the most relative weakness compared to its 50-day, trading at the biggest discount there. So mega cap blend pulling back. Tesla is one of those big standouts to the downside. We'll see if they can find any kind of footing in the coming days and weeks. David, I'll send things back over to you.
Yeah, we're going to keep the focus on Tesla, Dom. Thank you, because that company is asking its shareholders to vote yet again on Elon Musk's multi-billion-dollar pay package. This comes after a Delaware court voided that pay package. That was a number of months ago. The stock, by the way, has been down 20% even since then, and you can see down some 37+% for the year. Here to talk about the road ahead, Elevation Partners founder, early Facebook and Google investor, Roger McNamee. All right, Roger, I bet I know, but where do you come down on putting this back to shareholders for a vote on stock, obviously, that was promised to him but not delivered because of this court decision overturning the will of shareholders originally who voted in favor of it back in 2018?
It was my assumption shareholders will vote for it.
Just a heads up out there, you may hear some audio in the background during the stream. I'm trying to test out something right now, so if you hear some audio in the background of the stream, bear with me. I apologize for it. It should just be brief here and there for about 5 or 10 minutes.
themselves on so many of the things that Musk uniquely seems able to get a company to do that others can't.
Apologize for that. I'm running some audio tests on another rig here for the Discord. No, I'm trying to do a news squawker for the Discord. sorry about that out there, guys.
At least for this company?
Well, he seems to think so, and if he's right, then it's going to be a huge stock. I'm simply looking at it and going, wow, if I'd had the advantage in electric cars that Tesla had, I would have focused on manufacturing, getting the price points down and broadening my base, but now they've got problems because they have not been as focused on their manufacturing and on their production processes as they should have been if they were really serious about electric cars. I think he has made the bet on FSD. I just think that's a losing bet.
Yeah. All right. So you're afraid of, in New York, I'm kind of scared of the guys, the people behind the wheel who are people, not to mention, of course, those crazy delivery drivers on all those electric bikes. But really, you're worried, Roger? Really? It's scaring you when you don't see somebody behind the wheel?
Yes, and it should scare you too, David, because, again, think about it this way. The amount of processing you have to put in the car, the quality of the sensors that you have to have, both of those things are not where they need to be for these things to be able to go into normal traffic and succeed in unexpected situations. The issue you get in San Francisco is they're constantly blocking emergency vehicles, constantly driving places they're not supposed to go. And then every once in a while they run into somebody or something. And, given how few miles they've driven, the numbers are disturbing.
All right, Roger, always a pleasure. Thank you.
My pleasure. See you.
Public trust is going to be an issue, too. If other people feel like Roger, it's going to be hard to adopt
municipal
these things.
approvals.
Yeah, that too.
Exactly.
I mean, I thought they'd already be here based on everything we were talking about 5 years ago. I have an 18-year-old who's really upset with me that she didn't learn how to drive.
You told her not to drive because
I was like, oh, it'll be fine.
Need it.
Yeah,
no one's going to own a car.
That's funny. Still to come, shares of Citizens Financial, they're higher, near the top of the market, in fact, despite reporting lower profits and weaker interest income. It's been a story with banks. The CEO joins us next to break down the numbers and give his outlook. Let's talk about the health of financials. Super regional bank Citizens Financial reporting this morning. The street's generally positive on net interest income, rebounding capital markets revenue, and expense management, despite a slight decrease in net interest income quarter over quarter. Joining us now is Citizens Financial Group CEO Bruce Van Saun. Stock is up nicely, Bruce. How do you characterize the quarter relative to what the market was expecting? There was a little trepidation around these regional banks going into earnings.
Yeah, I think we had a solid quarter. We're still working against some of the trends with the Fed having raised interest rates so aggressively, but our net interest margin was stable. We're working on the balance sheet to make sure we have lots of strong capital position and liquidity position and reserves for our loan portfolio. And then I'd say one of the real bright spots that the market liked was the capital markets business has rebounded in a very nice way. So we've had 35% sequential quarter growth in cap markets fees, strong in M&A, strong in bond underwriting, bank loan syndication market coming back. We think that's the beginning of a trend for the year, so that's real positive. We also did a nice job on expense management. There were no surprises in credit, which was good. And then looking at our strategic initiatives, the private bank is off to a great start. We hit roughly $2.5 billion in deposits. So grew that by over $1 billion in the quarter. New York Metro continues to grow very nicely. And then we were #1 in the middle market leveraged loan league tables, again, as a testimony to the strength of our capital markets business.
Yeah, I wanted to ask about that. So you seem to think that the capital markets activity is sustainable. Why and where do you sit at Citizens in terms of competition and market share?
Yeah, so we're very focused on the middle market. So we don't go all the way up to where the mega banks play. But when they come down into our space, we can win jump balls and beat them. So stay close to home and you can have a really strong franchise. We've expanded into some great industry verticals like technology with JMP acquisition. And we're also very focused on sponsors because increasingly private equity owns over half of middle market companies. So we've built out our overall franchise to be able to cater to the needs of sponsors.
Mm-hmm. So the net interest income, this is what everybody's so focused on, was down 12% on the quarter. We saw this across banks. What does that look like going forward with now expectations that the Fed won't be able to cut as much this year, more hawkish Fed, should be better for profitability, right, Bruce?
Yeah, there's puts and takes with that. So I think, the balance sheet position is relatively neutral for most banks now. So it's hard to call what the Fed's going to do. So you've kind of flattened out your position. So whether they cut or whether they hold higher for longer, it's not going to have a huge impact. I think what's going to drive net interest income over the course of the year is the amount of loan growth that we see. And so what we're expecting is the first half to be somewhat soft. Line utilization is a little low. We're not seeing new money deals happening. I think that changes in the second half of the year. We should see commercial loan growth. The other wild card that's unique to us is that we have our private bank, which already has $1.1 billion in loans to go with their $2.5 billion in deposits. And we think that'll grow significantly in the second half. So the volume side should actually start to help net interest income. And I think we can broadly keep the net interest margin about where it is.
Why? I was talking about this with Brian Moynihan yesterday. Why is loan growth so sluggish in an economy that has been so resilient and outperforming expectations? And what turns that tide?
Well, I think you could say it's been so resilient, but if you go back 6 months ago or 3 months ago, people were still talking about a potential for recession and maybe we'll get a Goldilocks scenario, maybe we'll see a soft landing. But there was a lot of uncertainty around that. And so we've been consistently surprised to the upside in terms of the strength and resilience of the economy. So I think many business owners seeing that uncertainty said, I'm doing fine, but I'm not going to go full on offense until I see kind of more cards turned up on how the economy's doing. So that's one of the reasons we think now that it looks like we won't have a recession and that growth is going to be higher over the balance of the year than people thought coming into the year. That should start to get the animal spirits going a little bit. So you should start to see line utilization pick up, investments in working capital, investments in CapEx. It'll come back gradually, but I think that was the concern, is people just felt a huge amount of uncertainty and didn't know which way the economy was going to tip.
Got it. A confidence question. Bruce, thank you very much for joining us and talking through the quarter and what you're seeing. Bruce Bronson.
Okay, my pleasure.
Coming up after the break, Boeing's Senate whistleblower hearing just about to kick off. We're going to get you ready and tell you what it might mean for the stock, all still hovering near some 52-week lows. Still ahead next hour, the chairman and CEO of General Atlantic, Bill Ford, live from the firm's annual investor summit, $83 billion in assets under management. We'll get his read on where markets may go from here as the opening gains once again have faded. Dow's up 16. Money movers coming up in 10 minutes.
We're just moments away from the start of the Senate's Boeing whistleblower hearing entitled Examining Boeing's Broken Safety Culture. Let's go to Phil LeBeau. He's got more on what we can expect and what it will mean for the company. Phil.
David, that gentleman sitting there in the red tie, he just grabbed some papers there. That is the whistleblower. He is the star witness, if you will, Sam Salapour, who works as a quality engineer for Boeing. He will be outlining his complaints today. We'll hear from him and others, starting in about 15 minutes, I believe. Let me give you a rundown of what we expect to happen during the course of this hearing, which will be conducted by a Senate Investigations Committee. First of all, you'll hear from the whistleblower, his warning about the stability or the safety of Boeing aircraft, specifically 787 Dreamliners. Now, yesterday he talked with Nightly News. He said, look, there are gaps in these planes. And he said there could be structural integrity questions that develop, and these planes could break apart mid-flight. That's a pretty bombastic statement to make, given the fact that people, when you say a plane could fall out of the air, you're going to get their attention real quick. He also will be highlighting what he considers to be faulty protocols. Now, we should point out that 2 days ago, Boeing, they knew that this was coming. And this complaint had been lodged with the FAA some time ago. They did a deep dive, a technical briefing explaining why they believe the gaps in the fuselage where they're brought together are well within conformance. And they believe that there's nothing to these allegations, that these planes are safe to fly. And by the way, this morning we talked with Scott Kirby, CEO of United Airlines. They fly more Dreamliners than any other airline in the world. Here's what he had to say about these allegations.
This is an airplane. There are thousands of these airplanes. They've been flying for decades, millions of flight hours. I am totally confident the 787 is a safe airplane.
Take a look at shares of United. Separate from all of this, that stock is on a rip higher today, up almost 12%, given better than expected results yesterday. As for Boeing, it continues to languish and probably will over the next couple of weeks because we're a ways from seeing some stabilization here, guys.
Not to mention, of course, picking a successor to Mr. Calhoun, which will be some time in coming. Hey, Phil, in the last minute we have here, I know Alaska Airlines has, I believe it's a nationwide ground stop going on right now. Do we know why?
Yep. Yeah, it's an IT issue. The system that is used to calculate weight and balance for all flights is not functioning correctly. So you do what you're supposed to do in a situation like this. You do the ground stop. You don't want these planes taking off when you're not entirely sure about the weight and balance. You need to know that 100%. So they're doing the prudent thing, and it's a ground stop.
Phil, thank you. Phil LeBeau. As for our broader market right now, of course, you saw it moments ago. We have turned around the S&P down, NASDAQ as well, adding to losses that have already taken place during the course of the week. Tesla, noted underperformer yet again, down some 1.6%. We got a lot more live market coverage for you straight ahead.
To learn more,
Good Wednesday morning. Welcome to Money Movers. I'm Carl Quintanilla with Sarah Eisen, live at Post 9 of the New York Stock Exchange. Today, Marathon Asset Management's Bruce Richards. Why he says Powell will succumb to political pressure to cut rates 1, maybe 2 times this year. Plus, we'll talk why he's so bullish on Japan.
Then Barclays cutting its Tesla price target, saying next week's earnings print will be a, quote, negative catalyst for the stock. That is, Tesla asked shareholders to approve a once-voided $56 billion pay package for Elon Musk.
Then General Atlantic CEO Bill Ford. The firm has $83 billion in assets. Early investors in names like Snap, Uber, Airbnb. His thoughts on China and the company's own IPO prospects. Right now, markets have taken a similar pattern here where futures were strong, opening was strong, and then we lost some steam. Dow down 21, S&P down about 3 as the S&P was looking to snap a 3-day loss.
Just a note that reports coming in right now that there are no anomalies at the Japan reactor after the earthquake.
Try and find some balance between, this reset higher in bond yields, obviously repricing of exactly how quickly the Fed might move and maybe won't move at all this year, and then, where inflation sits. So I don't think there's anything inherently threatening about the absolute level of 4.7% or 4.6 on the 10-year yield, unless there are parts of the economy that can't handle it. It's not about the trade through devaluation. I keep saying this. It's much more about can the consumer cyclicals, which are down 8 to 10% in the 3 weeks since we peaked in the market, or the transports, all these areas of the market, or the home builders that actually have shown that maybe it's not just about a rip-roaring economy being able to handle rates where they are. So it's not panic time, but we have an uptrend that's broken. The momentum players have been shaken out. It's now sell the rallies, not buy the dips, at least in the very short term. And we wait for the overall market to get a little bit more oversold and to price in some of these scenarios. Maybe you get a bid into bonds too. So I think that's why we feel unsettled, even though we're down only 4% on the S&P from the highs those 3 weeks ago. We are sort of challenging the late February levels that we launched from on NVIDIA earnings.
Also, it's early on earnings reads, Mike, but yes. What are some of the threads? It really does feel like the setup is very key because some of the banks weren't bad news, but the stocks reacted because they were stronger in earnings. And then United today surging 11% after a weak April.
I feel like it's a little early still to try and really have enough of a sample size to say this is the storyline of earnings. I do agree that in terms of overall beat rates, we're probably going to settle where we always do. 70 to 80% of companies beating. We're probably going to beat in aggregate by a few percentage points, but it seems back-end loaded. And I was mentioning this yesterday. It seems like every quarter we say, wow, the beats aren't getting rewarded quite as much as you would think, and the misses are getting punished. And in aggregate, you have just sort of this churn in the market. I don't think there's any reason to really question the sustainability of earnings as they're expected right now. After all, what are we trying to deal with on the macro? A U.S. economy that's growing nominally at 6% annualized, right? That should be the kind of environment where companies in general can make their numbers.
Meantime, technicians, Mike, hard at work, arguing that we had a big cup and handle that closed as a result of that December liftoff. But there's still an argument. I'm thinking about B of A today saying that maybe 5,600 might get you somewhere in July or August, let's say.
Yeah, nothing's really been violated in terms of, let's say the longer term or intermediate term trajectory of the market. Everyone knows 3 to 5% pullbacks are okay. They actually are kind of things that refresh a bull market, but they always bring with them the possibility that there is a bigger reset. A lot of people pointing to, first half of April being weak after strong first quarters, election year seasonality, things that would kind of create an ongoing challenge to the market, even if, again, the longer-term trend looks okay.
Thanks, Mike. Mike Santoli with the market setup as we do go negative on the S&P after a rally this morning. Following Fed Chair Powell's comments yesterday on inflation, signaling a little more uncertainty when it comes to the progress they've made and the rate cut timeline, our next guest believes Powell will succumb to political pressure. Still cut rates 1 to 2 times later this year. Joining us is Marathon Asset Management CEO Bruce Richards. Marathon has $22 billion under management. What do you expect to happen from here for the Fed?
Well, Powell pivoted yesterday. Actually, it wasn't quite a pivot. It was a Michael Jackson moonwalk. He walked back all expectations of easing this year. And so it's going to be higher for longer. And in terms of my expectations, June's off the table, July's off the table, first possible cut September, and now we're getting close to the elections. And 2 days after the elections is another Fed meeting. So November 5th is election, November 7th is the following meeting, and then there's a meeting in December. So will there be one cut? Probably. Might there be two? Not so sure, and that's what the markets are telling us now.
Fed would say it doesn't matter when the election is. They don't base it on politics. They don't pay attention to that sort of stuff.
Well, the data dependent, and the data is saying don't cut because inflation is just too high, employment gains are too strong, as is the GDP. And so Powell was saying, and he wanted to, he's like begging to cut rates, irrespective of that, waiting for a sniff of good news, which he's not getting. And so now yesterday he had to moonwalk it back. And so right now we're thinking we're going to retest the old highs on 10-year notes and get back to 5%.
You think we will see that again?
Which we will see again, I think, before these next few months. Listen, we have too much Treasury supply not to see it. We have about 8 to 9 trillion rolling off this year. Another 10 to 11 trillion being issued because there are these big deficits that we're running. And, you know, at some point, I think, we'll probably be back at 5%, where 2-year notes were yesterday. Yes.
Probability of a hike is getting up into the 2% range. Is the bar to hike still higher than the bar to cut?
Yeah, the bar to hike is much higher than the bar to cut. I think that's probably a very low probability case, where it's a very high probability case that this year they're going to cut. And so I'm not expecting the Fed to increase rates, but they probably should based upon the data, based upon where inflation is coming in. But will they? No. Do those political pressures? They won't.
Do you think real rates are restrictive right here?
Real rates are where they should be. I believe the market is where it should be, and that real rates are where they should be. And we were in this for decades, in financial repression, this subdued real rate environment, and I think real rates are back to this, well, it's above 2, but back to this 2% kind of neighborhood, which it really should be. You should be getting a premium to where inflation is when you're an investor in the markets.
But the 5%, which is just staying with me on the 10-year yield, when the next move is a cut, we know, right, from the Fed that you said it's a very high probability event. I mean, wouldn't that have an economic ramification as to make it more likely that the Fed will cut more?
They'll cut more because it's not just one and done here when you talk about the next 2 or 3 years. But I think that 5% with 3% inflation is the right number. And I think that even at 5%, if Fed funds, which are 5.25 now, were 3%, then 2-year notes should be 3.5, and 10-year notes can be 4.5 to 5.
So what would that mean for the equity market?
Well, I think the equity market is the equity market, which is hugely positive. You have an economy that's growing. You have, gross GDP at 6%, net GDP around 2.5% or 2%. And so at higher rates of inflation, you should have higher multiples. At strong growth rates, you should have a stronger equity market. But the equity market is bifurcated, right? So it's the big banks right now versus the small regional banks and how they will perform. It's the real estate markets, versus, say, big profitable, tech. The marketplace is fine. I think the equity market. I think the equity market can sustain these level of rates. It's shown it all year long, and there's nothing that can hold back a very strong economy, the United States of America, and our equity markets.
So equities can rally with a 10-year going up to 5%?
I believe so. I believe it's completely sustainable, yes. The big problem is with Treasury issuance because you came into this year with debt service of a little less than $1 trillion, and you're going to come out of this year as nearly $9 trillion of treasuries roll at these higher rates, with about $1.75 trillion at these higher rates of debt service alone. And so the interest is going to cost. And that's why our currency is as strong as it is and will remain incredibly strong relative to the euro, relative to the yen. It's unbelievable, I think, the dollar strength that we have today and the dollar strength that we'll have coming into this next year as the Fed is higher for longer. And higher for longer also has huge implications for credit investors because, there's a transfer of wealth. Like, look at private equity, what they're making versus what credit's making today. And it's the first year in many years that private credit has actually generated a higher rate of return than private equity. You go to PitchBook and you look at the returns over last year, and private credit actually made a higher return than private equity. And I think that will also be the case this year. That's why I've said it's the golden era of credit, because it's a great environment for credit investors to earn the highest rates of return that we've been able to earn in a generation. And so all this is coexisting at the same time. It's rather remarkable.
You mentioned the yen. What's the Japanese tolerance for this kind of environment?
Well, I just got back from Japan. I was there last week visiting with clients of ours.
I hope you bought a lot of stuff.
And
cheap prices.
It was really cheap, and it's a great time. So all of us Americans should go over and support our Japanese friends. And you get a good deal at the hotels for airfare, for food, for everything. But here's the bottom line in Japan. Their equity markets for a developed market are the cheapest equity markets in the world, number one. So private equity should be looking there because really low financing rates and really cheap multiples. So that's number one. Number two, and I think their equity markets will continue to do well. Number two is their real estate market is rocking. People work 5 days a week in the office in Tokyo. Everyone in every building at every company. It's not like it is here in the U.S., where we're still recovering to 60, 70% of what we once were. They're at 100%, and they've been at 100%.
Hey, what's up there, Jimmy? Jimmy, you're going to see a giant fucking squeeze here in a little bit, brother.
And while you have as many...
Giant fucking squeeze, bro.
Because there's real...
Trust me, man. Giant squeeze coming.
It's a very unique place. So I like the equity market.
Giant squeeze.
The people, I like the country. It's a great culture.
I like the sushi. The thing is, everything you're saying people have been saying for the last, I don't know, 2 years, and you've seen.
Look for a V-shaped recovery here, Jimmy.
Surprised to hear you sort of pound the table now after all that.
Well, I think it was cheap then. I still think it's undervalued relative to developed markets today. I think the one thing that we really need to think about.
When you see those divergences, Jimmy, what happens is, right, you'll see a divergence between the yield curve and SPX.
160 or 170 potential.
It goes just like this.
The Japanese are going to allow that?
I'm not sure. And so
it's like this is a yield curve up here.
And how their economy responds to them.
This is S&P 500.
Is the question that I have in my mind that's still in
S&P.
So they could intervene in the markets.
Yield curve.
Our response here is we raise rates.
And as this bad boy starts to roll,
be able to raise rates.
You'll see this right here. Woof.
Fine.
And bam, as this shit starts to collapse.
The momentum I see in this equity market. I like where rates are. I like their real estate.
Like straight up V-shaped.
It's the strongest real estate market.
It'd be like a violent, like wham, wham.
Is Japan.
Like moon.
Where rates are, and the fact that they're working from office 5 days a week.
Right.
Wow, that's quite a call. But you're not. Are you selling the yen at 154?
You'd need to read the market brief from last night.
You know, I think it's a tough call because I think it's the cheapest currency there is out there, and I think their central banks will raise rates, you know, time and time again.
It should be fast. If it happens, it should be violent and fast.
Longer here, not such good news.
And there's lots of lots of opportunity, I think, in the.
There's some really pissed off banks right now. I want you to know that there's some major players that are super pissed right now.
You take like
what does that mean?
You take like Altice for instance, and it's a $25 billion capital structure. And Draghi had one meeting, one call, and when he had that meeting.
So the setup, Jimmy, was they're trying to price in a rate cut in June.
So he's able to cheapen his capital structure.
And now ECB is saying, well, maybe July. You guys can't hear it on my end. I can hear it, but you guys can't hear it on CNBC.
At this.
So there's like this whole discussion going on.
It's the story of what we're seeing here.
Buckle up, boys and girls.
There's a lot of capital solutions, a lot of distressed exchanges that are happening, and we're seeing that play out right now, real time, with Altice, and be able to buy back billions of their debt at big discounts to lower their interest charge and support the capex need that they have is a ploy and a technique that a lot of companies have that are highly levered, like an Altice.
So you like Altice bonds? That's a big idea.
We like them from these lower prices. Yes.
Got it, Bruce. Thank you. Always good to get all of your best ideas.
Let me see if I can show you guys something here for a minute. Hold on.
Thank you, Carl.
Thanks, Bruce. When we come back, S&P Global's Vice Chair Dan Yergin's with us on the conflict in the Middle East and this move in oil. WTI up more than 18% for the year.
Then General Atlantic CEO Bill Ford on how he's putting his $83 billion in assets to work. An early investor in names like Slack, Etsy, Snap, Airbnb, Uber. He's also on the board of TikTok parent company ByteDance. Stay with us.
Let me see if I can show you guys what I'm talking about here. Hold on. Give me a second. I gotta bring this closer. Sorry, I'm doing some work in the background. Okay. Give me a second here. I have to save this shit so we have it, so you guys can see it in the future. New price scale. Yeah, that works. Does that work? Give me a quick second here, and I'll show you guys an example of this. Gonna take me a second to set this up. I want that to be candles. All right. How do I make this candles? I have no idea. That candles? All right, that's gonna be hard to see. Hold on here. I'm gonna set it up easier for you, so it's visually easier for your consumption pleasure. Give me a quick second here. Yeah, I know. Comparison, get rid of SPOOs. U.S. 10-year yield. Ten-year yield. There we go. New price and scale. Perfect. No. No, that doesn't work. Same price and scale. Now that works. That should work just like that. Perfect. All right, give me a second here, and I will. I got a bunch of hardware and shit. I don't know if you're gonna be able to see this on the screen. I hope you can't. All right. So,
despite Iran's air attack on Israel over the weekend, oil prices actually lower week to date. Our next guest calls a
100%. I'm going to turn this off here for a minute.
Discuss what a potential escalation in the conflict.
So you've got right now going on. Right now you basically have banks right now that are betting on basically this to happen right here. You're betting up. Banks are betting on a rate cut, okay? And they're pissed about it. They're fucking pissed, and they're gonna push the issue. So they're hoping for yields to go up right here. Boom, right? Just scream higher. And then what you do is you end up getting your SP. Pay attention out there. SPY. Hold on a second. I'll make it easier for you. Right there. So basically, if you guys don't understand what's going on right now, right? They're basically expecting inverted yield curve to explode to the upside, okay? And that's represented by this orange chart right here. Do you see it? Like just an explosion to the upside. Not only an explosion to the upside, this is this also wouldn't. Maybe I can add this to the chart here. Hold on, let me add one more thing here. Let me add one more thing. Hold on a second here. Let me explain this even better. Federal funds rate, Fed funds rate. Effective Fed funds rate, new pane down here. All right. This is the Fed funds rate right here. And what the banks are trying to do, gather around the fireplace right now, or the fire pit. Banks are trying to front run a rate cut. Okay? Let me do a better color there for you. Banks are trying to front run a cut in rates in June. See it? June over there, right? This is May. But over here in June, they're trying to front run a rate cut. Get me? You understand it, right? What should happen if they cut rates is you would see an explosive move to the upside in real yields, right? Right here. Okay? And that would lead to, I'm gonna represent the SPY with green, even though it's going down. This is SPY right here. You would expect an explosive move to the downside, right? See it right there? See it over there? You understand what I'm saying? Whoop, right down there, blasting down, okay? Yields going mooning, okay? Now, saying all of that, they're not getting their way at the moment. They're not getting their way at the moment, and they're fucking pissy about it. They're not happy about it. They're raging pissed. This is a trade that they've been in. They've been waiting for this bad boy. They want it. They want you to believe that you're getting a rate cut. They do not want Jerome coming out and telling you higher for longer. What happens if it's higher for longer? And not only what happens, but if 500 holds, which is right here, whoop, 500, 5,000, 550, 50 on SPX, if that holds and you begin to see the yield curve whoop, blasting down, right? You know what happens, right? The market is going to react with a violent, like you might get a quick move down, but then a violent move higher. Just like right here. See it? See what I'm saying here? See it right here? Just rip face into the upside. So you get my point here, right? So right where we are right now in the marketplace, is an indecision. As a matter of fact, this morning, Andy Constant said, it doesn't matter. Yields are going to go up, or the yield curve is going to explode to the upside, and SPY is going to crash, and it doesn't matter if it's today, tomorrow, Friday, whatever. Now, there's a fly in the ointment. Jerome's saying, get fucked. ECB saying they're not going to do it till July. That pushes the Fed out to what? August, September, October, meaning the cake isn't going to get made the way it's supposed to. So let's take a look at the bottom right-hand side screen. Let's take a look at the yield and see what's happening. Here's the yield. God damn it, it's working now. So here's the yield curve, right, on a 30-minute basis. And what do you see happening right now? If I was a bull on SPY and I saw this right here, this is a cross taking place right now. So you can see this green line moving down, and you can see this gray line. Now, this hasn't happened yet, but it's not looking good for, my point here is that it's not looking good for that trade. And when those crosses happen, you get a gray and green cross, half hour, full 1 hour HT. What ends up happening oftentimes is any of this saving grace bullshit over here, you like squeeze up and then it goes woof right to the downside, woof right to the downside. Okay, you guys following along with this, I hope? You may or may not be. Okay, you may not be following me on this, but I know that a few of you out there are. So I assure you that people like Andy Constant, who I love and respect, by the way, is watching this aptly. Because if this takes place to the downside, what does end up happening is now we're on SPY, right? What ends up happening is SPY will do this kind of a thing, like down here briefly, right as it tests the half-hour and hourly trigger, but the end result is not boom, boom, down. It's actually woof. And I mean off the fucking charts to the upside. Do you understand what I'm saying to you out there? I need you to. And if you don't, that was pretty easy to look at. I mean, it's not really rocket science here. So now there is a fly in the ointment, right? There's a couple flies in the ointment. One, you know, you got people out there with some big fucking money on this trade. And I'm not talking about $1 million. I'm not talking about $100 million. I'm talking about fucking billions probably. And they're fucking pissed. They're raging right now. At this moment, there's an office somewhere. And there's a guy in there, and he's getting a phone call from like not an Ackman, but like, you know, the other guy there. Icon's calling, going, what the fuck is going on? And they ain't fucking around. These guys are serious. And so there's a little fly in the ointment right now. Jerome came out yesterday and said, get fucked. And then the ECB yesterday and this morning saying the same thing. So I don't know what happens here, but I'm going to tell you one thing. If these assholes get run over, right? These guys get run over, these Icon guys, they're going to be fucking pissed. Fucking raging pissed. I mean, this is the kind of shit that you would break a fucking desk down over. Like, this is your moment. Oh, yeah. So, how do you trade this? I don't know what to say to you. What I would say to you is this. You could put some really cheap-ass puts on. Like, I would put dirt cheap on. 5 cents, 1 cent. Like, it's that bad. Like, 1 cent, 5 cents, 10 cents. Because these guys can pull the rug anyways. These guys might be like, you know what? Fuck you and fuck Jerome. We're doing it anyways. Make one phone call and say, start selling everything. Fuck you, fuck Jerome, fuck the curve, fuck cuts. We're gonna force a cut. And in the face of all that, though, you've got GDP's gonna be cranking. You got Jerome and ECB and Canada saying, fuck you. And what can happen here is two things. The highest probability right now is we're going to squeeze some fucking faces off right here. And it ain't going to end. And it's going to be fucking nasty. There's a real good chance of that. And the other thing that can happen is that we, you know, do a quick rip down, they get out of their positions, and then we squeeze up. That's the option number 2. And then option number 3 would be, this is the least probable, but can happen. They just say, fuck it, and start selling the market. Fuck you, fuck the curve. We're getting a correction. We might not get our crash, goddammit, but we're going down to 485. Eat my ass. And that is real. Like, you got to tell you, man, these aren't, like, there's computers and algorithms, but there are some fucking egos out there, and they are fucking pissed. Now, you get a guy like Bill Ackman come into the fucking scene, and he would love nothing more than to fuck bend Icahn right over and butt fuck him. These guys you got to understand, these guys are fucking monsters. Like, they love nothing more than fucking each other. So even though you might be like, yeah, we're doomed then, there are some money people out there that are like, oh, hell no, I got a button over here too. And I'm going to go the other way and trap these guys and take all their money. You know, when you see a bull and a bear retail guy with $100 and $100, they fucking love to take each other's money. That shit never ends. That shit extends all the way up to the fucking top. These guys are fucking monsters, right? They're on the top of the fucking cake, so they have no problem stealing each other's cake, too, even at that level, at that height. It's for real. It is 100% for real, so we will monitor this and see what goes on and see how this plays itself out. You might be getting all bared up and shit, and you might be like, oh, I'm short as fuck down here. I'm short. I would be doing puts right here. I would not be fucking short on futures right here at all. Because if they blast us down and you're still fucking woo, making all kinds of money, and 3 seconds later it's woof, right up there, bring, you're getting a phone call. Puts, yeah, fuck it. Like buy a put for 10 cents, set a pre-sell, or a sell stop at the top for $1 or something. That's way better, way safer. So, anyways, this is a really cool cool moment in the market, by the way. You want to pay very close attention to this yield. Oh, wait a minute. You want to pay very close attention to this yield curve and what's going on with it, because there is a whole massive trade on. There's a whole massive trade on by market participants, or by larger market participants than you. Much larger market participants than you, by the way. And you can see it right here. You can see it on Bookmap. Fucking Bookmap is like, you know, these big banks, man, they are pissed. They want this no matter what. They are poised for this trade. They've been begging for this trade. They've been wanting this. They've been wanting to do this fucking trade since October of 2023. They think it's the cat's meow. So anyways, we'll watch this, monitor it closely. And they're throwing the kitchen sink at this shit. I'm listening to some shit in the background, and they're like earthquakes. They're like fucking Israel and Iran. I mean, they're just priming it all up. It's like full on fucking theater right now. And it all has to do with money, and they don't give a fuck about the yield curve. They don't give a fuck about Iran. They don't give a fuck about Israel. They care about their making their money, period. That's it. So we'll monitor this closely as the day moves on here. I mean, let me show you some shit here. Let me show you guys some shit. Well, let me show you guys some shit here. So you can see it too. Like they're all racked up. Like they're racked up on puts too. Let's look at Gamma right here. So the Gamma picks changed this morning, right? These guys, look at these guys. They have no VIG to the upside. Fucking calls, all the calls are gone. No more call Gamma up here, right? They're loaded the fuck on puts down here, and they want nothing less. They want nothing less than to blast through that 490 and then just start cratering down here. And this is the put wall, by the way, if you don't know it. But they want it bad. They want it. They can just taste it in their mouths right now. It's like they're just seething for it right now. 100% seething for it right now. They want paid. In this down here, this little bad boy right here, this is where your weekly trigger is. This is your weekly trigger right now on S&P 500 is at, I believe it's 485 or something like that. This is where it is on SPX. So they want the trade. They want to get paid. They don't care. So anyway, we'll keep monitoring this, see what goes on, see how it plays itself out. You want to keep a very close eye on the 10-year right here. This 10-year right here is key for you. Note this hour and half-hour trigger. You're likely going to get a squeeze up, but you want to see if that reverses. Whoop. And if that thing reverses to the downside, you're going to get a quick V-shaped recovery. Hold on here. Let me draw that out for you again here in a better way. So you got that. Here comes the cross. And then something like that, something like that, something like that right there. Right there. Bam. That's what you're looking for right there, that yield curve. Push up, then straight down to the depths of hell. How does that relate to S&P 500? Let me go back to the trigger screen. It relates to what we're doing right now. You see it right now? So you're going to get a little push up on the yield. They're going to blast this down, come straight back up, and then we're out of here. They don't care, dude. I'm telling you. They don't fucking care. All right, right back with you guys in just a minute here. Here, what I'll do is I'm going to send you guys. I'm going to send you guys this right here. I'm going to send you guys a chart so that you can have it at home, okay? I'll be right back. I guess we need some cheering right now, right? You guys ready for it?
Let's rock! Let's rock! Come on and boogie! Boogie down, one can't stop the best around. Boogie down, we'll run those coolers out of town. Boogie down. Airline, you ain't got no alibi. You ugly. What? You ugly. You ugly. You ugly. Your mama said you ugly. UGLY, you ain't got no alibi. You ugly. What? You ugly. Your mama says you ugly. Hey, stomp on, you gotta get on down. Stomp on, you gotta get on down. Stomp on, get down. You gotta stomp tonight. Hey. Your mama says you ugly. Hey, UGLY, you ain't got no alibi. You ugly. What? You ugly. You ugly. You ugly. Your mama says you ugly. LY, you ain't got no alibi. You ugly. What? You ugly. Your mama says you ugly. Hey, stomp on, you gotta get on down. Stomp on, you gotta get on down. Stomp on, get down. Let's rock. Come on and boogie. Boogie down, one can't stop the best around. Boogie down, we'll run those coolers out of town.
You guys ever seen this movie? It's like one of my favorite movies ever.
Says you ugly. Hey.
It's like one of the best movies. You guys ever saw Wildcats? It's Goldie Hawn, man. Some guy's in his office right now going, "What in the hell is going on here?" Hell yeah, Wildcats. Oh, what are we doing here? What's going on? We're going to find out real soon. Is this thing? Hold on here. What's going on with this thing? Can't seem to get this thing to start cycling. I don't know why. Come on now, cycle. Cycle. Well, Tesla's saying we ain't going nowhere. Oh! Oh! Die, Dixie, die! Die, Dixie, die! Come on, U.S. dollars, JPY, get down there! Roll, baby! Give me the squeeze! The VIX 9-day looking for a roll to the downside as well. Bulls apt attention right now. Apple's sitting on the cusp of getting rolled. Netflix on the cusp of getting rolled. BTSG, we're finding what's going on with that. AMC just keeps ripping. UNG, oh, US 10-year, sell it down to the dumpster. Squeeze them!
But I'm hopeful that U.S.-China relations improve, economic engagement improves, and we'll see.
Yeah, that's right. Pump it.
Climate for us. But right now, we're being cautious as we wait for some of those issues to reduce.
So dissuaded, but not totally deterred.
Exactly.
Bill Ford, CEO of General Atlantic, thank you very much for joining us today here in New York City at your Investor Day. We appreciate it.
I can't. I'm very busy in the background. I can't do anything right now. TSM I'll put on the screen, though, for you. Hold on. I'll put TSM up.
Up next, look at how tech is trying to expand its year of efficiency. Remember that from Mark Zuckerberg? Some companies now pitting employees against each other. That story's coming up.
We continue to watch the airlines this morning. United leads the entire group higher after these Q2 forecasts come in well ahead of estimates. Company slashing its expected aircraft deliveries for the year amid Boeing's quality crisis. Stay with us.
Bear's gonna love this. Oh. 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 Ooh. Oh. Ooh. Oh, right there. Oh. Oh, yeah, Bears. Oh, yeah, Bears. Oh, yeah, Bears. Ooh. Oh, 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 oh. They're right there right now. Bears are like, oh, I can taste it. You guys want to hear CNBC or do you want to hear some bear music just in case it happens? What do you guys want? You guys want the bear music on, or you want to have CNBC with their pump job going on right now? What do you guys want? Yeah, Randy ejaculating meme, bull music. Yeah, I don't care. We can play whatever you want. How about this? We'll start with some. You guys prefer CNBC or no?
Now to continue to pay more attention to actual inflation outcomes. It would be prudent to continue to consider the baseline forecast as just one input to policy decisions, or to consider other changes to the framework, including in communications, even as inflation continues to fall.
Oh, who is that talking? Yeah, CNBC is garbage, man. It's so garbage. It's always after. We should put BA up. We should put BA up as well. You know, TSM, man, is just like it's trading with Qs right now. I'll leave it up, but yawn. Let's look at BA right now. We'll throw BA up here. No offense to you out there for asking for it. BA, let's take a peek at BA right now. This one's juicy. Now this is beautiful. Now I want to show you this right here. This is BA, and I want to show you this. It's an important one. Well, damn it. God damn it. Dude, the moment I try to do anything, it's like, oh, you want to switch around? We'll switch around now. Now this is an important one. This looks very much like yield curve, right?
For employees now making a comeback in Silicon Valley. Kate Rooney.
See what happens here when that gray line crosses?
Hey, Sarah. Yeah, so we're hearing what's...
See how that gray line crosses? It just bloods?
It's back.
Gnarly, right?
Some of these tech companies continue to rein in costs during what's been multiple years now.
Let's take a look at BA.
Done this through layoffs. So stack ranking, it's sometimes called rank and yank. It's the practice of ranking your workforce pretty much on a bell curve and then cutting the bottom percentage of performers. Shopify with the latest.
Dude, all right. So sorry, I'm looking at BA. Let's look at BA really quick. So BA. You don't ever want to see this. This is bad, right? But further to that point, you don't ever want to see the cross. See the cross right here? Let's do this really closely here. See if we can switch down to that chart really quick. I'm in the wrong chart. Bottom right-hand chart. Okay. I got to get rid of this fucking sign down here. This is some shit we were testing out for new graphics, and I hate it. The sign that's down below down there, I got to get rid of it. That sign, it's got to fucking go. We were testing out different graphics, and it's dog shit. But what's important here is this. This is important. See that bad boy right there? Whoop. See that bad boy right there? That's what's going on with TNX, or 10-year yield curve. That's happening right now. That shit's going to blood to the depths of hell. I would not be caught short dead here on the market. I'll be honest with you. Between like you mean a wall. I mean, not what the technicals say, but there are some mechanics in the background that are really fucking bad. You see it right there? See it right there? That fucking gray line comes through here, and the yield curve is going to fucking crash. and fucking bears are going to get buried. I'm warning you. You got my warning. This is hot and live. And I want you to know something else. I said this yesterday at a conversation with Joe Dona yesterday. I said, you know what's different about us and everybody else? We put out expectations, and then we support it, whether they're good or bad, whether those expectations work or not. We support it by being live Monday through Friday, 9:30 to 4. And then also we've got pro traders inside of the professional traders inside of our Discord. David AMS, John L. We got Binky in there. We got Winky in there. We got people in there all night long, too, trading the market. So I think it's badass. I think it's super cool. So anyways, BA, let's take a look here. Expectations for BA. You ready? Expectations for BA. Whoop. Way down here. Way down here. Even though expectations are way down there, that's not today, is it? This isn't today, is it? That's down the road. And you see that right there? You see that big bad, like, go up here, go down, right? Go up here, go down, right? Go up here, go down. We got 1, 2, 3 to the downside. 1, 2, 3, right? 1, 2, 3. There is likely a recovery that's going to happen on BA. Likely a recovery. So let's take a look at it. Why there would be a recovery on BA. Even though there's a recovery likely on BA, it's never just straight down, is it? And we're bottoming here a little bit, and we're trying to test the hourly trigger. We got a lot of, this looks like, to me, it looks like a little bit of reversal going on, right? We got the hourly in the half hour going sideways. Now, we could continue to the downside with BA, more bad news, but there's a high probability of a retracement coming up. Not guaranteed. What I would say to you on BA right now, if 167 holds, if this holds, you are likely looking at a squeeze right about there before continuation to the downside. Now, if this is lost, then I am definitely wrong, and we're going to trade. Whoop. Ah, shit. This looks like shit. Sorry for my dog shit down there. We will trade 160 and likely 150. Snap above, snap up here, and then down to 150 for right now, okay? So this is the alternate path. This is the alternate path. And the overall path is still down. I'm still on the path going down for BA. I'm on the $96 trade with you. But for right now, just be careful of this trade right here. Be careful of that squeeze. See that squeeze up there? See that squeeze? You're going to get one of those bad boys. It's setting up. It's not guaranteed, but it's setting up. And I'm going to show you that right there. Whoop. Why is this fucking shit's not working today? See what I'm saying here? Something just like that. Get what I'm saying over there? Get it? High probability trade. White line. Squeeze for BA on tap. Let's take a look at something else here, too. Let's see if we can see if I'm right or wrong. I'm really right now. See that? See that bad boy right there? That bad boy is about to rip to the upside. You see that? See that hot sauce? When that daily velo starts turning around, whoop, and we start blasting up, at least intermittently, for a small period of time, a blast up. I didn't even see velo, and I'm like, yeah, we're pretty close there with that velo, guaranteed. Keep an eye on BA for a turn up. I don't know why they would turn up. They suck as a company. I hate them. But just keep an eye on BA here as well. Main screen. All right, so I got to get back to work. I'm building some bots right now with some developers, and I'm trying to get some. I got some hot sauce coming out there for you for the Discord. Hot sauce. Hot sauce. If we follow that track from last night if we follow that track last night, like I was telling you, I'm gonna be hanging some asses out there today. Hot sauce. I'm gonna be hanging up some bear coats. I'm gonna put some music on for you. You guys don't want to listen to the CNBC is fucking garbage. I'm sorry. I like if you're listening and then if you're on CNBC listening right now, I love you. I realize you can't do real reporting. You got to do it for the masses. I get it. You should just bring me on the show and have me be a host late night. You should have me on from like 10 p.m. to midnight. I'll clean up my voice. I'll stop swearing, I promise. All right, I'll be back. I mean, Jimmy's got to retire at some point, doesn't he?
Get along. Get along musically. Get along. Get along musically. Get along. Get along. Get along. Get along musically. 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 Get along. Get along. Get along. Get along. Get along musically. 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 Get along. Get along. Can't you see my heart?
Do you see that 4925 hiding out down here? There's a little level right down here hiding out.
I can see the light.
Be ready for a a dip and rip.
Your trail. Would you go with me to discover all the fantasies and all the dreams? Can't you see this sky is falling down? Can't you see us there, moving the clouds?
on some bear. I'm gonna put on some metal for the Bears. Hold on, I'll put some Bear Doom on. Hold on. just heads up here. Just heads up here out there. I'm about to buy some calls. Let me turn this shit off. Hold on here. Buy some zero dates today. Hold on 1 second. Give me 1 quick second here. I can't wait to get. So I got this like, dude, seriously. Hold on a second. Check. I'll get back on again. Whew. Man, my cord's all messed up. Dude, I've had a microphone. I've had like a microphone sitting in my office with a new arm and everything for like, I don't know, 2 or 3 months or some shit like that. And I still haven't hooked it up because I still haven't bought a fucking mixer for it. They have these like cheap mixers. They're like $100 or something, but they really suck. And like your cords, your mixing board, all that. You can't buy a nice microphone and then have like shitty cords and a shitty mixer. It doesn't really equate. You kind of need like everything to be awesome. Or there's no point in buying a great microphone. And it's a whole huge rabbit hole. Any of you guys that are out there in sound production or musicians know what I'm talking about. There's literally no point in buying a great microphone and then not having like great everything else, great interface, that kind of stuff. But of course, once you do that, it's like, oh, we're going from $100 to $1,000. Literally, like $100, $1,000, because you're like, hey, I might as well just get this one. Hey, I might as well just get that one. Maybe one day we'll have a band or something. So here we go. I am looking for a dip buy here. Now, I know some of you. So I know some of you are like, well, I'm looking to sell the market here, right, Cap? Crash, doom and gloom, all that kind of stuff. So I'm looking for a dip buy down here today. Give me 1 quick second. What am I doing? I'm wrong. Sorry, my thing is closed right now. Trying to do a bunch of audio work in the background. Hang tight here. So much doom. Look at Q's right now. Q's just looks so horrible. Look at it. Looks so vicious and mean. I might actually buy Q's. Q's might actually be the better buy. Dude, they're still charging bank right now for calls. What are these people doing? Like a 500C is 78 fucking cents for today. This is bullshit. Let's see where we're going to go. Where are we going today? 510, 505. Wait for me, Spoos. $504s aren't bad. They're 33 cents. And now 34 cents. Hold on. Wait for me, fucking spy. 34 cents? Oh, you fucks just took me for a penny. They just fucking took me. This is like, I swear they're listening. Okay, so I'm long a small position on 504Cs. Now this is kind of like the last dip buy, right? If you don't dip buy this shit and they start blasting this shit down, there's no point in buying a dip. They're gonna fucking rip this shit down to the depths of hell. So we're parked down here right now on right. Hold on a second. Let me go this over here. Right down here. You can see him right here. This is kind of it, right? We lose this shit, it ain't gonna be pretty, is it? It ain't gonna be pretty at all if this stuff starts to break. So I'm sitting on some calls here for reversal to the upside, and I'm watching right now Dixie get blooded here. See Dixie getting taken to the woodshed down here. Dixie should start collapsing here in just a few moments. The yield is getting wrecked right now. You can see it. It's holding on for dear life. I am long the S&P 500 again. So we'll see if this trade works out for me or not. BA, let's take a look at it. It's parked right now. TSM parked right now. GCT, not so good for a dip buy just yet. AMC having a great day out there. BTSG with a dip buy on the green bar right now. So looks like traders want to keep trading that bad boy. NFLX, still, like, they're buying it. Look at the green bar down here. They're fucking buying it right here. They're still, look at the green bar. Look at that Netflix down here. Look at it. They're fucking buying it, these scumbags. Goddamn bulls won't stop buying. Pissing off the bears here. So Netflix getting a dip buy. IWM getting a dip buy as well. Apple just kind of messing around over here. SPX Gamma looks really, really, really bad down here. But there's still no rejection, so I'm here for the dip buy to the upside. Look at SPX really quick. Hold on here. Close that. Let's take a peek at SPX. SPX looks so doomy. But you know what hasn't happened yet to SPX is it has not rejected with a new low. So I'm not really in the doom and gloom camp right now yet on SPX. Hold on here. The VIX 9-day not parking itself up. So VIX 9-day saying, yeah, fuck you. All the crashing's not real. What happened to the USD Japan right here? What happened, USD JPY? Bloodbath. Bloodbath in US dollar Japan pair trade. Congratulations if you took that trade. Dixie looking really, really, really shaky right now. Like it wants to get buried. And what's doing really well right now on that news? IWM. I would have expected IWM to be in the dumpster right now, and it's not, right? It's just kind of being bought. Qs. Right now, this is kind of the last place for the bulls. If they lose this, it's no bueno, is it? So this is the kind of place I'm going to buy on this dip here, trying to get a trade to the upside on Qs. Tesla, just hanging out. Tesla not participating to that downside move. I would have liked to have seen an opportunity today for Tesla to just be like, you know what? Fuck it. On fares have crashed. Let's just go down there and tag it. Didn't happen yet, so I'm kind of disappointed in that. Bulls just holding on. They're just like, fuck you, Cap. We're not losing 150, bro. So Tesla holding on right now. That's bullish, or at least non-participation at this point. I'm long right here. I guess if you're a bear right now and you're like, fuck you, Cap, market's going to crash. Your 500, 501 is not holding. We'll see how that plays out. Now, I'm not going to pay attention to this trade. I'm going to leave it on until 4 p.m. It's a 0 date for just today. If they burn, they burn. They're like 30 cents. It's not too much money, not too much risk in the market. But if, I want to say this, though, if you begin to see on a smaller time frame, this is a hourly line right here. If you begin to see some kind of a move up like that, move up like that right there, and you want to join me in the party to the upside, you're more than welcome to. I will likely add to my position if we do begin to make our way higher. Fucking at least if I'm goddamn watching, because and I've got 504Cs in here. So right there is where I am. And if we begin to blood it, it's not going to matter. They're 30 cents, dude. So whatever this thing is, and if they blood it down and squeeze it back up, I'll add some 0 dates if I can. The only problem that I have right now is I'm in the middle of a bunch of meetings, and I'm interviewing people right now. I'm doing pre-interviews with people because we've got some cool-ass people coming on the show, and I've got something launching for the Discord, so we're working on that as well in the background. So I'm not going to monitor this trade. I'm going to look at this trade. I'm going to come back to this trade at like 2 o'clock in the afternoon and see how it's doing. And I'll be right back with you guys in just a few minutes.
And going something you don't have to explain owning?
Yeah, well, I own this personally, first of all. This is a personal position. So I think, we love to own broad-based ETFs for the majority of our client base. So this is not a fiduciary decision. This is my decision. And so I think that, what you're pointing out, I mean, these things, I think you just don't like Elon. And so I think that if you separate yourself and say, look at this company, well, I think that's the truth, right?
I'm not
And so it's
showing sentiment. Everything I said is a
Right.
fact, Bryn. It's a fact.
I know, but he's a grown man, and the Joe Rogan thing is just like strange, and that was years
It's
ago.
not just Joe
And so I
Rogan.
think that if you just
Read
look at
Isaacson's
the
book.
company, and when you still look at the two companies where the best engineers want to work, is our SpaceX and Tesla. Because this is not an Elon show as well, although it feels that way. He has to be able to retain top talent. And I think as it relates to Tesla specifically, being pragmatic about the company, as I said, the chart looks terrible. And they are in a very murky situation right now because it feels like, are you going to be a car company that's balancing higher revenues, higher earnings and margins, and then also innovating at the same time with full self-driving, more energy and robotaxi? Or are you going to do a full pivot to robotaxi? I think if they come out and do that, that's a revaluation of the name on the downside because that is probably 5 to 10 years out. So
and by the way,
I think that,
by the way, sorry, Bryn, if this is principally a governance related story.
That's one aspect of it.
Sounds like it's a major one. However, you could, right? It's major.
Even put that aside, the fundamentals deteriorating. We've hit limit in terms of the EV adoption. They've got the oldest EV lineup in the industry globally. They've got 20% of their revenues coming from China. We've seen what China has done. Okay, we've seen Apple move their supply chain to India. And they've got better relationships and longer-standing relationships with the Chinese government. We've seen China. China is supporting their domestic producers that, by the way, make newer, more richer in terms of the accessories, in terms of basically even the range, so of their cars than Tesla. That's number two.
Yeah.
Number three. We've seen Elon just tweet out, "Oh, no more prices, we're raising prices." He lied. They're cutting prices. We would say big robo-taxi announcement. We've secured funding for the take private. The guy is a pathological liar to keep his stock price up. So forgetting about that, the fundamentals deteriorating. You've got lots full of EVs that are selling at major discounts from the major auto players that couldn't sell them. So the fundamentals are horrendous.
Yeah. So I think that in China, they actually
let Bryn go.
One more thing. It's like one more like buzz line. It's like, once again, you just don't like Elon, by the way. And so it's like when you look at
genius. I've said that repeatedly.
When you look at the EV market, they're actually continue to be with BYD the top selling brand in China. And so when we look at America, which is about 9% of the EV space, China, which Tesla was it's like the only manufacturing company that was able to build in China autonomously without having influence from the Chinese government. He has a very strong relationship. I believe they're about to announce they're going to be building their next gigafactory in India, a huge untapped market. And so I think that when you look at this company in the U.S., if this was a U.S. EV story, I would not own this name. I don't think Americans want to drive EVs. I think Americans don't want to drive EVs as their only car.
Other thing, let me just
but in
say
China,
something.
it's a very different story.
Well, let me just say something.
Hold on, let me work this in, and you can say what you want. Then we're going to be done. Adam Jonas today at Morgan Stanley. Why do we remain overweight Tesla shares? And look, he's been, skeptical along the way about, the repeated price cuts and all the other stuff. We believe Tesla has significant attributes to be valued as an AI beneficiary, but the company must first see stabilization in the negative earnings revisions within the auto business.
Yep. Right, he's not saying they haven't. Yep. But Bryn's entirely wrong about their ability to retain talent. If you take a look at Tesla, and you take a look at, we just had 2 critical people leave Tesla this week. Their turnover in their executive ranks and their engineering ranks is legendary, is unprecedented. So I don't know where she gets that from, but look at the facts. And I know it's maybe because I just don't like Elon that all these people are leaving, but I really had nothing to do with it.
No, I totally, I mean, once again,
the
he's
stock is
definitely
up. To be fair, the stock is up 750% over the last 5 years.
Exactly. Yeah. And I haven't been short over 5 years. I'm short now because it's all coming home to roost.
I understand, but there are periods of time over the last 5 years where notable people have been short and it hasn't mattered because their shorts have been proven to have not worked well.
Again, I haven't been short, number one. Number two,
I understand.
How many other EV manufacturers have we had over the last 10 years?
Bryn?
What, I don't even know what that means.
How many
Okay.
price cuts have we had with Tesla models over the last 5 years?
Steve,
How many cuts? How
Steve,
many,
wisdom is chasing you if you would just stop. Okay? Like, seriously. Like,
what the hell is she saying? I don't even get it.
Steve, we're going to take a break. We're going to take a break.
Just admit you're wrong and the stock is going lower. And I'll buy more lower. That's what you should be saying. Facts are facts.
There's no fact that the stock is
There
doing
are facts
anything
with
from
everything I said about the governance, about the price cuts, about his tweets that have all been wrong, about the competitive landscape, about the appetite for EVs. Those are all facts.
Bryn, we'll see.
yeah, we will.
Let's get the headlines from Kate Rooney. Hi, Kate.
Hey there, Scott. So Speaker of the House, Mike Johnson, released an outline today of a four-part proposal on foreign aid and national security spending. Aid to Israel, Ukraine, and Taiwan is split into three different bills. Then the fourth would be a combination of seizing Russian assets, forcing a TikTok sale, and putting more sanctions on Iran. Some of the money in those foreign bills would be positioned as a loan. Text of the bills is expected to be released later today. The Speaker faces stiff opposition from some far-right lawmakers. Climate change, meanwhile, will reduce the world's future income by about 19% by 2050. That's about $35 trillion per year, according to research backed by the German government. The report found while almost all people would suffer, the poor and developing nations would be hit the hardest. And Ford is recalling over 450,000 compact SUVs and pickup trucks in the U.S. due to a possible loss of drive power. The National Traffic Safety Administration said could be because of a low battery charge and affects Ford Bronco sport SUVs and Maverick pickups from 2021 to 2024. Scott, back over to you.
All right, Kate, appreciate that. Kate Rooney coming up. Chart of the day, United Airlines. That's soaring today on strong earnings. We debate it. We'll trade other stocks coming up, too, when we come back.
CNBC.
All right, let's get to our chart of the day. It is United Airlines today, and it is surging after its earnings. Look at that move. More than 14%, Joe T.
Yes.
You own the stock, right?
Yes, I own United Airlines. I own Delta, the Joe T ETF.
I threw the ball right down the plate.
I'm just steadying myself, Scott. It's been an interesting last 5 minutes here. But anyway, low expectations for sure with United Airlines, and that's lifted the stock here. Stock is trading well intraday. It's lifting all of the airlines, JetBlue, American Airlines. Delta already had more of a positive trend, more of a positive formation. The good thing, if you're looking at the price action from UAL today and interested in buying it, you have a nice point of reference because now you have a gap from 41.71 up to 44.11, so you can work against that.
All right, we're going to have the setup for more key earnings coming up. First, though, Mike Santoli is going to join us next with his midday word.
%50 off.
We are back. Senior markets commentator Mike Santoli joins us with his midday word. I won't ask you about Tesla.
Yeah,
we'll move past
another
that.
time. Yeah.
What's on your mind, though, today is, again, we have more earnings coming in.
Yeah.
You know, we're still trying to figure out what this higher for longer playbook needs to be for the market, and I'm not sure the market's figured that out either.
Well, the market hasn't figured that out for sure. Trying to find where the equilibrium sits if we're going to actually have this better economy with higher rates and a slower Fed. I think if all that were the case, the market would make its peace and it would be fine. But the way you see consumer cyclicals not loving this rate move, the way you see the home builders, the way you see the transports, it shows you that it's not without risk, that the economy, of course, does not manage to absorb it perfectly well. I think that's the bigger kind of strategic fundamental piece of it. The other one is the life cycle of a pullback, which is right now the dip buyers are patient and the sellers are motivated. And that's because you broke loose of that very, very tight uptrend, and now it seems as if you got to go test and test and test, and the prices have to travel a little bit further to find buyers' conviction, and the S&P 500 is right in the gap from the NVIDIA earnings.
I was going to ask you about that. Right. So we're barely hanging on to 5,000 here. What's the significance of that number, and what are the numbers that really are on your mind?
Well, 5,000 or thereabouts. I mean, people have made some fuss about whether that's where a little bit of the hedging by market makers turns a little more negative and not. I'm not too focused on that. I'm more focused on where were we on February 21st when we already thought the economy was good and the Fed was going to ease, and then we got NVIDIA's earnings. And the S&P went from 49.80 to 50.80 in a day. It was a 100-point gain. The index is up 3%, and that really was another momentum push for the market. Now, it doesn't mean there's magic in 49.80 if we get there. It's only a 0.5% from here, or whatever it is. But I do think it's interesting that we kind of go down in price and back in time and say, things better or worse than they were then.
Well, the broader point, though, is to Adam Parker's point now, the importance that NVIDIA may hold for the next major market move.
Yeah,
more so than looking at the S&P. Look at NVIDIA.
Sure, I think you probably wouldn't love it if that's really what we were waiting for, because they're on a January fiscal year and the numbers come in May, right? So it's like things are going to happen before that. But semis today, off the ASML number, obviously are a drag. It's not awful breath. It seems really orderly on the downside, whether you want that or not. At this point, while you're waiting for the market to get oversold, that's what we have.
I'll see you on closing bell. I appreciate it. Netflix reports on Thursday, by the way, and we're going to give you the setup next. We got Netflix reporting tomorrow before the bell, which means we need to hear from Jason Snipe first.
Yeah. I feel good about it. Scott. I mean, obviously, it's run a lot into the number. I think what you need to really watch for is page sharing. Content spend is down. Margins are expanding. Obviously, they added page sharing. They've added ad-supported tier recently. Those are the metrics that I think you need to follow. There might be some softness in adding new members, but I think page share will be the one to follow.
Weiss, you have this too.
I do, and small position, and I'm of two minds on this, which means that between Jason and I, we average one. But here's what I'd say. I'm only kidding.
His is the one, yours is the zero.
There you go.
Look, here's what I'd say. Expectations so high, I am concerned that they don't meet them. Similar to Amazon, by the way. The two in my portfolio have the highest expectations. But I do think they'll come through because content keeps getting cut back elsewhere. And if it doesn't, Netflix is one of those stocks that always bounces when they miss. So either way, I think we're okay. If it goes down, I will buy more.
25% year-to-date gainer. We'll see. I can't wait for that report as we sort of kick off those big tech names. Final trades are next.
pretty good burn, right?
Hope you'll join me closing bell today, 3 o'clock Eastern time. Josh Brown is going to be with me here at Post 9. John Mowry, Stephanie Link, T-Rose Sebastian Page. We're going to count you down to a very special closing bell. Don't want to miss that. Let's do final trades. Bryn, what do you have?
Yeah, I think the market's going to be choppy, stay high quality. Cows, COWZ focuses on the companies in the Russell 1000 with the highest free cash flow yield.
Weiss.
Only because I like Janet Yellen, the 2-year Treasury at a 5% yield.
The fact that you like anybody is breaking news, but thank you very much for that.
Well, don't count on it coming your way.
That'd be fine. That'd be fine. Jason Snipe.
I like AXB here. 12 million new members last year. I like this one.
Strong earnings report from Interactive Brokers. Stay long.
All right. We will take it right up to the finish today. I'll look forward to that on closing bell. The exchange begins right now.
Scott, thank you very much, and welcome everybody to the exchange. I'm Tyler Mathisen, in today for Kelly Evans. Here's what we got for you this hour. Has the Fed's base case shifted from later cuts to no cuts at all this year? Our market guest says it doesn't really matter for stocks. He sees them going higher basically regardless. He tells us why, and the one scenario that could change all that. Plus, credit card debt, record high at the same time. Using buy now, pay later to fund purchases remains very popular. Klarna has its finger on both of these trends, and the CEO is here with what he is seeing. And a push to on or near-shoring supply chains is making one sector increasingly attractive. We'll tell you what it is, the names that stand to benefit the most. But we begin with today's markets, and Dom Chu on the numbers. Hi, Dom.
We started off kind of positive, Tyler, but we've turned more negative as the day has progressed right now. So the midday action sees red across the board for all of the major indices. The Dow Industrial is currently down about 128 points. That's roughly a 1/3% decline to 37,675. So modest, yes. It's a little bit more pervasive for the S&P 500, which currently sits at 5,015. The trade there down 35 points. That's 0.75% declines there. Meanwhile, at the highs of the session, we were up roughly 26 points and down 44. So near the lows of the session right now. The NASDAQ composite really kind of pacing that lag to the downside. 15,684 is your trade for the NASDAQ composite. That's off 180 points, north of 1% declines at this stage. It's not all red, though. Check out what's happening with the airline stocks. The single best performer in the entire S&P 500 is United Airlines on the heels of a better-than-expected quarterly report and a better forecast for the current quarter as well. That has United shares flying high, up about 14%. American Airlines, Delta Airlines, Southwest, all part of that kind of ripple effect carry-through trade in airlines, so among the best performers in the entire S&P. Meanwhile, the single worst performer in the S&P 500 today is a Dow component, and that's insurance giant Travelers, which is down 8% right now to $205 per share. If you look at the reasons why, this quarterly report was worse than expected for profits, worse than expected for revenues as well, and that was due in large part to larger than expected losses due to catastrophe and weather-related events that really weighed on those earnings. So Travelers down about 8%, big Dow component. Ty, I'll send things back over to you.
Tom, thank you very much. The Fed Chair Jerome Powell's latest comments yesterday may suggest that the Fed's base case has shifted now from later or fewer cuts to no cuts at all this year. Our senior economics reporter Steve Leisman is here with the latest, and for the potential market impact, we're joined by Andres Garcia Amaya, CEO at Zoe Financial. Steve, let me begin with you. What did Powell say, and how big a sort of textural change is it?
It's pretty big. I mean, it's not. It's nuanced in the sense that he went away from saying that cuts were likely, Tyler. But he didn't say they were off the table at all. But this new rhetoric where they're mulling not to cut at all this year, I think it raises the question of whether they're overreacting to recent data and have changed the goalposts. Take a look at this data here. In March, the average Fed official forecast core PCE would end the year at 2.6. It's likely the first quarter average, after stalling a little bit, is going to be around 2.8. And while it's true that progress has slowed, the Fed is just 0.2 of a percentage point from its year-end target. Now, in the context of falling to 2.6, the average Fed official had forecast 3 rate cuts, or 75 basis points off the top. So should rate cuts be entirely off the table, with inflation running just 0.2 hotter than forecast for the entire year? Now, to be sure, the Fed had warned it wouldn't cut until it had the confidence inflation was moving to target. In answer to Tyler's question, Fed Chair Powell yesterday said recent numbers had undermined that confidence. While he didn't rule out cuts, he also didn't repeat prior language where he said they would likely be appropriate this year. But Krishna Guha of Evercore ISI criticizes the Fed, saying it's unfortunate the Fed has slipped into a phase of elevated data point dependence. Not data dependence, but data point dependence. He and others point out that the case for cuts is deeper. It has to be deeper than just recent numbers. Let's count them off. The Fed's own inflation forecast sees hitting the 2% target only in 2026, a year and more away. Powell said the Fed didn't have to wait until 2% to cut. Rates, and this is the big one, are at the same level as they were, the same restrictive level, when inflation was much, much higher. Now, Mohamed El-Arian, our friend here at the show, has criticized the Fed for talking too much. That could be true. But it might be more precise to say that the problem is not talking too much, Tyler. It's reacting too much.
Very interesting. So you've really got rates where they were when at the peak, when inflation was 8, pushing on 9%.
Exactly.
And now it's come down, and so you've got a real rate of return that is high.
I mean, would you lose the kingdom for want of a horse, or 0.2 of a percentage point of CPI?
Yeah.
Or PCA?
You were sort of nodding your head when Steve said that Mohamed El-Arian said maybe the Fed's talking a little too much.
Well, I think they were a little bit too dovish maybe getting into this year, and now they're kind of reacting to your point to what retail sales, jobs, something like 3 data points. It seems to have re-anchored a little bit. Ultimately, if you kind of read through the noise, if the economy holds up and inflation takes a little bit longer, I think the markets will hold up. They're now having a little bit of indigestion because of the change of language. But the Fed doesn't control what GDP or earnings are going to do. Maybe they did a couple of slip-ups one direction, and now they're kind of overreacting in the other. But they don't control, right, what earnings or GDP is.
Is the hiccup that the market has had, I'll get both of your opinions on this, do you think it is largely predicated on higher interest rates?
I think that if the big change would be if they now tell us that they might have to hike. I think that really would be a big change.
Otherwise, you think the market can continue to make headway. You've got a good economy, you've got good corporate profits, you've got inflation, okay.
Keeping all factors the same, meaning economy seems to actually be reaccelerating a little bit. Yes, inflation is a little stickier, but it's not necessarily reaccelerating significantly. I think the market holds up.
Steve?
I think there's a lot on the market's mind right now. I think it's a little confused as to how to think about what's happening in the Middle East and the geopolitical concerns and risks. I think the sell-off we have, guys, if you go back and just look at the S&P back to Thursday, the 3 or 4% sell-off we've had in that has been mostly a flight to safety, right? You had that, and then you had a decline in yields, and now we're back up in yields. So the market went from being concerned about, in a 2 or 3 day span, being really concerned about a regional war in the Middle East, to now having to stomach and figure out how to digest these higher rates. I think higher for longer is probably a pretty good bet. What I'm interested in, Tyler, is whether or not the same investment portfolio that you had thought about for a Fed that was cutting rates will suffice for a Fed that's not cutting rates.
Elaborate a little on that.
Well, I just want to know, there was a play on utilities for rates before rates were going to come down. Now they're coming down. I don't know, maybe utilities is something out of favor. The interest rate sensitive sectors, I think they're going to be hit a little bit harder. Maybe the autos, maybe the housing. A lot of this is speculative because at the same time you battle these higher rates, you have what Andre was talking about, which is this better economic growth and earnings.
I work on an investment committee for a charity on which I serve on the board. And we were having a discussion last night about whether, okay, we've got X in equities. Maybe we should take a little off. We're up above sort of our upper bound there and move it into a 2-year treasury at 5%. Yeah. Sounds like a pretty good little move.
And I'm just going to, before I answer, underline that, which is higher for longer means the challenge to stocks from the risk-free rate goes on for longer.
Yeah, no, I think if the 10-year yield continues to go up higher, you do have options all of a sudden, right? And I think that's fair. There's what if rates go up another 1% from now? That does change the picture versus, is this just volatility of language change for the Fed, right?
Well, let me ask both of you guys this question. When the yield curve inverted, there was a lot of hand-wringing that this is bad stuff. This is awful. Recession's coming and so on and so forth. The yield curve's still inverted.
Yeah.
And there's no recession.
You know, what's really interesting is that how many people said the Fed were wrong in raising interest rates to where they are now? You're going to kill the economy. Look what you're doing. Inflation's still fairly sticky where rates are now, and the economy's been fairly resilient. So, one, maybe their language has been off, but directionally they were right. I mean, it's fair to say up to now, it's not like they went too far. If anything, maybe they could have gone an extra 50 basis points and it would have been okay. Right? So, to your point, I think it is interesting.
So your worry is that basically that things can move along nicely unless the Fed gets into a situation where inflation kicks up and they have to boost rates, which would be a pivot, which would be a dangerous thing.
I think that would de-anchor the whole narrative, and you would then have to make assumptions of multiples, et cetera, that look very different.
Yeah, there's an assumption out there, Tyler, that the reason why the market has not sold off more in the face of what seems to be a pivot from Powell here is because he's not talking about higher rates. And Jefferson yesterday morning made an important comment that was sort of both sides hawkish and dovish. It was dovish in the sense that he said the current restrictive rate should be sufficient to bring inflation down to the goal of 2%. That same sentence, though, you can read the other way by saying the current one, not a higher one. So in that sense, it was dovish, right to Andre's point, which is that they're not talking about higher rates.
Their prediction on 2% isn't until what, 2026?
I really think they. Look, I love talking to Fed officials. I love it when they talk. I think I'm having a discussion with somebody here and others about whether the Fed talks too much. I don't think they do. The question to me is, do they react too much? Do they end up, one way to think about it is pick a forecast and go with it. And don't waffle along. If you've ever driven a boat, if you're off by a couple degrees now, you can adjust a little bit later, but you don't have to turn the boat, and you never want to turn the boat.
If you stay on that a couple of degrees off for a few months or a few days.
Especially, by the way, in my one effort to fly an airplane, which I should never, have done. But it's like a little bit of an adjustment goes a very long way. So in that regard, if you haven't, a lot of people do have this forecast that inflation is going to come down. Powell showed absolutely no confidence in that forecast yesterday.
Yeah. Final thought.
Significant.
Yeah, look, I agree that maybe they're saying too much and too specific.
Right.
Keep it vague, keep the optionality, be data dependent so that the market could focus on earnings and not get distracted by every word that they say.
Andres Garcia Maya, thank you. Good to have you in the house, and you too, Steve. Good to see you, my friend. All right, one of the most rate-sensitive areas, obviously, in the entire economy is the housing market. Mortgage applications jumped 3.3% from the prior week, despite higher rates. We have the 30-year fixed loan now sitting at 7.5%, up more than 8% since the beginning of April. So how much higher can rates go if the Feds hold on this year in terms of interest rates? Joining us now is Matt Graham, Chief Operating Officer at Mortgage News Daily. Matt, how do you explain why mortgage applications went up in the face of rising rates? You would expect probably the opposite.
Yeah, I think when it comes to mortgage applications, probably better to take a longer view and not get too bogged down in nitty-gritty week-to-week movements. It's easier to sort of line up those correlations in the bigger picture. So a one-week change can end up being noise in the bigger picture.
So what does the longer view tell you?
It never tells us anything about the future, but it does tell us that rates have absolutely crushed transactions on the refi side of the market, and they haven't been too kind to the purchase side either. I remember, this time last year, we were thinking, okay, MBA numbers are about in line with their long-term lows, shouldn't get much worse. And then it ended up getting much worse because rates went even higher. So, there's almost nowhere to go but up at current levels.
What is the point at which interest rates literally crush the mortgage application market? We're at 7.5% now. Some people would say 7% was that threshold, but obviously it seems not to be. Is it 8%? Where?
I think a lot of people would argue that we've seen it already last year when we hit 8%, and to a large extent, we're in the middle of it right now. The people that are driving demand on the purchase side are people that really need to buy a home who aren't really letting interest rates enter into their decision making. So, I don't want to jinx it and say we're at rock bottom, because things can always get worse in some way, but not a whole lot worse than they are right now in terms of what rates are doing.
I take your point, and I agree with you. I mean, we're at the absolute, I guess, typical peak of housing transactions. We're in the spring. I mean, it's March, April, and May. That's when people are buying and selling houses. And so it stands to reason that, well, if you need to move or you want to move this spring, now's the time you're going to do that. Now's the time you're going to apply for a mortgage, and you're just going to say, okay, that's what I've got to pay. I figure that into the total cost of the house I'm buying, the operating cost of the house I'm buying, and I proceed in the hope that in 2 years' time or 4 years' time, I may be able to refinance.
However long it takes, yeah. Yeah, and that's a paradigm that has been with us, for most of us for our adult lives, but it's one that people need to consider might be a little bit different moving forward. And to your point, maybe it's not just 2 years, maybe it is 4 years, but at some point you should have the opportunity to refi into lower rates.
Why have house prices stayed up as well as they have we're talking about transactions and mortgage applications. They seem right now to be a little higher than they were, but you call that noise. Why do you think house prices, which typically would be dented by rising interest rates, haven't been so much?
Yeah, multifaceted problem probably, and I'm not a housing economist, but the thing that I understand that is most commonly said is an inventory issue when it comes to prices. And we also don't have a mortgage meltdown this time around. This isn't 2007-8 where there's a crisis of confidence in the mortgage market and the housing market. Housing is still seen as solid, underwriting standards are solid, and people aren't as worried about a big drop in values.
Your best guess, we're at what, 7.5% now on the typical 30-year mortgage. What do you think the range is for interest rates this year?
Yeah, great question. That 8% upper bound, which lined up with 5% 10-year Treasury yields roughly, seemed to be a buying opportunity as far as investors were concerned. So I think that's a pretty solid upper bound. It could drift a little bit higher than that, but then you get into structural problems with the mortgage-backed securities market. So let's say 8% on the top. And really, without instilling too much hope among the mortgage audience out there, I still think that rates could go down to 5%, even below, because once the thing turns around, once we see those monthly inflation numbers do what the Fed has been waiting for them to do, the market's going to know that. And when the big shift happens, when shelter inflation allows CPI to come down to annualized 2% levels, the game will be on and rates will move down very quickly. And it wouldn't be a surprise if the lower end of that range is 5%, maybe even slightly lower.
Very interesting. That would be a big, big move, 250 basis points from where they are right now. Matt, thank you very much. Matt Graham with Mortgage News Daily. Appreciate it. All righty, coming up, my next guest company serves 150 million consumers worldwide, one of the most recognizable names offering buy now, pay later, and they're unveiling a new credit card today. The CEO of Klarna joins us next. Plus, the co-CEO of Morgan Stanley's real estate investing business is here. Megatrends benefiting investors in that space. We'll talk about that. The opportunities for investors, the fallout from the Baltimore Bridge collapse ahead. The exchange is back after this.
This is The Exchange on CNBC.
Welcome back to the Exchange, everybody. Recent retail data showing a resilient U.S. consumer sustains spending, but there's more to the headlines than meets the eye. Government data show credit card debt ballooned to a record $1.13 trillion last year, and more than a third of Americans are using a buy now, pay later service to fund purchases. This according to Bankrate. My next guest is well-versed in both. Let's bring in Sebastian Semiakowski, co-founder and CEO of Klarna, which offers buy now, pay later services and is introducing a new credit card here in the U.S. today. Sebastian, welcome. Good to have you with us. Why don't we start by explaining what the credit card does, who can get it, what its features are, and why you think this is a good time to introduce the same.
That's a great question. Look, this is an industry that unfortunately has been filled of cynics for a long period of time. And as much as there's been talk about, better financial products for consumers, most of the credit cards in the markets have tons of features that are set up to maximize exactly that debt mountain that you're talking about, whether it's revolving, whether it's pushing a credit limit in your face, all of these different tactics, right? And I find it very interesting. McKinsey back in 2015 already identified that there is a large group in the U.S. of consumers that are very, very tired of these practices, right? And they call them self-aware avoiders. They're looking for simple and transparent fees. They're looking for avoidance of mishaps to trigger fees. They want a payoff horizon, so like clear installments and swipe to installment, right? So there is a huge, and they're 20% of the American population that you would put in that bucket. So that is a consumer tired of those practices and looking for a different product.
And this different product is different how?
Well, I mean, actually, it may sound as a simple thing, but basically, you always have the option to choose debit or credit. You don't do revolving at all. The revolving is a very confusing concept for consumers, right? You get that bill at the end of the month, you pay a little bit less, you don't really understand when you're going to pay it off. Here, it's fixed installments per transaction, so it's very clear, very easy to understand, and the whole product is built in a way where you avoid a lot of fees. I think a lot of us may remember how carrier billing used to work, 10, 15 years ago, very, very intransparent, very hard to understand what you were actually going to pay every month. And now, and then other products came with much more simple data plans, it's the same transformation that we're seeing in credit cards.
And no annual fee, no application fee. You can use it anywhere Visa is accepted, and you get some cash back things. Now, do I have to have been a buy now, pay later customer of Klarna or some other kind of customer of Klarna to apply for and get this card or not?
So over 30 million Americans have used Klarna now, which is pretty amazing. It's our largest market. We've been profitable here for 5 consecutive quarters. And so, yes, I mean, the main way people are going to find out and use Klarna and use the card that you're referring to is obviously through the fact that they have tried us. The more than 50 of the top 100 U.S. retailers, Macy's, Sephora, Uber, Airbnb, all of these merchants that, offer Klarna today. So that's going to be the normal way in which customers are going to engage with Klarna initially, and then we offer them this opportunity to use Klarna everywhere.
Does being a user of buy now, pay later services help one's credit rating or hurt it? Just being a part of it.
Currently, there's actually not real reporting yet to the credit bureaus. There's been a little bit of discussion in the industry what should happen about this in the former. I mean, I find U.S. system is very odd for me as a European that you have to borrow a lot of money to get better credit rating. It's a little bit odd for us coming from Europe where it's the opposite. By not borrowing, you get better credit rating. So, we're trying to adapt ourselves to that U.S. reality. But obviously, over time, we want to make sure that this product also contributes to a better credit scoring.
Buy now, pay later. Explain it to me, because I worry a little bit that people think, okay, I can buy something here and I pay later, and if I do that, I am not going to accrue interest. But boy, a lot of people think they are going to be able to make that pay later payment, but can't.
Well, no, that's true. I mean, obviously, in a market where credit cards are so prevalent as the U.S., right? I think some of us may remember back in days when you used to swipe your card, you would push 1 for debit, 2 for credit. That is very, very critical because that actually led to people borrowing less, building less balances on the credit cards. And basically
because they use debit. Because they use debit.
Because they use debit occasionally and occasionally credit, which is something Klarna offers. We offer both debit payments and credit payments. And then when you use credit, we don't do revolving. It's interest-free. Especially if you do like the standard paying 4 installments that we do online. and then only would you like to do longer term financing, we may offer products on a financing cost. So it's but it's fixed installments. That's very, very critical that you have a fixed time period to pay it off. So what we see is our losses are about 30-40% below credit card industry standards, which to me is like really the evidence that I need to show that our users are more responsible credit users, and they have better outcomes. They have less debt. The average outstanding balance with us would be, $100, $200, like maybe $5,000 on a credit card or more, right? So the product is simply better, but you have to sacrifice revenue for that. We have to sacrifice revenue. It is a less profitable product than a subprime credit card set up to maximize people's debt and the revolving and the balance that they build up. But long term, we see there is a huge group of consumers in the U.S. looking for a healthier alternative. They want to have credit occasionally, but they want to be in charge. They want to be in control of it.
You have a very interesting company. I mean, there is that consumer-facing part of it that we're talking about right here, but there is also your big part of your business is payments processing as well, and that's kind of behind the scenes, but an extremely important part of your business. The natural question: you're a private company now. How long will you be a private company, and do you entertain thoughts of going public, and if so, how soon?
No, that's a very accurate description. So I think about ourselves actually as a third-party network. You have Visa and MasterCard, the full-party networks. You have Amex, PayPal, and Klarna as a third-party network. We have the direct relationship with the consumers. We work with partners like Stripe and Adyen and many others on the merchant side. And it allows us to build better consumer services faster. Like, I actually think the hidden secret I'll share with you that nobody knows about Klarna, I think is really interesting. We have SKU-level data on every transaction. So when people look at the transactions, they can see exactly what they purchased, not just the amount. Gives a much richer consumer experience. Is very valuable for the consumer. So we can really differentiate in a very different way. And we're building what is maybe one of the few new emerging payments networks that have happened in the last decades. And from an IPO perspective, I've answered that question a few times. It's not unlikely that it's going to happen fairly soon. But we haven't commented more in detail than that.
Well, I thought you had forgotten my question about the IPO there. I was going to have to remind you, but you remembered and you gave an answer. Thank you very much. We appreciate it very much, Sebastian. Thank you so much.
Thank you for having me.
All right, coming up, President Biden has a new mega donor, and it's a surprising one. Given the donor's family history, we'll tell you who it is, what it means, possibly, for the 2024 fundraising race ahead. We're back after this. Welcome back to the exchange, everybody. Markets right now, there's the Dow down by 2/100. So I'm going to wait. Let's see if it comes to green. Come on, baby. Nope, not going to do it. I got to move on. And the S&P off about 1/3%, and the Nasdaq the biggest loser, but a modest loser, down 0.71%. Nasdaq on pace for a fourth straight day of losses, which would be longest losing streak since early January. Just want to draw your attention now to the 10-year. The yield there hitting an intraday high of 4.684. But now around 4.6 as oil takes a leg lower. Crude now down about 3%. Interesting sort of comparative charts there. Now to Kate Rogers for a CNBC News update.
Hi there, Tyler. Senators are now being sworn in as jurors in the impeachment trial of Homeland Security Secretary Alejandro Mayorkas. He faces 2 articles of impeachment, refusing to comply with federal immigration laws and allegedly making false statements to Congress about the Homeland Security Department. But the Democratic-led chamber is expected to vote to dismiss or table the articles. Russian operations targeting the upcoming U.S. election have started. That's according to a new report from Microsoft, which found Russia-linked accounts were spreading divisive content to Americans, though the activity is slower than past elections. The Kremlin claimed last month it would not interfere in the November elections. And sales of super yachts took a dive last year, falling 17% as sanctions against Russian oligarchs and soaring costs hit demand. That's according to a report from Super Yacht Times. In particular, sales of the largest yachts over 650.
What's going on out there, boys and girls? Sorry, I'm just trying to check in really quick. I thought we were crashing there. Maybe not, huh? Maybe not yet. Still some risk up here to the upside, so be careful. Whoop, right in there. What up out there? What's going on up there? Rage. Rage. What up out there? Get on Twitter and say, Captain, you think I'm badass? Go out there on Twitter and say, CaptainJimJames is a badass. I thought it was all doom and gloom out there. What up, Jimmy Barry? What up, brother? All right, I gotta get back. You guys following that white fucking line from the market brief last night or no? All right, so listen up. I'll be back. I'm in the middle of a meeting. I gotta get back with you guys in just a minute. I love you guys. I'll do that, Jimmy. I got you, brother.
bostonwill.com.
Welcome back to The Exchange. Pandemic-related global supply chain snarls have mostly been corrected, but our next guest warns that a new wave of headwinds and big fundamental changes, including disruptions in the Middle East, the key bridge collapse in Maryland, more tariff warnings, companies moving production like Apple's potential move to Indonesia could throw off things again. She's still managing to find opportunities, though, in real estate broadly. Joining us now with how to invest in the supply chain of the future is Lauren Hochfelter, co-CEO of Morgan Stanley's Global Real Estate Investing. I thought it was very interesting, and I guess it is intuitive, that you view the commercial real estate market as bifurcated. There are areas that are challenged, very challenged, and the others that are anything but challenged.
Absolutely. Look, I mean, let's remember there's a big difference between changes in interest rates and changes in behavior. And changes in interest rates affect all asset classes within real estate, but we look to invest in sectors that are benefiting from changes in how people behave, how we shop, how we want to live, where we want to work, and all of those things shift demand in a way that has a profound effect on real estate.
And so I'm guessing that you're seeing more challenge in the conventional commoditized office space markets, maybe in large metros. Yes. You can name some if you choose, and really incredible growth opportunities in warehousing, and over 55 living environments and so forth. Two sort of strange bedfellows, I guess you'd say.
Absolutely. You sound like a real estate investor. So
I'm
yeah.
also over 55.
Look, I think on the industrial side, it's really three things that we like about it. One is e-commerce growth, right? So as we've been buying more and more of our goods online and demanding them faster and faster, those warehouses that get those goods to our front doors every day have been exploding. But the second one, and you referenced this up front, this reconfiguration of the global supply chain. I mean, the supply chain of the last 20 years will not be the supply chain of the next 20 years. And that is having profound demand impacts on industrial.
Tease that thought out a little bit. You know, the supply chain has basically been, to oversimplify it, a lot of it has come from China to Europe to America, whatever. Yeah. But now you're having a lot more onshoring of production. Yeah. The CHIPS Act is going to mean a very different change there. Automobiles being manufactured here in the United States. So what does that mean? I drove out Route 80 today, and there was a big, last night, and there was a huge new Prologis, is that how you pronounce it? Prologis warehouse. Yes. Right on Route 80. Hadn't been there 5 months ago. Where did that come from?
Yeah, well, look, I think there are really two things that are implicit in what you're saying. The first is we're doing a U-turn on globalization, right? Shifting where we manufacture goods away from China. And the second is we're seeing an increased supply-driven event shock, right? So Baltimore Bridge, tragically, trade disruptions in the Middle East, Panama Canal. By the way, COVID, when we couldn't get protective gear. So all of these event-driven shocks are forcing companies to diversify where they manufacture their goods and how they get them to the end consumer. All of that creates more demand for industrial.
More demand for industrial, more demand for warehouses, more demand for manufacturing ability, data centers. I mean, there's another sea change, what AI is meaning to the need for data centers.
Yes, absolutely. And look, we're seeing automation inside of those manufacturing warehouses and distribution warehouses as well.
So you find investment opportunities for your clients, right? That's basically what you do?
That is what we do.
That is what we do. Talk to me, and if a client comes to you and says, well, how's the New York office market going to do? How's Boston? How's San Francisco going to do? What are you telling them?
Well, look, we've office is experiencing a fundamental sea shift. And I think it's really two things. The first is a dramatic demand reduction, right? So work from home, less demand. But the second thing is, and I think this is really a long time in the coming, is an acknowledgement of how capital intensive office is. So we really sold down a lot of our commodity office, most of our commodity office before COVID.
Capital intensive because it's so costly to buy, to build those
You are
those offices?
constantly investing capital to get tenants and keep them in your building.
Keep them in the building, upgrading facilities, so on and so forth.
Yeah, I mean, we like assets where you can take cash out instead of putting it in.
Yeah. So that's what you would say. It's structurally stressed. It is the business model is challenged because you have to put capital in constantly as opposed to a different kind of commercial warehouse and industrial property, right?
That's exactly right, but let's be clear, you can't paint a broad brush.
Right.
So we're seeing a dramatic demand consolidation into the best of the best office assets. And so even take San Francisco, which is the worst office market, among the worst office markets globally, and even there, we own the highest quality office buildings. We're getting rents today above pre-COVID. So you really see the consolidation into the best of the best.
Quality has value.
Quality has value.
So give me, you said San Francisco may be the worst of the domestic, maybe one of the worst in the global office markets. Give me a couple of the office markets in the United States that are doing better than average. What are the hot ones now?
Well, look, I think
Charlotte, Austin, what?
You have to look at both demand and supply. And so I think there are markets like Austin that have demand, but they've had an extreme excess of supply. So that makes it tough. I think you've seen markets that were really never on the planet for institutional investment, like Miami, that's seeing substantial office demand growth and still has relatively little supply of good
I
products.
have to leave it there, Lauren Hochfelder. Thank you very much. It's shocking that builders would overbuild. It's shocking, shocking, shocking. Of Morgan Stanley, we appreciate your time.
Thank you so much.
All right, speaking of office real estate and company shifts, Google laying off more employees, this time across its finance and real estate units. This according to reports. Some roles will reportedly be moved to places where Google is investing, such as India, Chicago, Atlanta, and Dublin. All right, coming up, $930,000 is how much a Republican mega donor's son gave to the Biden campaign. The who, the why, and the what it means for the Biden-Trump rematch next when the exchange returns. Be right back.
CNBC.com/20.
All right, welcome back to the Exchange. The Biden campaign has a new and perhaps surprising mega donor. A new piece on CNBC.com examines the $930,000 donation from Skydance CEO David Ellison. Don't know the name? Well, you might know this one's the son of Oracle co-founder and Republican mega donor Larry Ellison. Joining us now is CNBC.com's political finance reporter Brian Schwartz. This is a curious move, as I think you point out in one of your dispatches, Brian. This would be like one of George Soros' sons contributing to Donald Trump.
Yeah, it's a big deal. It's for the Biden campaign because really this was an effort to get David Ellison's support, that it was coming from people like Jeffrey Katzenberg, who was actively working to get David to come support Biden's team. And that led to this over $900,000 donation to the Biden Victory Fund.
Why did he flip? Or maybe he wasn't,
Well,
he wasn't a Republican donor before, so I shouldn't say flip.
Well, that's right. We're not exactly sure whether he flipped or the reason why he definitely came over from a policy perspective. But again, this was really a push that came from the Biden side to get David Ellison to come over and support Joe Biden. You know, we have a scene in the story where David Ellison actually came to an event, a private event featuring the president himself in December. And that move to get him just to come to that event started with a little bit from Katzenberg and other political donors just to get Ellison to come support Joe Biden at the end of the day.
Let me just ask the question. I am not implying anything. I just do it out of my typical skepticism. His company, Skydance, is apparently making a bid for Paramount and National Amusements. Am I right on that?
Yeah, that's right.
Would there be any connection to this donation and that move, which might require some governmental approvals?
Well, it's unclear, but it is interesting that the donation arrived as these reports started coming out about that deal. We're talking about the deal involving Skydance, Paramount, and National Amusements. So the donation came in the early part of the first quarter of this year. And so, you know, it is interesting that it's kind of coincides in a way with timing of how all these reports are coming out about that deal. But it's unclear if it's exactly tied to any potential regulatory scrutiny under the Biden administration or maybe even a Trump administration down the road.
All right, time will tell on that. Is the notion that the big rainmakers like Jeff Katzenberg would be involved in trying to recruit a donor like Mr. Ellison, does that suggest that Katzenberg and other rainmakers in the Biden camp will be doing the same with other donors who might be on the fence or who might be disenchanted former Trump backers?
Yeah, that's right. We've done reporting on this and other stories about how Katzenberg and people in that orbit have been actively working to bring over people who used to support Nikki Haley. Remember, she was in the primary taking on Donald Trump. And so they've been working the phones on this for, I would say, over a month. And it's panned out for them in some ways, but I think there's still time to see how many of these people come over and give to Biden or even endorse him, because that does put them into sort of a kind of a political bind. If these are folks that lean toward the Republican side of the political spectrum, you know, there are questions as to whether these folks are going to come and give a lot of money, endorse Biden, or do nothing and move just to help Republicans in Congress instead.
I have to leave it there, Brian. Thanks very much. Good reporting. Appreciate your time today. Brian Schwartz, CNBC.com. You can see the full story there on CNBC.com. Coming up, Jay Powell's comment about inflation yesterday, further dampening the rate cut expectations for this year. But one strategist says the timing doesn't matter for tax-exempt bonds. He'll explain why when we return after this. Welcome back to the exchange. The municipal bond market starting off 2024 at the highest yield since 2011, with year-to-date inflows topping $10 billion last week alone. And as the Fed dials back rate cut expectations, our next guest says their delay has only made the muni yield story more compelling. For more here, we're joined by Dan Close. He is the head of municipals at Nuveen. Dan, welcome. Good to see you. And since the end of 2011, muni yields are even higher. By how much?
You know, if you look, and first of all, congratulations on 35 years.
Oh, thank you. 35th year here at CNBC. Not for me, but for CNBC.
And thank you so much for having me on the show. I mean, if you look right now, the muni market has really adjusted to the Fed being higher for longer. We've had about a 40 basis point backup alone this year in 10-year muni yields. So if you look at where we started the year, highest yield level since 2011, and we're 40 basis points better. And so the reaction function of the muni market has been to go in more. We've had $10 billion of flows into the municipal market on a year-to-date basis, and investors are looking at this and saying, if I like the market to begin the year, 40 basis points higher.
I ought to like it even more now.
That's exactly
so the phrase that pays here is always higher for longer.
Right.
Let me ask you as an investor, should I go longer for higher? In other words, go out in duration to capture that increment of yield, go out from a 10-year to a 20-year, or go for a 10-year from a 2-year muni because the difference in yield is so much more appealing?
You know, on the municipal yield curve, that's absolutely the case. We don't see that on the Treasury yield curve. On the municipal yield curve, we have this great upwardly sloping curve. So right now, our strategies are focused on being in that, call it 12, 13, 14 years and on out, because you are really getting paid to take duration. You are really being paid to go out a little bit further. That's just not the case with the Treasury curve.
Right.
So we're really encouraging our investors that could go in and take that duration risk to push out a little bit more, because you're certainly being...
I actually did my homework.
That's exactly it.
Take a picture of that. Look, I just want you to see. I took a picture of that. As I was thinking of that, I'm looking there, and it is really an upward sloping curve compared with the negative curve for Treasuries.
Yeah, that's exactly it. I mean, if you look at municipals on a tax equivalent yield, they are far outpacing anything you have in the U.S. Treasury market, anything you're seeing in corporate, MBS, ABS. And so, you know, the Fed, which we anticipate is going to be higher for longer, you know, our view is, you know, when the Fed cuts, if the Fed cuts, it really doesn't matter, because we have positive real yields. And if you look on the municipal yield curve and you look at every single spot on a tax equivalent basis, it is much higher than the rate of inflation. So we have the highest real yields in the marketplace that we've had in more than 10 years. And having these high real yields really does matter. So if the Fed goes in July, if the Fed goes in September, we're really indifferent. The level of income that you have in the municipal market is real.
If you're a high bracket individual, if you're in a high bracket state, it just doesn't make sense not to look at these issues.
Couldn't have said it better.
Let's talk about quality issues. Where do I want to be? You told me about duration. You're inching out 10, 12 years, maybe longer. What about quality?
You know, quality, we continue to like the high yield sector in the municipal market. We don't have any events that we think are on the horizon that are going to go in and create meaningful headlines. If you look at the BBB market, the single A market, spreads are still really there. And if you look at spreads overall in the municipal market, we're just not as tight as we have on the corporate side.
Dan, we have to leave it there. Thank you so much for your time today.
Thank you for having me.
Appreciate it for explaining a little bit more about an area that we should probably pay a little more attention to. Dan Close. Thank you. Nuveen. Well, that does it, folks, for The Exchange. Leslie Picker, she is quicker. She's already over there in the next studio getting ready for Power Lunch. I'm going to join her on the other side of this quick break. We'll be right back. Thanks for watching. All right, welcome to Power Lunch, everybody. Alongside Leslie Picker. Welcome, Leslie. Good to have you with us. Welcome to all of you. I'm Tyler Matheson. Coming up, stocks mostly lower today as an awful April continues. The Dow down 5% so far this month. Haven't had that kind of decline in quite a while. And while the Fed might not be coming to the rescue, markets grappling with the possibility now of 0 rate cuts this year. And we're about to get the latest read on the economy from the wonderful, aptly titled Beige Book.
It's certainly an important day, Tyler. Plus, a Boeing whistleblower testifying on Capitol Hill. He says Boeing is putting out defective airplanes and it should stop Dreamliner production. We'll talk to a Boeing shareholder about this latest black eye for the company. But first, let's get a check on the markets today. As Tyler mentioned, kind of a mixed day here. The Dow getting somewhat of a bid to the upside, up just less than 1%. The S&P up about 0.3%, and the Nasdaq, down 0.3%. The Nasdaq down about 0.2% today. And here's another look at how bad April has been for the Dow. This is the 13th trading day of the month. That's 10 sessions in the red and only 2 up days, including a 1% gain yesterday. So maybe that's unlucky 13. Hopefully things turn around from here. But despite the recent stock sell-off, our next guest isn't too concerned and thinks the markets have been long overdue for a correction. He says now is the time to buy into some major artificial intelligence names. Let's bring in Keith Fitzgerald, principal of the Fitzgerald Group. Keith, thanks for being here. So where within AI do you think there's opportunity amid this pullback?
Well, that's an interesting question because there's clearly lots of opportunity. For me, this is, do you want to buy the needle or the haystack time? I'm still going to stick with the haystack. So it's the AMDs and the NVIDIAs of the world because you're talking about 70, 80, 90% market share in the GPU and CPU market.
So you've said that the markets were long overdue for a pullback. At these levels, though, do you think there is still more downside? Would you wait to be putting money to work, or do you think that now is kind of an appropriate floor for further upside from here?
Well, you know, of course, trading being the way it is, the moment I say there's a floor, it's going to go to 0 tomorrow. So, you know, no, I don't think there's a floor in. I think that the Middle East has clearly got the potential to roil markets. So this is where you change your tactics. This is maybe where you slow down your buying, where you be a little more careful about how you buy, when you buy. But the fact is you want to continue to play to win because that's how you actually do win.
Let me ask you about Apple and your hypothesis that the developers conference that is coming along, I believe it is May or early June, could be a 2007 moment for this company, i.e. the moment when the iPhone was introduced. Why do you say that, and what will be the cause or the catalyst for that iPhone moment?
Thank you for asking, Tyler. So I think that what we're going to find out is that Apple is, a lot farther along in the AI space than people realize it. And I see that anecdotally by the way its speech recognition works, by how it processes things. We have both Apple and Microsoft equipment in our offices. The Apple stuff is routinely faster, better, and more accurate than the Microsoft AI. But the critical piece for me is I think we may learn, if I'm correct in my hypothesis, that Apple actually puts AI on board. The big jump is going to be that it doesn't have to go to the web. It doesn't have to get to generative engines. So I think the operating system could see something substantially deeper and burrowed in farther that's going to be beneficial for Apple.
So I will then be able to communicate with my computer, with my iPhone in a way that might be a quantum leap forward from what I'm accustomed to now?
That's kind of what I think is coming. You know, again, if you remember how Steve Jobs released the iPhone, he was very coy about it. He says, do you want something that's going to do X, Y, and Z? And everybody said, oh, my goodness. And then, boom, there it was. That's very much Apple's MO. And I just am hearing all the familiar shades, all the tech experts, all the anecdotal evidence leads me to believe that we could be on the cusp of that.
Mm-hmm.
What about within the chip space? It seems like you are a fan of AMD. Is that right?
AMD and NVIDIA both.
And why those two specifically?
Well, again, because dominant market share, absolute excellence in terms of what they do, and customers are buying every chip they're making for the foreseeable future. They simply can't get enough. And whenever you've got a product like that where customers have to buy because they want to, or vice versa, that's something you want to pay attention to as an investor.
So let's talk, are you at all chilled by the slight chill, the breeze that has come into NVIDIA shares in recent days?
Well, yes. I mean, I'm a little concerned, but I wouldn't be very good at my job if I were chilled, frankly, Tyler. And here's why. Companies like Amazon, Microsoft, Apple, I mean, any of the big names that we chase today, particularly in the tech space, have all had pullbacks over the years. I mean, people forget, but Amazon lost 90+% of its value back in the dot-com crash. So, this is familiar territory. This is deja vu all over again. The markets have simply backed away from it because of all the leverage, lots of other things roiling the markets. But no, it doesn't disturb the long-term investment case as far as I'm concerned.
Keith, I'm going to ask you to stick around while we go immediately to Steve Leisman, who has been pouring through the beige book from the Fed and is still awake to tell about us. Steve.
Come on, Tyler. There's nothing more exciting than the beige book. And I want to tell you, this is an interesting beige book for the following reason. I'm going to read you a bunch of the anecdotal reports that come from the 12 Federal Reserve Bank districts. And they certainly sound at odds with some of the economic data that we've been talking about. Economic data has been strong. These comments are very modest. And economic activity, according to the beige book, expanded only slightly, a little bit, pretty much the way it was last month. 10 of the 12 districts report slight or modest growth, which was up from 8 in the prior report. So a bit of an acceleration there, but at a very modest rate. Consumer spending, however, quote, barely increased. And you remember we got that really strong retail sales report on Monday. There was weakness in discretionary spending. Consumers' price sensitivity remained elevated. It meant they were shying away from higher prices. Auto spending was up because of better inventories and incentives, ostensibly prices coming down. The economic outlook was cautiously optimistic among those who were surveyed. Employment rose at a slight pace. That's at odds with the strong employment reports we've had. 9 districts, 9 of the 12 that is, reported slow to modest increases in jobs. Labor supply was seen improving. However, we've had this persistent commentary throughout the entire post-pandemic period, even before it, of shortages of qualified applicants. Labor demand and supply were seen remaining relatively stable. Price increases, that's the important part, were modest, running at about the same pace as last report. Remember, we've been talking about slower, sluggish inflation not coming down. Well, it was stable, according to the beige book. There were some shipping delays noted due to the Red Sea tensions and the Baltimore Bridge collapse, but not seen as a really acute issue there. There were sharp increases in insurance rates that we have seen in the inflation report. And the ability, this is an important one, to pass along cost increases to consumers has weakened, and that has put pressure on profit margins. Inflation was expected to hold steady, and there was some upside risk seen by manufacturers to inflation on both the input and output costs. So interesting, Tyler, there was a study recently done by the Cleveland Fed. So the beige book does a pretty good job of predicting recessions. Not much about whether or not inflation is a half a point higher or lower, or GDP is, but it does a pretty good job of signaling in the language whether or not there's a recession coming. This obviously is not a recessionary call, but it is, or it does sound and feel weaker than the other economic data we've been talking about.
And is that the surprise in this report, if there is a surprise?
It is to me. And I know you were joking about the beige book, but I find this report to be very helpful in kind of understanding two things. One is where the economy is going and what's actually going on, but also what the Fed is hearing from their contacts. We do get a little behind-the-scenes look here because Fed officials do meet with businesses all around the country all the time. And so this is what they're hearing here. And they're hearing a story of a somewhat weaker economy than the story being told by the data.
Yeah, no, I don't mean to diss the beige book at all.
No, you should diss the beige book, Tyler. There's no reason not to.
It's valuable. I'm just endlessly...
They need a better color.
I'm endlessly amused.
It's called the beige book. Maybe we need to be like a yellow book or something.
Yeah,
we have one of those.
It was the green book. Keith, any thoughts here on the beige book? And how do you like beige, Keith?
Well, beige is a great color as far as I'm concerned, and that was about as succinct a rundown as I have ever heard on the beige book. So my hat's off to Steve. I couldn't have done that. But I think Steve raises a very interesting point by highlighting the difference between recent data and the beige book. So the markets have accelerated faster than the headlines, and data points like that can keep up. So really the message is, do we or don't we believe the data points? And if so, which ones? I'm going to go with the CEOs in the companies every single day because I think the Fed's data is rearward looking, whereas I think CEOs who are in charge of making money for their shareholders are forward looking.
Now, Keith, I did pick up on one thing that Steve mentioned, and that was this idea that inflation has kind of gotten to this point where it's becoming more and more difficult for companies to pass those price increases on to the customers without losing that volume. And we are actually going to play a soundbite from an interview I did this morning with a restaurant CEO who said that same thing, that we're kind of reaching this inflection point. And I'm curious, as we're getting into kind of the peak of earnings season in the next few weeks, do you expect to see that translate into margins as well?
You know, that's a very, very interesting question. If you're talking about things like Pepsi cans or Fritos or chips or those kinds of things, yeah, I expect the consumers to begin to push back because they're reaching their limit. They've had it with what's happening to their wallets. But if you're talking about things like tech, or you're talking about missiles, or you're talking about healthcare, no, because those things are relatively margin indifferent. Insurance companies and the amount of money sloshing around in the system makes those things relatively price insensitive, even though the consumers wind up paying more.
All right, Keith, thank you very much, Keith Fitzgerald. But, Steve, let me give you one final opportunity to tie it off for us.
Well, I think Leslie raised a really profound economic theory right there, which is that prices can't go up if you can't raise prices. We may be at the tail end here of the ability of companies to pass along those prices. I would watch profit margins. I think that's really what Leslie is getting at right there. Profit margins have remained relatively robust in the post-pandemic period here. And there is room for them to come down, companies to remain very profitable still, but not necessarily for profits to rise as much. It could cause companies to begin to try to cut back and pare costs in order to keep profit margins up, because companies will always try to defend their profit margins before they end up reducing them. So it's something to watch for. It's a transition period here, coming off a period of high inflation where companies did reasonably well. And this is going to be a more challenging environment, I think, for the corporate world if prices are going to, if it's going to be more difficult for them to pass along higher input prices.
All right, Steve, thank you very much. Steve Leisman, we appreciate your time. And coming up, 3 big stories out of China. The White House ramping up tariff threats. Luxury brand LVMH seeing growth concerns there. And Apple considering a move now to Indonesia over some China worries of its own. We'll discuss all of this when Power Lunch returns.
prices go up.
Welcome back, everybody, to Power Lunch. President Biden wants to triple tariffs on Chinese steel. Tim Cook says Apple will look into manufacturing in Indonesia, potentially diversifying outside of China. And LVMH earnings hurt by weak Chinese demand. See the theme? We got a trio of reporters on all angles of this China story, and we're going to begin with Megan Casella and the steel tariffs. Megan.
Hey, Tyler. So President Biden is just now about to start speaking to the United Steelworkers in Pittsburgh, and he's going to be unveiling a series of trade moves against China. He wants to triple tariffs on all steel and aluminum imported from China. He'll be launching an investigation into Chinese subsidies into its shipbuilding industry, and he's pledging to work with Mexico to cut down on Chinese efforts to evade tariffs that are already in place. Now, the Biden administration says this will not drive up prices for businesses or consumers, arguing instead that it would actually be more harmful to allow China to keep overproducing.
We want to get ahead of that curve in this case, take action that we don't think is going to have much inflationary impact at all, given the magnitudes involved. But if we don't take action, we're putting at risk one of our most critical sectors.
Now, President Biden has also argued that his policies are less inflationary than those of Donald Trump, who's been calling for tariffs on all imports from China. But at the same time, Biden has left in place nearly all of Trump's Section 301 tariffs on China. And as a result, the Tax Foundation has some new analysis showing that Biden has now collected far more revenue from those tariffs than Trump ever did. And guys, economists largely agree that those tariffs serve as a tax on consumers, no matter who imposes them. Guys.
So how likely, a tripling of tariffs, did I hear you say? And how likely is it that he'll be able to do that?
Slightly more than a tripling. So the average tariff on steel and aluminum from China right now is about 7.5%. They want to pull that up to 25%, and it appears quite likely they can. Biden's trade office has been reviewing Trump's tariffs for several years now, for about 2 years now. Once they're done that review, they will follow Biden's direction, and they will triple those tariffs, or more than triple them. That's likely to happen, and the U.S. chair is going to follow Biden's direction. They say it could be a matter of weeks from now when we see that kick into gear.
Megan, thanks very much. Megan Casella reporting.
Apple continuing to look at possibilities for manufacturing outside of China. We've heard about India. Next stop could be Indonesia. Steve Kovac joining us now with more on that story. Steve.
Hey there. So, yeah, he was in Indonesia today, and some comments came out after he met with the president there, just, saying he's going to look at investment in the country. They don't really do much there yet. I will also note he was in Vietnam and met with the prime minister of Vietnam yesterday. They already do some manufacturing there, things like AirPods and things like that. Similar comments there. And then we expect him potentially to go to India tomorrow for very similar meetings. And why is this happening? This is a theme we've been seeing play out with Apple. There he is right now in Indonesia. We've been seeing this theme play out for the last year to 18 months or so, as we just saw all those problems that COVID shutdowns in China caused for Apple's supply chain, not to mention just straight up sales in China, which were down 13% in the December quarter. This is Apple diversifying away from China, both on the sales front and on the manufacturing front. We got a report just a couple days ago that iPhone production has doubled in India, for example. So it's not going to be a panacea for Apple here to, start opening up more manufacturing centers. The vast majority of manufacturing is still happening in China, and that's going to be the case for some time. But we often hear Tim Cook say, and I guarantee you when I talk to him in a couple of weeks after earnings, he's going to say this again, that these emerging markets are growing very rapidly.
China has its own human rights concerns, but doesn't Indonesia too?
That is another, and India does as well. I mean, yes. And not to mention India, accusations of state-sponsored assassinations, for example. So that is another issue that Apple continues to face, not just in China, but Apple is very good about putting out its ideals, for the environment, human rights, and so on and so forth. But they also have to do business in these countries that don't necessarily line up with these ideals. And we've seen different instances where they've had to compromise on those values. The most notable one was fall of 22, when there were protests at a Foxconn factory, workers trying to escape, getting beaten down by security forces to keep them in. Apple was largely silent on that and didn't even say anything against the violence there. So there have been so many instances, or several instances rather, where, they have to kind of compromise on those values in order to do business in these countries. So it's not without controversy.
So then in diversifying the supply chain, I understand the need to do that. Why diversifying in these specific places? I know that there are probably more expensive manufacturing hubs elsewhere that may not come with those geopolitical risks, that may not come with those human rights risks as well. Is Apple considering those at all?
There's so many reasons. So, I mean, I'll go back to what Tim Cook has told me in the past about India. India has a rapidly growing middle class, a very educated middle class. They're kind of approaching this, also the largest population in the world. So not only huge manufacturing and job opportunity there, but also potential customers. That said, Apple products are too expensive for most Indians to buy right now. But again, I'll point to that growing middle class as a reason why they see opportunity there.
Yeah, very, very difficult balance, though, nonetheless. Steve, thanks for breaking it down for us. Interesting story.
All right, next up on our little virtual China tour, lagging luxury, LVMH saying its growth is slowing because of a slowdown in luxury spending by Chinese consumers. Robert Frank has those details for us. Hi, Robert.
Tyler, LVMH reported a 6% decline in sales for Asia ex-Japan. So that's mainly China. On the call, LVMH saying if you include spending by Chinese tourists outside of China, sales for China in total actually increased 10%. So a lot of that buying was by the Chinese who were spending in Japan, where sales jumped 32%. That was in large part thanks to the weaker yen. So that shift in Chinese buying, rather than an overall decline in Chinese spending, was the main reason that stock was up today on what would otherwise be a fairly weak quarter. You look at those numbers, LVMH total sales up only 3%, wine and spirits down 12%, jewelry and watches, that includes Tiffany, down 2%, and then its core fashion leather goods sales up a little bit, 2%. Now, as we all know, China had once been the big growth engine for luxury. That was the big hope, but now its market share is actually shrinking. China accounted for about 23% of global luxury sales this year. That was down from 33% before the pandemic. So guys, you know, on the face of it, this is a very weak report, very weak for China, but when you include Japan, it wasn't so bad. And overall, we're not seeing China rebound to where it was pre-pandemic, but the decline hasn't been as fast as some people had feared, and that's why we're seeing the stock react the way it did.
Yeah, it's still striking to see those figures you provided about how Chinese consumers comprised about a third of the luxury spending before the pandemic, and that's dropped so significantly now. I'm curious if there are other markets that are making up that difference, in particular, that have seen a surge in luxury spending in that time period.
Well, the U.S. was the new China for years. You know, until the end of last year, the U.S. was making up that difference. And LVMH had shifted a lot of its sort of marketing power and spend to the U.S. as its hope. Now we're seeing the U.S. really struggle, especially on that aspirational end. So the lower priced products at Tiffany, for instance, that's where they really struggled. On the call today, they said that perhaps they're seeing signs that aspirational consumer may start coming back in the second and third quarter. I don't know what evidence they have of that, but that was another reason why this stock was up about 3% today, despite these weak results.
Interesting. Robert Frank, thank you very much. After the break, Silicon Valley's cutthroat workplace is making a return. Staff rankings are surging in popularity with companies. Details in Tech Check next.
10.
The practice of stack ranking employees might be making a comeback in Silicon Valley. Kate Rooney joins us now with the latest for today's Tech Check. Hey, Kate.
Hey, Leslie. So after massive waves of tech layoffs, employees may have thought their jobs were a little safer. That might not be the case at this point, with new forms of stack ranking making a comeback. This is where you rank employees on a bell curve and then cut the bottom portion of those. It was made famous by the late Jack Welch, the former CEO of GE. It's sometimes called rank and yank. Tech companies have been bringing it back in different forms as a means to keep headcount in check during these new years of efficiency. And heading into earnings, discipline and cost discipline is really a big theme and what investors want to see across tech. So names like Amazon, Alphabet, Meta have all cut double-digit percentages of their workforce after overhiring during the pandemic. They all use some sort of employee rating system. The information also reporting that Shopify is now using a numeric rating system. Then only those whose scores increase in a review period are eligible for raises, according to the report, which Shopify executives are pushing back on. The return of what some see as a more cutthroat internal rating system does signal a shift, though, in tech company culture. So back in the pandemic, they overhired and they were fiercely competing for talent. And then came the end of zero interest rate. That really changed the hiring landscape dramatically. Companies started laying off thousands of workers. You can see in that chart there, the layoffs really peaking early last year. Tech companies now need to prove that efficiency, and they've been awarded for some of the cost discipline and layoffs. Not just big tech, though. You got Coinbase, Square, PayPal. All of those companies have gone through sort of the same structure of layoffs, and you've seen it reflected in the stock price, guys.
There used to be, I'm going to attribute this to Jack Welch, and I may be doing so incorrectly, that there was a feeling that you culled the weakest 10 or 15% of the herd every year. Is that where these tech companies seem to be going?
It does seem to be that strategy, this sort of, instead of going through these rounds of layoffs, this almost pruning of the workforce. And it's seen as, in some ways, a meritocracy. There are people out there that like this and say that's the fair way to do it. You also hear about something called a PIP, a performance improvement plan. So that's common in tech. That if you hear, I know, Tyler, hopefully you're not on a PIP right now. But it's where it's kind of seen as like the Grim Reaper coming. It's the signal that you're probably going to get laid off, but they will give you the opportunity and say, all right, here's your opportunity to go and improve your performance, but it's seen as a negative in tech. And Leslie, this might resonate. Covering the banking sector, but I've talked to folks who say, this also happens in banking. Yep. Goldman Sachs, for example, if you're not a top performer, you're not going to get that bonus and you're probably going to be let go. But it's less explicit. These tech companies have implemented these new systems and ways to rate people, and it's easier to kind of prove and quantify in finance. If you're not a top trader, it's easy to say, okay, listen, you're looking at the P&L, Leslie's bringing in the most as far as trading, Kate's kind of underperforming, we're going to get rid of Kate. Whereas in engineering, it's a little bit more subjective, and it's a lot more team-oriented. So the downside of some of this stack ranking can often be less collaborative, has been the negative commentary around it. And there's been studies out there that prove that it's not effective. So kind of a divisive topic.
So Leslie, what do you think? Give Kate a 11 on a scale of 10?
I think
yes.
11 and a half.
11 and a half on a scale of 10.
Thanks, guys.
Way to go, Kate.
Thanks, Kate.
Bye,
all right, let's go over to Seema Modi, who's also an 11 on a scale of 10 for a CNBC News update.
I would say so myself, Tyler. Here's a news update. Iran's president putting Israel on warning today. During a speech at the country's annual army parade, he said that the, quote, tiniest invasion by Israel would bring a massive and harsh response. Israel is weighing retaliation against Iran following a weekend drone and missile attack. And that potential retaliation is overshadowing a meeting of G7 foreign ministers in Capri. The escalation of tensions is expected to dominate the agenda over the next 3 days. Israel told its allies today it will make its own decisions despite Western calls for restraint. Secretary of State Anthony Blinken arrived in Italy this afternoon for the talks. Finally, actor Hugh Grant settled a privacy case with Rupert Murdoch-owned British tabloid The Sun for what he called an enormous amount of money. Grant claimed the publication used private investigators to tap his phone, bug his car, and break into his house. Grant said today he didn't want to settle the case, but felt he sort of had to because a trial was likely to be very expensive. Tyler, back to you.
All right, Seema, thank you very much. Boeing's whistleblower testifying before the Senate. The allegations are troubling, but with a management change already underway, What other risks could Boeing's stock face? We'll ask a Boeing shareholder for his take next.
Welcome back. A Boeing whistleblower on Capitol Hill today detailing problems he sees in the company's manufacturing process.
In a rush to address its bottlenecks in production, Boeing hit problems, pushing pieces together with excessive force to make them appear that the gaps don't exist, even though they exist. The gap didn't actually go away, and this may result in premature fatigue failure. Effectively, they are putting out defective airplanes.
We are now getting reaction to that testimony. Let's get to Phil LeBeau.
Leslie, we have a statement from the FAA because it wasn't just Boeing that was blasted on Capitol Hill today during this 2-hour hearing looking at the safety culture and the manufacturing process of Boeing. It was also the FAA with not only the whistleblower, but others saying, look, the FAA is not doing its job. Now we are hearing from the FAA, the administration saying FAA Administrator Mike Whitaker made it clear, quote, this won't be back to business as usual for Boeing, end quote. The company must commit to real and profound improvements, and we will hold them accountable every step of the way. We will continue our aggressive oversight of Boeing and ensure the company comprehensively addresses the findings of our recent audit and the recommendations from our expert ODA panel. ODA is, by the way, the process for approving aircraft that is used in this country, although we should point out that the FAA has actually been ticketing every single Dreamliner that has come off the line since 2020. So there is pushback from both Boeing as well as the FAA regarding the allegations that we've heard over the last week from this whistleblower that, look, things are not being made the right way at the plant in South Carolina when it comes to the Dreamliner. By the way, guys, we think we will probably also get a statement from Boeing at some point pushing back on a lot of the testimony that we heard today, which was very damaging. Guys, we'll send it back to you.
All right, Phil, thank you very much. Phil LeBeau reporting. Let's get some reaction from Tony Bancroft, a Boeing shareholder and portfolio manager at Gabelli Funds. He manages the Gabelli Commercial Aerospace and Defense ETF, which has Boeing as its second largest position. That would suggest, Tony, that you are confident that Boeing is a place to be, a place to put money, and is building safe aircraft.
Thanks, Tyler. It's great to be back. Boeing is one of our large positions in our Gabelli Commercial Aerospace and Defense ETF, GCAD. I think the bottom line up front is the customers most impacted, the people most impacted and most exposed to the safety of Boeing aircraft are the airlines, and they, as we've seen with United this morning and other airlines making comments that they can't buy enough Boeing aircraft, MAX 787, 777. The FAA and Boeing went through a process in 2020 to 22 to work on this gap issue and the fit up force that they had a hearing on this morning. And I think they came up with a solution, and those planes are flying perfectly fine. And in general, aviation is still the safest form. Aerospace is still the safest form of travel. And the FAA has not had a crash-related death since 2009 with the Colgan flight. So that's 10 to 12.
Who has not?
The FAA aircraft. Right? FAA aircraft since 2009 haven't had a crash-related fatality.
What is an FAA aircraft? Because I think back of the 737 MAX 8s that did crash.
Right. So the 730. So the FAA is all aircraft, the fleet of aircraft that fly within the United States. So it's the gold standard of travel, of transport, right? That's 10 to 12 billion people have had safe flying in the last 15 years.
When you hear a whistleblower or the testimony like you heard there, how do you process it? How do you put it into the algorithm that brings you to an investment decision about a company? Do you look at it as an isolated opinion? Do you look at it as, well, how do you process it?
I mean, I'd say, again, that the testimony that happened this morning, particularly with the engineer and the QA personnel talking about the 777 and the 87, those two aircraft have some of the foremost, safety records, in history, in commercial travel and cargo travel. The plane's been the workhorse. Those two planes have been the workhorse throughout COVID. The 787 was flying multiple type of flights throughout that time. And I think Boeing makes safe aircraft. That's just the reality of it. And I think the data has pretty much proven that.
Have you heard much in your channel checks about how the public feels about flying Boeing? Because there are memes circling out there about concerns surrounding safety and people not wanting or, discovering that the plane that they have a ticket for is a Boeing aircraft. And has there been any sort of, boycotting or, distaste about flying Boeing that you think will ultimately trickle down?
Again, 51% of the FAA fleet is a Boeing aircraft, right? So, 20 some percent is Airbus. So you're pretty much going to be flying, probability states, you're going to be flying in a Boeing plane, which, goes on every day. Commercial travel is up on a year-over-year basis and is very close to pre-pandemic levels. And I just think that, people might focus on this as sort of like the whiteboard, the huge whiteboard that's perfectly clean except a little black dot. But the reality is that we're flying safely every day, and the airlines and Boeing are doing that.
I take your point that Boeing is building safe aircraft, but the one where the door blew off was not a safe aircraft.
Sure, and statistically, incidents are going to happen. Unfortunately, in this case, and thank goodness no one died or was injured in any amount. That that I think things happen. I mean, aviation is dynamic, of course. Aviation and putting together complex planes that are highly variable is is part of the manufacturing process. And there are going to be errors, and I think Boeing has been focused on that. And I think as the FAA's just put out that they're going to be focused going forward, and they'll come to a resolution to moving forward.
Is in your view, as a shareholder, the change in the leadership of the company a good move?
I think CEO Calhoun was probably going to retire in and around the time that he's going to at the end of the year. I think he came into a tough situation and really focused on safety.
He seems to have owned the problem.
He owned the problem, and I think going forward, Boeing is a great opportunity here as a portfolio manager to own it. And the backdrop, the fundamentals of the industry, commercial travel is set to outpace global GDP. Has done that for the last 20 years, and all things being equal, will continue to do that. And Boeing is well positioned to benefit from that.
Tony, great to see you.
Thanks so much, Tyler.
Tony Bancroft.
Thank you, Tony. Coming up, the juicy details. We'll get a little on-the-ground insight from a consumer-facing CEO on the impact of stubborn inflation. We're back in 2.
Am I winning yet? Let me know right now if I am winning. Am I winning right now? Am I losing or am I winning? Am I winning right now? Am I winning or am I losing? Are my calls printing right now? Am I winning or am I losing? Please tell me in the chat if I am losing. Did I tell you that I was going to leave them on all day long? Who's winning right now? Who's winning right now? Who's winning? Thank you for your put money. I appreciate it. Thank you very much, please. Thank you. Thank you very much. Slap that ass, motherfucker! Motherfucker, slap that ass! Slap that ass, motherfucker! Motherfucker, slap that ass! What did I say I was leaving him on for? Did I tell you I was leaving him on all day long? Did I tell you I was leaving it on all day long? Huh. Huh. Hold on, I'm going to take some money off. What's up out there? What's up out there? I just made 300%. What's going on out there, boys and girls? Did you make 300% today with Captain Jim James? Are you making 300% with CaptainJimJames today? Tell me in the fucking chat. Don't fucking fade me. Do not fade me. Burr, baby, burr. Another trade, another winner. Winner on the open, winner in the middle of the afternoon. What up? Did you take the money with me just then? That was me leaving the market right there. Welcome to the Stock Market Show. I told you I would be here today at the critical moments. I told you 500. I told you I was buying. I told you when I was selling. No fluff, no bullshit, no fucking talking shit all day long with you. Told you what I was doing this morning, didn't I? Told you what was going to happen today last night, didn't I? I even drew it out with crayons for you. I'm going to go on Twitter and ask you guys, how was it? Hold on here. We ain't done. We ain't done. Twitter. Why don't you go in the Twitter post I just made, and I'll give you a shout back. Be like, what up, Cap? I'll follow you. If I don't follow you, I'll follow you right now.
Now that I got my dough, I'm finally ready to dance. Dance.
Oh, that was good. That felt good. Did you get to have that? Did you get to have that? Did you get to buy down there with me earlier? Did you get to run it all the way up there and take the money and run? Did you get the 300% trade on the way up? Did you take the puts down in the bell like we had in the market brief last night and close them out like I told you to? Woo! Oh, and look at that just now. Look at that. Oh, did you take the money with Cappy up here? Did you lose all your money? Oh, I told you I was getting out. I don't know what more you need. I told you I was getting out. It was that simple. I don't know. Crayons. I'm long this. I'm closing now. What else do you need? Woo! I got to respond to all you guys out there. You're on Twitter right now, blowing it up. I don't know what else you guys need. I don't know what else to say to you guys. Like, I'm trying. You guys are in the fucking, you guys are blowing up Twitter. Fuck yeah, dude. I love all of you guys out there. You guys are fucking, you guys are baller. And look at that right there. We exited perfect. Perfect exit. Dude, gangster. Fucking straight gangster. Hey, what's this? Why are you showing me boobies? Who's this showing me boobies? I don't want you to see your boobies. Why is people show? I don't need to see boobs. I got a wife and I got daughters. Too many women. I want to see man boobs. There's enough women boobs in my life as it is. You need a training bra? Okay. What do you need? What are tights? You need tights? I don't need any more women's boobs. Kids around me, they're girls. I need a man in my life. Seriously. Fucking right. Boom. Keep fading me. You'll keep chasing me. Yeah, you keep doing it. I know you're out there watching right now. None of these people in the chat, they follow. Keep fading. Keep working a job. Oh, someone's watching the tape right now. Someone slammed the put thing. Someone slammed the calls. I missed that. Oh, yeah. H-bomb, dude. Fucking A, man. Jesus Christ. Well, that's the bigger story, too. Here's the bigger story. H-bomb's making a very fair point. Now, forget all this price action right here, okay? Forget this price action. If you were here with me earlier this morning, I was trying to get off the stream as quickly as possible, and I couldn't. I came back on the stream to explain the mechanics of what's going on in the market right now. And if you didn't see it this morning, I spent about an hour explaining the mechanics in the marketplace. And Jerome Powell yesterday, the ECB, and also Dixie, and the roll going on in yield curve. And I even said to you this morning, I say you're going to see a slam down in a slingshot higher, right? Now, we're not done here. We're not even done with that conversation. Or we were going to lose 500 and start crashing regardless. Like banks are going to say, fuck it, we're selling, fuck you. Now, the reason I'm saying that to you is because on a larger picture, okay, on a larger, in a larger viewpoint right here where we are, right, there are some very upset people. They want to front run a rate cut. They primed it. They primed it with Dixie. They primed it with yields, with the yield curve. They primed it with the S&P 500 and Qs and everything else. They walked the entire market there. And Jerome came out and screwed those plans over. Canada screwed those plans over. Europe screwed those plans over. And they are upset right now. This was their whole plan. This was the whole plan. We're going to crash. We're going to front run rate cuts. And they're going to run that fucking narrative and continue to run it on you. They're going to try. They want rate cuts so bad. They really do. They want them so fucking bad. They really, really do. And they are upset. And they're trying to get out right now. There are people trying to get out right now from being upside down. They drank the Kool-Aid. They had guys, they got banks of billions trying to be like, we're going to do this, we're going to do that. And it didn't happen. And so they're pissed. Now I'm going to tell you something from that conversation this morning, okay? If that goddamn curve keeps going down, right? I don't care what this price action is. This market's going higher. You can match it right up to the curve. I showed it to you this morning. No matter what this price action is, we're going up. And they can't stop it. They can't stop. They're going to try to stop it. They're going to be screaming bloody murder. They're going to be on fucking Twitter and CNBC and Bloomberg. And they're going to be out there telling you all kinds of more bullshit and nonsense that has nothing to do with the market. They set it up, and they didn't get it. Their cake was ripped right out of their hands yesterday. So I don't know what else you guys say to you guys. I'll say something to you. I'm going to say something really important to you. We have a free community in what we do, but if you want those market briefs, you're supporting what we're doing here. And it costs money, it costs time, it costs the effort of all of us together doing this stuff. I'm actually launching something today that's kind of cool for pro traders, and then in the next 2 weeks we got like 2 or 4 things launching for supporter level. And I think Bork said it earlier. When you see now that we've made the jump, right? You're getting the full package. You're getting like the stream. You're getting the brief at nighttime. You're getting a Discord without all the bullshit in it. You're getting the tools, access to charts, access to all kinds of shit. So you really have to be doing that stuff to keep up. If you can't, you show up to the stream and you do what you do, get what you can. You can ask people in the chat, say, hey, can you help me out? Can you show me this? Can you show me what the expectations are? I'm even drawing this shit out for you. So I don't know what else to say to you guys. I will say this. There's a high probability. There is a very high probability that this market is not crashing. I think the impotence that we're going to roll this market down, not a correction, but like a crash, and we're going to cut rates, and they're going to panic. That shit's on pause right now. That shit's on fucking pause. And I can tell you how I know, because Dixie got fucking hammered. In the inverted yield curve got hammered. It's not just the VIX. There's other mechanics in the marketplace. They were setting up, and they got jacked. They literally got jacked. Jerome Powell rained on their parade. He ripped the cake out of their hands. And I know the trade they're trying to do. I've explained it to you. 2 days ago, I showed you. I was like, you see that unemployment over there? You see that inflation over there? See those rates over there? You see every time they try to drop those rates, the banks try to front run a major downside move. And they were set. They thought it was happening today. They think it's happening tomorrow. They think it's happening on Friday, too. Now, it could happen. It could. We could go down to 3,800 or something. We'll just trade it if it happens. Do you understand that? Like, if we start breaking down below 5,000, we want to take a trip down to 485, 490, we can do that. You want to take a trip down to fucking 385 or some shit? We can trade that too. I got no problem trading it. But right now, that macro shit that they're talking about, you can take that shit and just rip it up into pieces. Gone. It's gone. And I don't care if they know it or don't know it. It's gone. That whole thing is gone. That whole narrative is gone. And you know what? You know when inverted yield curve does matter? When it lines up with inflation, unemployment, and rate cuts. That's when it works. That's when the fucking yield curve goes to the fucking moon. And that's what they were expecting this morning. And it didn't fucking happen. So I don't know what to say to those guys out there. I don't know what to say to these big bankers and all that shit. Fucked again. Oh yeah, Jimmy. I'm on pullbacks and corrections, but these guys weren't setting that shit up. These guys were setting up the fucking roll in the market. I know what they were setting up, and they got it wrong again. So fuck you again. Not you, Jimmy. They know who they are. They're out there, like the fucking Jamie Dimons, the Doom Sellers, Carl Likens. I know who they are. They're fucking pissed right now. They're fucking pissed. And you can see it. It's simple. It's right there. You see it? Bye-bye, bitches. Yield curve in the fucking dumpster. In the fucking dumpster. And you know what happens when this shit happens? This shit's been going on since when? This shit's been going on. These guys think that these guys really think. Let me show you what these guys think. These guys think it's done. It's not done. Look at this shit. This shit started back here on April 12th, 5 days ago. Have we recovered 5 days of money? No, we haven't, have we? Have we gone up what we've lost in 5 days? No, we have not. You got Dixie getting taken down today. You got USD JPY pairs trade just got murdered. Now it's going to pump back up in some goodness, right? Got a little bit of pump action going on here. What else happened today? Oh, what happened, Dixie? I even drew the red box for you. What happened there, buddy? What about all this shit down here? Let's look at Dixie really quick. Oh, you think you're safe, Dixie? You think you're safe? You think you're safe up there? What about all that up there, all that? Oh, what about all that? You think you're fine up there? You think everything's cool up here? Fuck no. That shit's all coming back. Price target, 104.59 minimum on Dixie. What are you going to do? Crash the market while Dixie's crashing? While the yields are crashing? Get the fuck on out of here. It's not how this shit works. You need fucking rates being cut. Bye-bye, Felicia. That's exactly what this shit is. Bye-bye, Felicia. Yeah, it'll chase the gap, but it's going down. It's going down. It's going down. So I know the market doesn't go straight up. We're heading higher. Any pullbacks will be bought in this shit. These guys set this shit up. They thought they were smooth. And you know what the craziest part is? They're going to come on Twitter tomorrow and they're going to say, we only wanted 500. That's what they're going to say to you. I'm telling you. They're going to go on Twitter and be like, well, I know we were calling for 385, just like we're calling for World War fucking III last week. We closed our positions. We got what we wanted. We'll be back next week. They got fucked. They got bent. If I was one of those guys and I watched that shit going on today, I'd be like, fuck. Get me out of this position right now. You got to be out of your fucking mind if you think you're going to trade that trade with the rollover in Dixie, the rollover in yields. You're out of your fucking skull. Out of your fucking skull. Anyway, it was a great day today, wasn't it? 3:07. We've got an hour left. I'm going to tell you guys something. I want to tell you guys something important. I can't say the correction is over. We could continue to correct. We probably have a pretty fair chance. Our first time heading up to the daily trigger, wherever the fuck that is, that this is also going to get rejected up here, and we're going to consolidate sideways. We're going to spend some time down here consolidating shit. But the actual correction is likely over to some extent, I think. I'm not positive on it yet, but it's pretty close. You really need some kind of war for a crash. I want you to know that. So this is going to build up some steam in here, and we're going to wear out all these sellers and likely make our way higher over time. It's going to take some time. It ain't going to be like today. Don't be like a bear being like, we're going to 390 or we're going to 385 cap like fucking Friday at fucking 4 o'clock. That's not how it's going to go. But the existential threat to the market, like a correction turning into a crash, that shit's on pause. I'm sorry. Shit's on pause. Your thesis is fucking dog shit and kaput, and I ain't fucking listening to you on fucking FinTwit tell it to me anymore. It's over. Your thesis is dead. It is. It's fucking dead. And I'll tell you another thing. There's a lot of fucking eraser gang out there saying that the correction is done. So I'd be fearful if I was a crash bear right now. Correction bear there, they're fine. But I know that people said that was the last high of the year, and that shit is out the window for right now. At least right now. That shit is out the fucking window. Sorry. And if that's the case, where do we go? You get my picture? You got a little bit, spread it out a little bit. People that are saying we're at the top of the market, likely not at this point. Not with that shit today. And not with Jerome yesterday. Are we approaching by the dip again? Oh, hell no. I'm not telling you guys anything. You guys have got enough trades out of me. Like, I don't draw it out for you. So this will be consolidative here this will be consolidative. This is support, right? We know 5,000 is support. Here, I'll draw something out for you. Hold on. I got you covered. Hold on. 3 o'clock in the afternoon. Sorry, 3 o'clock in the afternoon. Let's take a look and see where we are. Let's see roughly what I'm going to say to bulls tonight. I'm going to give them tonight. They're going to get a market brief, right? So let's take a peek and see where we're at. We're going to start with the daily, okay? Let's take a peek here. Let's see what we can see. Some of you are like, I just want to close that gap so bad, right? I just want to close that fucking gap cap. Just let me close that gap. That's bullshit. That's not what they want. They don't want to close the gap. That's what a bear's going to be like. Just close the gap cap and I'll be a buyer. That's a fucking lie. It's a fucking lie. It's not what they want. There's a few things about this that I want to let you know. I will not be shocked if this gap is left behind. I will not be shocked because we will be coming back to revisit it later on down the road. I agree that we're going to revisit this. We're going to revisit this again and again and again. As a matter of fact, I was writing you briefs right here. And I said to you, right when we're down here, I said to you, no, it wasn't even here. It wasn't right there. It was right here. Matter of fact, I should bring the brief up for you guys to read. I should bring the briefs up for you because I told you back here. I said you're going to expect range expansion, and you're going to be jumping off. You're going to be jumping off for 530. You're going to be jumping off for 550. Let me just bring this down for you. I'll show it to you again. So you can actually go back and look at the briefs back from mid and late February. And I said to you, expect range expansion. And I said to you, we're going to make an attempt for 530. We failed. They're like, haha, fuck you. That trade is still on to 530. I know you don't believe it, but it is. It's actually higher now, 535, 540. We're going to come back down here again. I know you're like, no way, Cap, we're not doing that again. Yes, we are. And we're going to trade 550 and 560, okay? Every time we get down here, you're going to have these bullshitters making a fucking stupid story for a fucking market crash. Not a correction, but a market crash. Down here is where you're a dip buyer. Okay, so no matter where we are right now, I'm telling you we're going up. Okay? And their story is garbage. It's kaput. No rate cuts. No rate cuts, no crash, no front running right now. They're going to line the next one up when they tell you, they're going to tell you, ECB is saying they're going to cut in July or June. That means now that the Fed's going to cut in September, and you'll see that same shit happen again. They'll go back up here, they'll get some liquidity, and they'll run it right back down again. Okay? Now, you are going to get a crash at not a crash, but a major correction at some point. But it's going to be something more like this. It's going to be something more like, whoop, 535, whoop, 550, 560, and then boom. And we're going to slam down right before the election. And you're going to be down here. I'm going to mark my fucking words. I'm going to be right down here. Everything has happened the way I said it would. Right down here, when you're down here in the dumpster, right? The big roll. You're going to be down here and you're going to be telling me, Captain, you're wrong. And we're going to bleed and crash down into the election. And I'm going to tell you, it's going to turn before we get to the election. Then they're going to bring out old Art Cashin. They're going to park his ass right on CNBC, and we're going to go just like that, straight north. And we're going to blast into 6,000. And Art Cashin's going to be there, and he's going to say, well, they dragged me out and told you he could crash and doom and gloom for the election. But the markets love when nothing changes. And the market's going to rip faces off. And you're going to see that 6,000 by the end of the year, if not into March. All they have to do is not cut rates. Now, you can trade this shit if the two stories for rates, right? Are they really cutting, or are they selling you a story on cutting or not? And right now, they're going to switch their story to no cuts. And the story is now going to switch over to, well, we ain't cutting. Canada just said we ain't cutting. England said they're waiting too. And Jerome now just bought himself some time. So these bears are super fucked. Anyways, here's the deal. Here's the deal in this stuff. We're going to go back to the triggers full screen. Okay. Now let's say you're like, well, Cap, we're going to continue to correct at least, right? Maybe, but we ain't getting that fucking crash that they're looking for. 3,800 off the fucking table right now. Gone. Off the table. Jerome Powell owns this fucking market. So what do you have to know about this right now? If we break below 5,000, as I told you this morning, we will trade that shit down. Are we below 5,000? No. Did the narrative change? Did Dixie get clipped? Did your curve get clipped? Did your hopes and expectations as a bear of selling this market on hopes of rate cuts down the road? Yeah, it changed too. So what's the plan down here? We've got earnings season coming up, right? Guess what's turning up? The daily trigger. Is the daily trigger following price down right now? Is the daily trigger following price down right now? Say it with me. No. No. If the daily trigger is not following us down, what does that mean? It means that this is only corrective. It is not crashing. You would see the daily trigger turn down. Down to break through, right? That would be a crash scenario. On a daily basis, what's happening right now? Daily candle, what's happening? They're buying it. Do you see that thin little rod right there? That's buyers stepping in. They're telling you, get fucked. On a 4-hour basis, what's happening right now? This is a 4-hour basis, right? Last known support right here. Bam, bam, right? Woohoo, woohoo. Where are they now? Right there. So what are we going to think here? We're going to think that the buyers are in the house. There they are. There's the buyers. Bam. We got buyers. Yahoo. Awesome sauce. There they go. We still have the daily trigger above, but it's turning sideways right now. Neutral. Not turning down. So what are we thinking about now, right? We get the 4-hour candle out. Let's go to the 1-hour candle. Check this shit out here. Whoop. Rage. Utter rage by bears. I'm going to show you what you're going to see from me for tomorrow. This is actually the same trade as what I gave you yesterday. I'm just going to show you the rest of it. Same trade. Same thing that I wrote last night. Nothing's changed. I told you we'd bust down through here, right? This morning I said, expect that tag of 500, right? That's the expected trade. They tried to sell you down again on a squeeze right now. Bulls and buyers are going to step in and rebuy this market. Okay, now watch me closely here. Pay attention. Seriously, pay attention. If you are a bull, which you should be here, you should not be a bear right here. Should not be a bear. We can get bared up. We can get bared up, just not here. If you want to get bared up, right there, 5,000. You get through that and you start rejecting that line right there. We can talk about you getting bared up. Here, I'll even get rid of this for you. No, I'm not gonna. You start rejecting this stuff and we can have a conversation about selling down to the weekly trigger. Until that shit happens, new low, like previous low, new low, we'll attack that for the next trade lower. So as a bear, you've got nothing. You're out. You're out. You need to see a new low. You need to reject underneath 5,000, and then you have a trade. You ain't got no trade right now as a bear. If that happens, we will take that trade together. Now, until then, bulls are in charge. What are they looking for? They're looking for a trade higher. Watch me closely here. Bam. Right above this previous low, or this previous high, excuse me. They want to rest right on top, right there. That's your next trade. After that, you're going to be looking for a trade up here. I'm going to try to do it more finite for you. Right about there. Right? You're going to come right back down right here. Whoop. And you're going to go right up here. Bam. Right there. Okay? Now there's a problem here. If the correction is over, if this is actually the bottom, this is true bottom, and I don't mind them leaving that gap, and I'm going to tell you why, because they're coming back for it eventually. We can leave gaps behind. We leave gaps behind all the fucking time in the S&P 500. Now, up here, this daily trigger is going to come down or flatten out. Right around here is 513 or whatever, okay? This will likely, I said to you last night, bulls think that they're going to be able to trade the daily trigger and they're going to break right through. It's very rare that that happens. Very rare. Listen to me closely. Very rare. Very rare, very rare, very rare. So they already know that. They're going to try to sell you down right there. See it? See it right there? And they're going to sell you down. Boom, right there. And you're going to see this come right up just like that. And this is your dip buy to break above right there. Whoop, right there. Okay? So we're going to draw this in right now. We're going to bring this a little bit. We're going to bring this, oh, wait a minute. I'm going to bring this down a little bit more like right there. We're going to bring that one up right there. And then we're going to come right back down like this. Whoop, right down there, okay? This hourly trigger right here, right, will likely fail, come all the way down, and then we'll finally get above. Something like that. If you have a bull thesis, it's something like this. Okay? Something like this. 1, 2, 3, boom, failure. And this is way farther out in time. It'll be like 1, 2, 3, and then you're over. But that's the general gist, okay? And then you would know that and how do you know your correction is over? Do you want to know? I'll show it to you. There's your V-shaped recovery, by the way. You see it? Right there. Whoop. Right up there. You see the cross right there. Right? What do the bulls need? Just this previous high right there. If they catch that previous high, they're going to come right back down. That hourly trigger is going to be right there, and you're going to be Johnny on the spot, and this is when bulls are out of danger, and we can go higher. We can go attack that 535 and come back down again. You get me? That's way farther. It's not actually, don't think this is going to happen right here on the 18th and 19th and 22nd. I got to push this out on a 4-hour chart. It's going to take some time. But in a 5-minute chart, what to expect for tomorrow, this is what it's going to be right here. Expectations for tomorrow. Expectations for tomorrow. Right here. Get rid of that. There you go. And you're going to get just something just like that right there. Whoop. Just like that. Maybe the half. You might catch the half hour right there. If you want an alternate path, I'll give you that too. I usually draw that in yellow. Oh, no, that's wrong. That's wrong. If you want an alternate path as a bear, I'll give it to you. You want to see like the doom and gloom? It'd be something like this. New low. Right there. Now this alternate path, you don't take this trade until right there. You jump on the trade here. The reason you don't do this trade, the reason you don't jump on this trade right now, the reason you don't, if you're a bear and you're like, well, no cap, I'm short again. The reason you don't take this here is because you can get squozing out, and we'll just do it like that, okay? You want the confirmation like new low, failure by buyers, failure by buyers, or failure by buyers, and then failure by buyers, failure by buyers, and then boom, they drop it down. This is where the money part of the trade is right there, okay? So if you're a bull, do you buy this dip right here? You can. You can buy that dip with some stops underneath. Personally, I won't. Personally, I'm looking for this trade right here. This is my next bull trade. I want to see that right there. I want to see the next squeeze up. I want to see the failure. And then right there, I'm Johnny on the spot. Why? A lot of money right there. Whole bunch of money right there. Whole bunch. Just like a whole bunch of money down there. I don't want to mess around in here. I don't want to mess around in here. I don't want to mess around here. I don't want anything to do with it. Right there's the money trade. And right there's the money trade for you the other way. So for me, is there a trade for me today? Personally, no. But this is what you'll be getting from me tonight. Something just like this. If something fundamentally changes, I'll let you know, but it's something just like that. Where is the target? Do you want to know on a 4-hour basis where the target is? I'll show you. Right there. That's the target. Four-hour base is the right down there's one, then bam, right there. 535 or above. Right up there. That's a 4-hour base is what you're looking for right there. There's your all-time highs again. So I guess if you want to get underneath this shit, and even if you want to get down here, where are we going? We're going up. I already know we're going up. That's where we're going, up. Oh, these fucking bears, man, they fucked up so bad. They fucked up so fucking bad. It ain't even funny. I might buy this. If they can get us down right here before the close, I'd buy that. I guess I say I wouldn't buy it, but I'd buy that. I'd buy that for $1. You try pulling this shit into the close right here, I'll buy that shit. What time is it? 3:28? Yeah, you want to get all stinky at the end of the day here today? Bring it on. I'm gonna try some bullshit in the close here. I'll buy that close. No, I double dog dare you. Bring it down there for me, please. I dare you. I dare you to run this down here into the close. So I can buy that. I would buy that. I'd buy that close. I'd buy that for Friday. What day is today? Is today Thursday? Or what is today? Is today Thursday? No, thank God. I don't even know what day of the week it is. When it's today Wednesday, Thursday? It's been such a fucking crazy ass week. I know. Yeah, 2 dates. I'd buy like a Friday. I'd buy a Friday in the money call or something like that. Let him ramp this fucker up. Let me look at one more thing here. Hold on. Let me just check one more thing here. Hold on here. So let me check something here. JPM's probably out there right now fucking closing out all those those Bear Seagull puts or those sold calls. Now they're going to buy a bunch of cheap ass puts. They don't care which direction we go. Hold on a second here. Let me check I just want to check and see where we are on the collar. Oh, yeah, look at that. Nice. Sell a bunch of calls for 55.65. Catch a print on 490.70. You want to see that one? JPM's stoked right now. Look at this one. So we're coming into the end of month one, right? OPEX right now. They could give a fuck less. They could care less right now. They're going to be able to cash out all their shit. Now the market's free to go wherever it wants to go. See it right here, you guys? See all this right here? JPM has now protected their trade, or they're long in the market. They're done, right? They have right here, they sell a bunch of calls. Right down in here, they're going to get prints. They're going to close all that shit up. Market's free to go higher. Hell yeah, JPM. Good job. So where can we go here in the rest of this quarter? 55.63, huh? I was just talking about that. I've been talking about that for a while now. Now we're free to go up, right? 5:30, boom, 5:56. That's when? July, right? Woo! Woohoo! Then we can have our doom and gloom trade. That's the big bad boy, right? Oh, God, election's coming into September. And then, woof. Do you see it now? You see it now? See it now? Yeehaw! It's almost like they know, right? Oh, yeah, we're going to squeeze the fuck out of these guys. It's going to be awesome. It's going to be fucking phenomenal. Can't wait. Yeah, baby. JPM's happy right now. They're like, hey, paid for everything. If the market crashes, we got it covered. Ugh. Ugh. Coming in a month in right now, man. We got OPEX coming up. We got the 30th coming up. We're right there. We are right there. We got how many days we got left? We got like, what, 5 sessions, 10 sessions, something like that. They're done. They're paid. They're paid. They're going to cash that shit out. We're going to trade this shit sideways. I just showed you. I just showed you right here. Right here. I just showed you. We're going to go up there. We're going to come back down and all this other bullshit. We're going to come right in at the end of the month. We're going to rip the fucking face off to the upside. It's going to be great. Can't wait. I didn't say tomorrow we're going above the fucking... I didn't say to you that we're going up here tomorrow. We're going to start going to 5:30 tomorrow. None of that shit. I told you you're going to consolidate in here, right? And watch this green line right there. I even told you the first time we come up here and at the end of the month, we're going to go straight down, right? And then we're going to go higher. It's going to be a beautiful thing. If you don't understand what I'm saying, I got a market brief that comes out every night, and you can see it there. You can see it there. 474.90. I'm fine with that. For 49.70 on SPX. If we do that, I'll trade it. I don't care. If we trade that, I will. I don't give a fuck. I don't give a fuck. I make money, baby. I make it every fucking day. I'm so stoked right now. They hate when you're right. And I love it. I fucking eat it up. I eat the fuck out of it every day because they're wrong. And not only are they wrong, but they're selling you shit that's bullshit. And I love it. Every fucking moment of it. Yeah, I got to talk. Well, I do talk about protecting your portfolio in the briefs. As a matter of fact, when we started fucking having a pullback, I told you exactly in the brief what to do. Not only that, we've got David AMS that trades futures and Globex all night long. We've got Winky Face, who's a stock trader. We've got John L. that tells you how to protect your fucking portfolio. Not only that, how to buy the market and then sell options against positions if you have money. We also have Binky, who knows all about, hold on a second, dividends, right? I'm losing my voice. Dividend trading. So if you look, whatever your style of trading is, we got something for you. I also like doing, matter of fact, we're close to a swing trade. I'm very close right now to wanting to put a swing trade on. As a matter of fact, I take swing trades on oversold bounces. Let's take a look at that chart really quick. We haven't had one in a while. I take these big old swing trades, and let's look at it right now. We're almost there. I think we might be there right now. Thanks for saying something. Let's take a look at it. We're almost there. I know some of y'all know that we're almost there. Look at that juiciness down there. Woof. This is when you buy the market with size. This is when you exit the market. Whoop. Oh, yeah, baby. Oh, yeah. What else are we going to look at here? We're going to look at cycles, right? PMOs and PPOs, right? PPOs, PMOs. Let's take a look at those. And look at that, right? PPOs are just about ready to turn around, start bottoming out. We've got PMOs coming into the zero line right now. This is almost ready. We're primed, dude. We're fucking primed right now to turn around. See that consolidation going to take place right there? Consolidation going to take place right there. Oh, this is going to start moving up, and before you know it, you're going to be left behind. We're almost there. Almost there for a nice, big, fat turnaround. You should be positioning yourself for a big turnaround coming up. Either looking for a place to buy the market or looking for a place to enter the market, or like a buying a low, or as soon as where you recover above the daily trigger, to re-enter the market in safety once more. So we're pretty fucking close. I mean, if you look at this over the next like 2-3 weeks, next 2 weeks, 3 weeks, you should be trying to find a way for you to enter the market. Next, I'm going to give it the next 10 sessions. Start looking for a place to long this market for the upside. I'm fucking stoked. Correction almost over. We're nearer than you think we are. And like put a fucking 3-month fucking call spread around here. Woof. It's gonna be sexy as fuck. Put some size in the market. It's gonna be really good. When I take that trade, I will let you know always. So, as a matter of fact, I got some money that I put into a Robinhood account. I think it's in there. I have to check with the producer and see if she put the money in. If she did, we're gonna take that trade together. We will actually. I'm gonna show you guys how to grow a fucking account 3 different ways, and we're gonna make an account about $50,000 off of I think 1,000 or 5,000. I'm not sure. I think I wanted to start at $1,000 so it would be cheap. So I'm gonna show you how I grow an account with like $1,000 or 20. It depends on what we're doing. If we're doing like spreads, I probably need 25 or 5,000. If we do stock buying, I probably need $5,000. It's like $5,000 for stock buying. I'm going to show you 3 ways. I'm going to show you with risk. Probably need $1,000. Whether we blow it up or not, I just want to show you the process of how you do it. Like if you're working at Wendy's, and I know you guys do this. You're like, until I break 50K, I'm just going to keep hitting the fucking lotto button. So I'm going to show you how to do it properly. And then the second way I'm going to show you how to do it, whether we blow it up or not. I don't know if you guys are here for this or not, but here's the deal. I'm going to try to grow an account 3 different ways. The first way is going to be very risky. I'm going to try to make 50K off $1,000. I think I'll blow it up, but we're going to do it. So, because I know you guys do it. At least you know the process of how to do it. The second way I'm going to try to do it is with spreads. I'm going to do it. That one might take some time. That second way could take me all year. But that second way could make us a lot more money than $50,000. That second way could probably make us a millionaire if we really wanted to. If we were really stringent on it, like this is the only time we place these trades, I'll set the rules for that trade. The last way could take the longest amount of time. That would be where we take like $5,000. And we're going to buy stock. And we're going to go slow with it, right? 20%, 10%, 30%, 50%, that kind of shit. And we're going to show you the 3 different ways on how to, I'm going to show you 3 different ways that I've learned how to grow an account from nothing. And we'll see how it works out. If they all blow up, they all blow up. But I want to show you the 3 different ways to do it. So you guys will see those trades on stream. And we will manage those trades together. It won't be like I'm doing this and you can watch me. It's going to be something where I get your input. I listen to your advice. We discuss your advice on how to do it every step of the way. Now, what we're going to do with that money is we're not going to keep it. I'll keep the money that I put in. But any profit that comes off of those trades, we're going to either donate it or give part of it to you guys. Maybe if you guys, maybe we can structure it where if any of you guys like pick the correct trade or something, maybe we pay you with that money if we can. I don't know if we can or not, but if we can, we will. If we can't, we're going to donate it all to you guys will vote for whatever the biggest thing to donate to at that time. I don't care what it is. We'll just donate the money, so that goes to a good cause. So I don't want to profit off of this. I don't want to make any money off it or none of that stuff. I want to teach you guys how people do it. I want to teach you guys how people try to build accounts and the pitfalls along the way of that. Not only the pitfalls, but managing the end of the. If we're successful on any of them, I'm hoping that we are at least on one of the 3, because then I want to move into. What do you do then? Do you change your habits? Do you scale up? Do you take the money out of the market? That kind of stuff. How are you feel? The stress involved in it, the anxiety. There's all kinds of like problems with this that people have to deal with in their lives. I realize that. I realize that people have small accounts, and that it can be very frustrating. I realize that you can grow an account and then blow it up. I realize that you're like attacking it, and you make something, and you're like, fuck yeah, and then you're like, oh shit, it's all gone. So we're going to go through all of those stages from emotions, from bad trader habits, bad investor habits, all that kind of stuff. Know when to cut your losses, not taking a million little tiny cuts, not putting risk on when you should have, and not putting in risk on when you shouldn't have, and not cutting your losses, all that kind of stuff. So we're going to go through that whole that could take the full trade of all three ways could take 1 to 2 or 3 years. But it'll be fun because we'll leave it up on the screen. You'll see it down below as it's making and losing money. And I'm sure you guys will fucking get emotional about that shit. I would. So we'll do it. We'll do it as a group exercise so you guys can see how it's done. I think I can do it. I think I can do it 3 times. I think I can. It gets really messy if you do it again and again and again and again, but there's some ways to limit risk in a risky environment, especially if it's not too many trades. It's like 2, 3, 4 trades to get there. We should be fine. Couple, 2, 3. We're not going to do, but the one thing we're not going to do is we're not going to do like, well, we can't because we don't have enough money. We don't have enough money to do the, like, when you have like $1,000 or $5,000, you can't be out there buying like, fucking 120-cent calls, 220-cent calls. You'd be able to buy like one 20-cent call. When you're trying to build an account, you have to be exactly right. You have to know exactly when to enter. You have to know exactly when your least amount of risk is. And you have to make sure that this is why you only, like when you have like 3 trades a month or something, or a week or something like that, you have to make sure that fucking trade is like a 75 to 90% winner. And you'll probably get 5 or 6 chances to get them all right. And maybe take 1 hit and then make 2 more successful trades, and then you've built an account. Okay. Yeah, I can do anything. I've lost a lot of time, so I've lost a lot of. I've taken a lot of fucking tree branches to the face. A shit ton of losses to be able to win. That's the truth. I've fucking lost so many fucking times. The one difference I would say right now is by day trading with you guys for 3 straight fucking years, I've become a much better trader. If I wasn't streaming anymore, I'd probably be like a 90% winner, 100% winner maybe for a run. I could probably trade anywhere. If I wasn't like pressured to trade or be on stream, I'd probably be a fucking baller. I take a lot of trades I don't have to take. I do a lot of gambling that I shouldn't do, but I'm not trading all of my accounts, so it's not like if I'm trading like $1,000 or something. It's not like 10 or 20 or 30 or I don't know 60-80% of my account. So if I'm trading like 100 calls, you should be trading like 1. If you don't have any money, like 1. I'm gonna try to buy the dip and then scaling in, right? Like 1, 2, 3, 10, 20, 30, that kind of stuff. Gambling is separate from making money. I want you to know that. Why is that? Or why do I do that? Maybe that's a better question. Why do I do that? Because the one problem with this market, or any market, it's like the stock market is. Let me talk to you guys for a minute. So the stock market, right? This is the truth. Stock market is it's one of the most beautiful things in the world. It really is. It's fucking phenomenal. Where else can you talk to your heroes? And talk to him. That guy right there. That's a hero. Bob Kendall, hero. Jenny Marcus, hero. James Baker, right? All these guys out there, right? They'll literally answer the phone for you. Hey, what's going on? And talk to you. Larry Williams, chat him up. Where else do you have people like Elon Musk? People like who? You can list them off, right? You got who's the guy that does the pizza reviews? The guy that does pizza reviews all the time. I got his name. So you've got like rock stars, and you've got Portnoy, right? You get Pampolino, right? You get crazy people. You get who's the woman from that was running the scam out in fucking Silicon Valley with the fake shit. She just went to prison, right? Like you got SBF. You got insane shit that happens out there. Yeah, Holmes, right? Kathy Woods. You never, like, what business in this country outside of Hollywood, which attracts Hollywood, is there? There isn't one. So when you think about that stuff, right? When you think about that stuff, it's hard not to gamble in this business, isn't it? It's hard not to be attracted to it. They got CNBC, Bloomberg. They got fucking Reddit, Wall Street Bets. They got StockTwits. They got FinTwit. You can't really close your computer, can you? Turn your phone off, can you? So you're attracted to the gambling aspect of this, of what we do, right? So how do you control that? Some people can. You get older, you can. It's easier when you get older. It's easier for you to like place your trade, close your laptop, and go hiking, biking, drive your muscle car, your old boomer muscle car, and stuff like that. When you're young, you're like, woo, woohoo, it's all awesome. So how do you control that? I don't know the answer for every person out there, but for me, it's fucking zero dates. I make a lot of money though with zero dates too. Sometimes I blow them up, and I'll tell you the mechanics of how I do it. How I make money and how I take money out of the market, then I restart again. Remember that thing? That's a big one. Restarting. Controlling yourself, right? If you have big wins, you take the money out. You start over again and over again and over again. But the gambling side of it, you have to separate it from the making money side of it, is my point. So if you can't control yourself and all you're doing is gambling all day long, you're never going to fucking get by. You aren't. Rule number one. Rule number two, if you're gambling the same size as the stuff that you're doing to make money, you're going to lose. Number three rule is whenever you do make money, it must leave the stock market. It's required. They're not required. Some of it is required. You could buy the S&P 500. You could buy Vanguard, and you could sell options against that stuff and stay in the market. But even so, you should still remove money from the goddamn fucking market. There are way, way easier ways to make money out there. But you have to have that money to make money, right? So if you make some money, you should be buying real estate. You should buy a rental property. I don't think you should buy one 16 states away. You should do it ethically. You should be an ethical person in life. So if you live in a community, you buy a house and you rent it out. You be a good landlord. You make sure that your tenants are well taken care of. You should do that in life in general. Take care of your husband, your wife, your boyfriend, your girlfriend, your neighbor, your fucking best friends. You take care of them. And your life will improve. You don't try to get greedy. You don't try to become a pig. You don't try to I'm going to be a fucking, I guess some people can. There are people that do that shit, right? And there are. I know that some of you want to snort cocaine or shoot fentanyl on your, I don't know. Can you shoot fentanyl? I don't know. Some of you guys want to have sex with a million people. Whatever it is, whatever your thing is, you want to do, you still have to maintain that lifestyle, have some responsibility in the back end of your life. And then think about this too. When you find this profession, amateur profession, you're probably working a job where you're making $10 an hour, $20 an hour, $40 an hour. Maybe you're a doctor. You make $120,000 a year. Maybe you're a high-end engineer and you make $300,000 a year. Whatever it may be, you're still a working fucking stiff every day, waiting for our system to catch you by the balls and cut them off. You know that, right? In your real life, you know that you're going to be grinding whether you're making 300 grand or 50 grand. Eventually, you're going to get sick. Eventually, you're going to get laid off. Eventually, you're not. Eventually, I don't know. You're paying for a fucking car lease for a $100,000 car. You're upside down in. Your mortgage is fucking crazy. Your rent's crazy. You start pumping out kids. Take on some bad debt somewhere, and you're working to pay all this bad debt off, and you want to get out of that, right? That's how you started. I want to say something to you. I was able to pay off a lot of my debt. I still have a little bit left, but not much. That was not easy. And it was hard. And I fucking gave up to do that. And it sucked. It's great now. It's wonderful now. But to do that, to escape that escape velocity was brutal. Like paying off debt, buying a house with cash, fixing it up, and living without, not living in the community I wanted to live in, buying a used car and not a new car, paying cash for depreciating assets. That was hard. I probably had a good 8 years, maybe 8 years of this really fucking sucks. Everybody else is partying. I'm not partying. I can party now, but I couldn't then. And whenever I did party, it sucked. It didn't suck, but I was like, I didn't get nothing for that. And now I'm at the point of wanting to turn money into money, like have money work for me. So just keep trucking. Like put your blinders on, keep trying to make money, get better, learn what fits you best. And never forget what you were starting this for. You were like, whatever it was that you were starting to do this for, don't lose sight of that. Because it does actually get better later. I promise you that. Life gets better. There's one great thing about my life. When I paid my debt off and like bought a house, and I knew at that moment that, and I got shit for it. My family gave me shit for it. My friends gave me shit for it. I lost friends doing that. I didn't live the lifestyle they wanted me to live. For whatever. Well, or whatever things, right? Like, why are you putting your kids at risk living in an inner city, right? Dangerous place, this, that, and the other thing. But the truth is, they're not going to be there for me when I get hurt. They're not going to be there for my kids and my wife. If I break my fucking back or something, or I wake up with cancer tomorrow, or I can't afford to pay a mortgage off, or I can't afford to pay a car off, and I will die fucking penniless if that happens, right? That's what they do. They put you in a fucking nursing home from the state, and they take all of your assets, and you have nothing. And that existence can suck. And that happens to a lot of America. You don't hear about those people. They don't make good news. They just disappear. Well, not disappear. They're still there, but you don't hear about them. They're not the voice that's on social media. They're not the voice that's in the newspaper. You shun them. You do. I know you do. I know you don't go visit people that are your uncle that's fucking 80 that never got married, is penniless. That guy's still sitting in a fucking nursing home somewhere just waiting to go. Some of you do, but a lot of you don't. There's a lot of people out there that once they get clipped out of our system, it's just life is over. And so our system's built on that, right? How many times do you hear about people saying, I got cancer and I had a house and I got a house, I got this, I got that, and they took it all. I had to liquidate all of my assets. Then they said, give it all to me. Your operation is going to cost you $500,000. I got $1 million home, but I owe $800,000 on it. Well, too bad, fuckface. Sell it. Give me the $200,000. You're gone. Oh, and by the way, you can't work while you're going through this treatment. Yeah, that's right. Get out of your fucking job. Bye-bye. No, you're aging out, too, at the same time, right? I can hire a kid for cheaper than you. Like, they literally have it dialed in how to fuck you. So, it feels good. It feels good to know that, matter of fact, I've got a house that I'm going to keep. And I was really seriously considering selling it. And I'm not. I'm going to keep it. Do you know why? It's like a safety net. It's like I know that no matter what, we'll always have a home no matter what. No matter what. No one can ever take it away from me. It's trusted out. They can't touch it. So it's mine. And I've escaped a little bit of it at this point. I've escaped like a little bit of the, you're going to be forced into this and that. And in this house, I'm able to provide a couple apartments for my kids if they ever have problems. That's the goal, right? You can escape that shit. No, I know. These, I don't think, these aren't mine. These aren't my glasses, by the way. How did you tell that? These are actually not mine. Mine are like black square things. I don't know where I found these fucking things. But you get it, right? You know what I'm saying? Do I have another pair in my head? Okay, so, so I think that's the goal. So stick around. We've been doing this for like 3 years together. We started with like nobody. It was like our friends. Still our friends. Most of this group is our original friends. So stick around. I hope that in 5 or 10 years, I don't see you anymore. And, you know, I see you in 20 years and you go, hey man, I remember you. And you help me on my journey on the way where we're going. And I hope that in 10 years, we're doing all this still together. And I get to go right off into retirement. Some of you hopefully are going to be replacing me, right? There's a few of you out there that I talk to a lot because why do I talk to you guys? Because I know that probably a chance that I can be like, hey man, you want to sit here in that chair? Do you want to take this over, keep this community going for the next 20 years? So I hope we can do that. And we can grow old together, right? Some of you out there will be growing old with you and I'll be fucking sitting on fucking nursing home or some shit with you. It's true. I'm wearing my wife's glasses. Yeah, something like that, right? That's the plan, I guess. So we'll see how it goes. And my promise to you is that we're doing this for retail. It's retail for retail. That's what it's always going to be. So I'll see you guys tomorrow. We'll see what happens. Let's take a look at the close right now. It's 3:58. We got 2 minutes left. Sorry. Excuse me. Coming to the close right now. You guys know how I feel about this, right? I have no trade until we're above 504.49. That's what I want to see. I want to see, I want to see price over 549 before I take my next trade to the upside, okay? So I've got no trade here. If they were bleeding this out on the bell, I would take that trade, mostly because it would be dirt cheap and there'd be a high chance of a big squeeze in the overnight. So for me, I have got no trade for tomorrow. Not personally. I don't like taking every single trade. If you wanted to take a trade here, though, this is a good trade. Look at it. You got a bottom or a low, higher low. Market's still turning to the upside, right? Still reversing to the upside right now. So if you wanted to, you could. For me, I don't need to give it all back. I had a really good day. I made almost 300% today. A little bit less than 300, but close enough. I don't need to give it away. If I wake up tomorrow morning and we are below, let's say I wake up tomorrow morning, we're below here, I'll take the fucking trade to the downside with you. Do I think we're going to squeeze higher? I do. I do think we squeeze higher. Let me see. You know what? Let's be honest about it. Let's see if we are. Let's check and see if there's a chance of a squeeze. Yeah, there is. Sorry. there is a chance that there's a squeeze. Hourly Velo is on the downside right here, and it's moving up. So there's a chance we move higher in the close and into tomorrow. There's a fair chance of it. So if you're going to take that trade into after hours or something like that, or between 4 and 4:15, I can't blame you doing that. Can't blame you taking that trade into tomorrow. Seems okay. Not a bad trade. Not a good trade. It's not a bad trade. It's not a great trade. It's good. Thanks, Green Man. Those guys taught me a lot. I have a lot of respect for. You guys know I respect out there, right? Like Pelk and Hooligan, Short Seller ST, Bob Kendall's of the world, Larry Williams of the world, Jedi Marcus. Like, I trust those guys. Those guys get bared up, but those guys also make money, right? You want to be around people that are making money all day long. I might take this trade. Let me take a peek at this. This is a gorgeous trade right here. Look at this. This looks like a good trade, I'll be honest with you. Yeah, this is 4:15, by the way. I took one of these yesterday, and I made money today, but I took it right after the bell. Like, I got the bottom tick yesterday. I got the fucking bottom tick yesterday. This looks like the same situation. It's 4:01 right now. and catch like 414 or something. Like if they can like bleed this shit down. We did this yesterday, didn't we? Like just bleed that shit down in like 414. You buy that shit right there. Sorry. Let's watch this until 415. Oscar Zulu Kilo beat estimates. I still don't have the squawker up for you guys yet. We're trying to build a bot for it, so I guess it's not going to be done today. I think we go up in the overnight. So don't trade that, though. Not advice. Not financial advice. This is educational only. Let's look at it and see. Oh, they're stinky again, huh? Stinky Pete's down there. Exit while you can. Yeah, we'll consolidate into. We're going to consolidate into end of month or end of OPEX, and then end of month, and then we're going to move higher. So I'm stoked. This is good. We're almost there. Almost done. Find a low that you like. Put some time on a trade. You got earnings season coming up. You got a lot of tickers today that were on their lows, right? A whole lot of tickers. When we go on the highs, and you guys are like, should I enter now? Put some risk on. Know where your stops are. All the usual stuff. I like Netflix here. Netflix is turning up in a big way. I think Netflix earnings is going to be great. I really do. It is true, right, Winky? Like, it really is. It is all that matters. 100%, right? So that bullshit narrative. It's such a stupid narrative, isn't it? So anyways, if you're going to trade, if you're going to be a part of the soap opera, be a part of the soap opera. But know that that's the soap opera, and then separate that from being a sober participant in the market when you should be. Jimmy Berry right now saying 15-minute structure still bearish. Looking for a higher low yet to be confirmed. Patience is needed. 100% with that. Jimmy Berry, take it easy, brother. I shouldn't say that about Jimmy Berry too. Like Jimmy Berry, John Haggerty. Mary, there's a bunch of women traders in here, right? She, Kim, Viking Princess. We got Joe Donut shows up with some great trades. We got all kinds of people that do some cool shit around here. Meetup. Yeah, I'm open for a meetup. We have a channel for the Ragbri. I did my first bike ride this weekend. I'm going to do another one on Memorial Day to find out if I want to do the trip. If I don't take that trip, if you guys want to meet up this summer and we don't do Ragbri, if any of you are interested in meeting up, I have a lake house. I have a beautiful house on a beautiful lake with a sandbar and a boat and all that cool shit. We could possibly meet up there. As long as you don't try to psycho kill me or something like that. We could do something, 4th of July or something like that. Yeah, lake house party. Fuck yeah. And matter of fact, we'll stream from there too. And I think I'm spending the summer there. Not positive. I'm doing some renovations and it's gonna get loud and dirty. So I'm like, I might spend the summer there. I thought about, okay, so I did talk about this. In a side conversation, I did talk about going to Texas or Arizona. If Ragbri didn't work out, I wanted to do either the river trip with the floats, New Brunsfells, or I really wanted to do the whitewater rafting, but I think I'm missing the window right now. I think right now I'm missing the window. There's a big whitewater rafting trip through Texas and Arizona. That would be badass too, like 3, 5, 7 days, something like that. We could all do that together too. Oh, we got real ID here. So I got the ID where I can just drive across the border. Because I live in Michigan, so we're a border state with Canada, so it's the same shit. Yeah, Schlitterbahn, exactly, Schlitterbahn. I want to go there. I've never been to Schlitterbahn. I've had the opportunity to go, and never been. And I haven't said this publicly, but I have some very close friends that I've been lifelong friends with from Texas. Lifelong, decades. Texans, dude, and I we get along well together. I don't know what that is, why we get along well. I've always gotten along well with fucking Texans. I fucking like Texans. I want you to know that. I don't know why that is either. But I do. I get along well with Texans. Good fucking people, by the way. You know what else I really like? I never thought I would like Southerners. Like I love Southerners too. Yeah. You guys take it easy. I'll see all of you guys tomorrow. Oh no shit! They're moving to Arkansas. I didn't know that. I've never liked. I like Californians. I lived in California. I only like Northern Californians. So I lived in Southern California, and all my friends were Northern Californian transplants. I don't know why that was. Like all my bros in SoCal are originally from NorCal. Yeah, I couldn't do Arkansas. I've been there. I've been through Arkansas. I drove through Arkansas, hiking and biking. I stopped in whatever that town is, where the mafia had built the steam. It's like a resort town. It's like in a valley, and it's got the mafia from the 1930s built a bunch of hotels, and it was banging. Hot Springs, yeah, man, I went there. The roads in Arkansas are wild. They're like one lane roads for two cars, and you like whip around. There's like no edge to the road. You're just like, if you guys ever want to see the worst roads in America, it's probably like the sugarcane fields of Louisiana, and a close second Arkansas. Have you guys ever driven through like the deep dark parts of fucking Louisiana where they raise sugarcane and mine oil and gas? That shit's wild. Like no lights. It's like you're just driving through the middle of nowhere. It's like big cane trucks driving down these big bumpy roads. Like I'm gonna get killed down here. Like a alligator's gonna come out and kill me in the middle of the night. Like nobody around. Yeah, Ouija Forest. Yeah, I know where that is. That's pronounced Ouija Forest, right? I know that place too. Well, what I ended up doing was I took a shortcut through Louisiana. It wasn't a shortcut. It was through like you could smell some parts of Texas are like that. Like the oil and the gas is it's in the sand, it's in the air, it coats everything. They have these cane fields down there that are just like, you're just like, oh shit, wow. Not bad, just, something, unexpected. Washita. Missouri. I went to Fort Lost in the Woods, Fort Leonard Wood. That place I froze my fucking balls off at. Went there in the winter time. I did chemical training there and some winter training, and it was the worst experience of my life. Fucking sideways, it wasn't snow, like bluebird skies. It was like driving wind, freezing rain, humid. It was gnarly. I was like the show me state. My brother was Army too. My brother was like, "Oh, dude, they're gonna show you." I'm like, "Bullshit! It's Missouri." I'm like, "It's not fucking sand fleas down in Georgia." I'm like, "It's not fucking." I mean, it's like, how hard could it be? It's not like I'm out in like fifth mount, or is it fifth? No, I forget it was 10th Mountain Division up in New York. It's not like I'm up in Alaska. I'm not thinking about Fifth ID. It's fucking. I'm like, how bad could it be? It's not the humidity of Georgia. I'm like, shit, surer than shit. Fucking armpit of fucking misery. I went to Mark Twain National Forest. Absolutely stunning. Walked through all those trails with the big, like, I don't know if it's granite or slate, and they have these like waterfalls, slowing waterfalls. I had a blast there. I did that place. I've hiked most of America. Most of America I've been to. Not all of America, but a lot of it. Yeah, dude, 10th Mountain. Oof. Oof. 10th Mountain's cold as fuck. New Hampshire is cold as fuck. Maine is cold as fuck. Right on. If I'm ever down there, I will. I've got one family member that lives down there on my wife's side. That's why originally we stopped in Arkansas. No shit, really? Natural spring fed and cold. I didn't know that. Yeah. I mean, like, I can't say like the mountains in the west get really cold. They get like minus 30 and shit, minus 40. And it's really dangerous when you're out in the backcountry. But like freezing cold, it's a different kind of cold. It's dry cold. It's different than like cold, like Mount Washington cold is fucking freezing. I wouldn't want to get stuck there in a storm. I skied Tuckerman's Ravine. The wall, they call it, where I skied. Did that once. Never do that again. Oh, man, I want to buy that so bad right now. Yeah, different kinds of shrinkage, right? You know where I haven't hiked? I haven't hiked Oregon and Washington. Haven't done Oregon or Washington. I don't know why. Haven't hiked there. Just never got to it. Like, made my way around the country doing all this different stuff. It's two places I haven't done. Where do you live, Outhouse? You live up in Oregon? Washington? Where do you live, man? The two places I haven't hiked. Oregon, Washington. I've done parts of Idaho. Oh, Utah. I lived in Utah. Lived in Utah for like 8 years. Lived in Park City, baby. Lived in Park City. Lived in Park City for 8 years. My daughter is born in my first daughter was born in Vail, Colorado. My second daughter was born in Park City, Utah. Native. Lewiston, Montana. That's cold as fuck. I got family in Ekalaka, southeastern corner. Yes, sir. I got family in loneliest place in America. The loneliest place in the United States of America is Ekalaka, Montana. There is no highway to get there. It's one of the furthest points from any main interstate, and there's no reason for you to drive there. So there's like no reason to drive through that part of Montana unless you have somewhere to go there. Like you're going there. Family owns 7,500 acres in Ekalaka. Spielman Family Ranch. You can Google search it. You can actually go on Google and look up Spielman Ranch, Spielman Family. That's my family. Oh, you live in Flathead? Right on. You got it. There's a famous dinosaur museum there. You know what made them famous, too? They found a T-Rex and got seized. It was bullshit. They seized it. They stole it. They brought it to fucking Chicago. That's a fact. Spielman. Not spell. Spiel. They got streets named after my family there. Let's look up Spielman. You can actually find pictures of cowboys. Spielman family cowboys and shit. That's right. That's how you got it right there. You can actually look up pictures of the Spielman family cowboys there. True story. If you're ever in that town, let me know. I got some cool family there. I got some cool family in Ekalaka. I got an uncle there that rebuilds old Volkswagen buses. You know what else he does? He was in the Navy, right? Got out of the Navy, retired. He started this guy's fucking crazy. He started a bunch of there used to not be any fracking in Montana, and like gas and oil wells were dead in Montana. And then there's a big boom, and these guys, these wildcatters, I think they're called. I'm not sure, but they would drive through town, fracking and drilling. And Ekalaka was a really quiet place, and all of a sudden, these like oil rig guys were like driving through town, and they put these people in like I think they're called man houses or something. It's like a mobile home with a bunch of men. And so this family member was retired, and he's smart as fuck. He's a nuclear engineer or some shit in the Navy. he fucking he started reading books. The Ekalaka didn't have internet till recently. Phone service didn't have it until 10 years ago, maybe 10 years ago. Smartphones, spotty unless you had internet. The internet was shitty there too. So he would read books on how to build homes without nails. So he started building these cabins before these oil guys came around, right? He started building cabins on his property. He's got fucking cows that run around the property. Like they like run like cat like horses. He lets them run free. True. This is all fucking true, right? So this is what he does. So before the oil guys get there, he's bored. And he was rebuilding Volkswagens. He's got like maybe 10 or 20 Volkswagens. They're mint condition. He's built them all. Like restored all of them. So he started building these little houses on his property. And he'd like build a house and build another one. They're small, like cabins. And he's like, well, first I learned how to build them how the Norwegians did it. Then I started to learn how to build them how the Germans did it. Then I started to learn how the Japanese did it. Then I started to learn how. And I'm like, wait a minute. So all these houses are different building methods? And he's like, fuck yeah. And so they were all parked around his property. And these old guys came by and he's like, you know what I'm going to do? I'm going to put these fucking things on a trailer bed and see if they'll buy them. And they did. These guys would be making like 20, 30K, right? And he would put them up on wheels, and these fucking guys would be going by. He's got a small ranch, hobby ranch, and he'd put them out in front, and these fucking guys would buy them from him. So he started like building all these fucking things. It was hilarious. And this guy made all this. Oh, he's got a sawmill on his property. He built like his own sawmill, and he fucking harvested his own wood, no nails. And built these fucking cabins. And he put his own glass in and shit like that. Corked all the fucking seams. It was fucking amazing. Unbelievable. He's still there in that town. There's one restaurant in that town, too. And guess what else? There's a bar that has a gay bar night there, too. For cowboys and shit. The fucking cowboys in Montana still use horses. Because they got trees. And the down trees, the cows hide them. You can't get through them with four-wheelers and shit. So cowboys in the southeastern part of Montana still use horses to this day. He did build Japanese-styled houses. Absolutely did. He did. Guy's a genius, man. He's a fucking genius. I wish I lived his life. Guy's had a baller life. What else do they have out in Ekalaka? They've got missile silos, and they've got like training. These ranches, the U.S. Air Force will put fake sand batteries, and they'll put fake missile silos there, and they do strafing runs with jets, like they're knocking out AA defenses and shit like that. Hey, what's up, super old man? How you doing, brother? I think we got 2 tomorrow. I think we do 2. I think we go higher. I'm with you on that. That's it. That's my Montana story. Montana's badass, guys. Black Hills are fucking beautiful. No development, like these big rolling black hills, right? The soil's got this dark color, super green. And they got these gorgeous, gorgeous ponderosa pines. They had a big fire there recently, but it's still, wherever they didn't have a fire, it's fucking beautiful. Do they really? I thought that they didn't if there weren't no trees. I thought there was still a lot of side by sides and shit being used if you don't have a lot of trees. I think it's only where there's trees. I didn't know you guys still use horses in Texas a lot. I got a friend that's a rancher, or not a rancher. He's a horseman from my oldest daughter learned how to ride English and Western from a guy from Texas. But I didn't know it was prevalent still. If there's no trees down. All right, I'll see you guys tomorrow at 9:30 in the morning. I apologize I couldn't be here all day long. I hope that I was here at the right moments for you. I hope that you had a good market brief last night, and I'll have a market brief for you tomorrow as well. Oh, in Texas they do? Right on. Do they do that because of the? Didn't Texas because of the? Can't speak for the North. All right, I'm not sure. You're making fun of people from the north. I always like my family is like. I used to think I knew what a ranch was, and then like people were like, I got a ranch. I'm like, how many acres you got? Like 100 acres. I'm like, you're a fucking hobby ranch. There ain't no goddamn ranch. You guys all have a wonderful afternoon. I'll see you guys tomorrow.